big fan of just the future. Absolutely, there's no question. I'm a big fan of the future, the vision that Elon has. They're two totally different people. There's no question about that. I don't know if I have like a concrete answer on which way is better. Definitely got to respect both people individually. Got to respect what they've done in their careers and their life. They just have tremendous vision, tremendous leadership capabilities, and it's good to be behind both of those leaders. I can't really say definitively which way is better. I would like to think that Elon is going to use his wealth in a positive way, positive for his shareholders, positive for society at large. But that of course is a future problem.
You talked about key man, and then some people discuss this sort of key man risk. In fact, one of the provisions or one of the hurdles that's required at some point down the line is to find a successor. Where do you think they are on that score?
Yeah, very early stages. I don't have a good answer there. We're so early in the transition of the economy and the society with this AI vision. So it is very early on, and I hope it's going to be somebody from the design side. That's where Tesla has always been successful. It's where a lot of these transformative, huge mega cap companies have found their leadership. So that's where I hope we find it.
And then the other thing that was voted on, I'm curious how you voted and how you think the board's going to react now. There seemed to be some mixed voting, if you will, on this idea that Tesla should be buying a stake in XAI. Sounds like it got a majority, but not by a lot.
Oh, I think I think that's a great part of the future. I do think that it is going to be fantastic for a company making physical versions of the AI to have a stake in a company like that. So absolutely, I think it makes a lot of sense for Tesla to have ownership there. So I am fully behind that, absolutely. And I think that's where Tesla needs to move into as their next vision.
So would you like them to buy all of XAI?
That's above my pay grade. I'll leave that behind. But I'd love to see them use the AI they have, put it into.
Hold on. No, it's not above your pay grade because you own shares. Someone asked you. I assume, did you vote in favor of them looking at buying a stake in AI, in XAI?
Yeah.
Okay, so if I change the question to, would you like them to buy all of XAI? What would you say?
You're an idiot, Sorkin.
I think it's enormous potential. They're humanoid robots. So yeah, I'm excited about the potential of physical AI. Absolutely.
Okay, Joe, appreciate you joining us on this Friday morning. Thanks so much.
Thanks for having me.
You bet.
Okay, it's 7 a.m. We're going to tell you what's going on. You're watching a Squawk Box.
Tell people what's going on?
We're going to tell people what's going on.
What is going on?
I was going to say, do you like to be exact? Because the term Army bases is incorrect. There's naval bases and Air Force bases. It's a post or a fort for Army.
You're going back now. You've gone back a half hour in the show.
No, I didn't. He was just on.
20 minutes.
He was just on, but do you want to be
We
exact?
have a new viewer who are joining us now. They don't know what you're talking about.
Well, we're talking about Army base is incorrect. I just want you to know that. It's really a fort or a post. And they're sensitive about that. People were writing in. That's what I'm talking about. It's like Camp Pendleton is a camp for Marines. There's Naval and Air Force bases, but Army posts are forts.
You can use folks.
Will you remember that?
I probably won't.
You're watching Squawk Box on CNBC. I'm Joe Kerner along with Andrew Ross Sorkin. Becky is off today. We have the Secretary of the Army on. I thought it was an interesting conversation about, you want to make all these weapons of destruction if you're not ever going to use them. It's hard to understand. Among today's top stories, U.S. airlines canceling flights after the FAA ordered reductions due to air traffic controller shortages caused by the government shutdown. More than 800 U.S. flights have now been canceled just for today. The FAA directed 40 airports, including Atlanta, Dallas, Los Angeles, New York, and Chicago, to cut air traffic 4% of the flights are affected today. The number is expected to rise to 10% by next Friday, and we'll have more on the cancellations at 8 a.m. Eastern in an exclusive interview with American Airlines CEO Robert Isom. This could also affect you, Sorkin. Did you see what other airport is being cut back? Peterborough. So private jet travel and corporate jet travel is also being affected. Someone was writing in that you could take
I
care
gotta go off the set for a sec. I gotta call Jeeves. I gotta make sure.
You could supposedly
No.
take care of
This
all.
is gonna be a problem. It's gonna mess up my flight for later. No, I'm joking.
No, I believe. Yeah, you had me going.
No, I'm going to JFK.
One person
Yeah.
was saying that they should just do private, and then the elitists that are controlling Washington will finally end the shutdown because they'll finally be affected.
Oh, they should just shut down all the private.
Instead of 10% at all, they could do it by just shutting down the private air.
Was that true?
That's what someone said. I don't know if it's true.
Oh, if that's true, I might have some time for that.
You would think it's okay to do that.
Yeah, because you're just trying to move the most amount of people
You're
around
right.
the country
You're right.
as possible
You're right.
during this period of time. Absolutely. Wouldn't you?
Yeah, but you know who would vote for ending the shutdown? Bernie Sanders. He's not going to fly a commercial. There's no way. Because we're not. Elizabeth Warren? No way.
You see one picture of them on a private plane, and anyway,
Oh no, Bernie flew on. No. Bernie likes private planes.
when they're campaigning. I agree. For some stocks to watch, let's talk to Dom Chu. He's got a look at what's going on this Friday morning. What do you say, Dom? You think we should shut down Teterboro for good?
I don't know if we should shut down Teterboro. First of all, as a matter of fact, I've never ever flown in or out of Teterboro before, so I can't really speak to whether or not it's integral to our air transportation system. I have flown in and out of Westchester before, but that's, completely different. Anyway, I'm going to tell you what's going on with these stock movers. We're going to start with shares of Peloton right now, higher by just about, maybe call it 6%. After reporting better than expected profits and revenues, the company's also raising its guidance for the holiday quarter. That's key, betting that its revamped equipment and new commercial units will drive growth. Those shares are still down almost 20% so far this year-to-date period. But Peloton, recalls and everything else included, still up about 6% right now. Then you got shares of Bank of America sliding by just about 1/3% right now, $53.12. It was being named a top pick by Morgan Stanley. The firm said they believe B of A has entered a new period of consistent and sustained operating leverage after 8 straight negative quarters. Its price target on the stock is $70 a share. That's a 30% implied upside from yesterday's closing price. So keep an eye on B of A shares down fractionally despite the upgrade-ish. And we'll check on shares of Penn Entertainment as well, higher by 0.5% after analysts at Stifel upgraded that gaming stock to a buy from hold. Also raised the target price to $21 from $19. That's an implied 43% upside from yesterday's close. Analysts say that the ESPN bet overhang is now finally removed, and they expect a ramp up in shares that are down about 25% or so this year. Now, for more on those and other top analyst calls of the day, just head over to cnbc.com/pro. As always, subscribers get full access to the detail and context around some of those big calls. Andrew, that's what's going on. I will send things back over to you guys.
Okay. Dom, very fancy. Westchester.
Not Teterboro, though. Not Teterboro. fancy.
Westchester, you can go in and out of Westchester on JetBlue, by the way. Just
Correct, on
you can.
commercial.
Yes.
On commercial, so
I go
that's
in
what
on
he's saying.
JetBlue to Florida all the time in Westchester.
He's
Fancy,
no, it's not. He's a man of the people.
Man of the people.
He's not copping to any private air.
I'm not
middle
a
C.
private guy.
Middle C.
I'm not like you guys. I'm just a schluck.
If one of your friends can have one, it doesn't mean you have to have one.
This is true. I do have some friends who have access to those things,
Let's
but I
just-
have not been invited on one of those yet. So.
That's sad. Coming up, Bitcoin hovering right around $100,000 this morning, down about 20% in a month. We're going to hear about the move and what it could be signaling, just for crypto, maybe for risk-on trades. Later, Dr. Mehmet Oz jumping into a scary situation yesterday when an individual collapsed during an Oval Office press conference. He joins us in just a bit to talk about the situation, weight loss drugs, and much more. Spark Box coming right back.
stablecoins are usurping part of the role that we thought Bitcoin would play. So our bullish forecast out there is 1.5 million by 2030. Given what's happening to stablecoins, which are serving emerging markets in a way that we thought Bitcoin would, I think we could take maybe $300,000 off of that bullish case just for stablecoins. So watch that space. Stablecoins are scaling here, I think, much faster than anyone would have expected.
With longtime bull, Bitcoin bull Kathy Wood on Squawk Box yesterday, changing her tune a bit. It says here, it's been a volatile week for crypto. Joining us now, Anthony Pompliano, founder and CEO of Professional Capital Management. I thought the whole exercise was just kind of silly. They have it's at 100,000. So you got a price target of 1.5 million. Okay, so that's 15 times. You're starting at 15 times, as if you can make a forecast like that with any degree of certainty or accuracy. And then your resolution on the whole idea is so fine because of what you're calculating. You can cut 300,000 off, and then it's only going up 12 times. The whole thing just seems so. I don't know why we really ran it there, but we are at 100,000. Do you think it goes below significantly, or this is enough? We've seen this movie before.
Yeah, look, I think that there's a reckoning that's happening across both crypto and Wall Street, which is the Wall Street folks are realizing that Bitcoin is real and it's going to be here to stay. At the same time, the crypto people are realizing that Wall Street plays a very different game. Wall Street actually does not want an asset that goes up, 100x and then drops 80% every 3 to 4 years. They want something that is much more predictable, much more stable. And
So why'd they get so involved with it? Because that's
because
they have.
Bitcoin is not as risky today as it used to be, right? If you were buying Bitcoin in 2012,
125. It was at 125 about a month ago.
Of course, but if you think about the risk you take, you should get paid for it. And so right now, Bitcoin is much less risky today than it was a decade ago. And so people are going to get a lower return. Now, what I think is really interesting is also that lower volatility in Bitcoin is allowing these large pools of capital to come in and start playing. And so in a weird way, the volatility coming down is opening up the total addressable market of Bitcoin. And what we have seen is less volatility to the upside, but it likely also means less volatility to the downside. Usually in bull markets, you see 4, 5, 6 different 30+% drawdowns. We haven't seen that during this bull market. And so you're just getting dampening of volatility over time, which frankly is boring to a lot of the early investors. And I think that's why you see a lot of those guys starting to sell.
If you don't take her price targets into account, the point she was making, I thought was interesting, and that is that maybe the notion that Bitcoin becomes more than just a store of value in digital gold, the idea that it eventually becomes something for cross-border transactions and instantaneous payment, that could be, she's basically saying stablecoin could take a lot of that market share.
I would go even further. I think it's already taking that, right? I think that's kind of her point.
So Bitcoin's never going to be anything other than digital gold?
For years, I think I've been coming on here and saying, hey, we know for sure that people want to use it as a store of value. Maybe one day it'll become a medium of exchange. The question of always like, are you going to buy your coffee with it? The hard part about using Bitcoin for transactions in that manner is if you think Bitcoin is going to appreciate, you don't want to spend an asset that is likely to appreciate in the future.
Guys that bought the pizza that now
Correct.
Bought
And so instead, what do? You spend something that you think is going to depreciate over time, which is the US dollar. And so the rise of stable coins, I think, is really just taking the exact same asset, it's the US dollar with the same monetary policy, you're putting it on new rails. And what we're finding is that the demand for dollars was way higher than we ever thought before. I think that's a good thing for the United States and for the U.S. dollar.
A lot of times gold, though, is non-correlated with risk assets. In fact, sometimes it's a place where you can park during times of turbulence in the stock market. You might like gold or treasuries or something like that. Bitcoin is still like trading like a NASDAQ stock, on steroids at times.
At times.
When does that change?
Well, here's what's interesting is at times it trades, right in line with NASDAQ. Other times it's not. I mean, earlier, a couple of weeks ago, NASDAQ was running and Bitcoin was going sideways, right? And so I think that what people are really trying to figure out is it correlated? Is it non-correlated? Is it inversely correlated? And part of it is that Bitcoin is still in this transition period. My friend Jordy Visser's got this great way of framing it. He says Bitcoin is having its IPO moment. And the whole idea is that you have the early holders of Bitcoin who are dispersing that Bitcoin into the market. And there has been billions and billions of dollars of sales of Bitcoin coming from those early holders. Yet the Bitcoin price is still at $100,000. And so there is this persistent bid coming from the traditional financial system saying, we want to buy the Bitcoin and we're happy to take it out of the hands of those early holders.
Do you think that the possibility of Bitcoin becoming basically worthless, has been taken off the table at this point? And if not, what would it mean to the financial system in this country, to the treasury market, to, I mean, you've got institutional buyers, you've got governments, you've got sovereigns, you've got people buying. If it went to zero, that would be that'd be a real issue, would it not?
Look, there's always some, person who's going to point out the kind of 0.001% chance of software
Quantum
bug
computing,
or quantum computing, whatever, right? But I think for most people, they see Bitcoin as not going away. It's here to stay, and I think that's why you see these large pools of capital starting.
People that think it's going to zero never short it.
Listen,
I would short it if I thought it was going to
the
zero.
market is the referee. If people have, for some reason, think it's going to zero,
That's a luxury belief. That's what I call it, because nothing can happen. You can believe it. Henry Blodgett still thinks it's going to zero. It's either going to 1 million or to zero. It's a luxury belief. You can have it, and no one's ever going to call you out on it, but you're never going to short it because you don't ever put any money down.
I do think that there is a theme that is happening right now that people have not yet wrapped their head around, which is this whole idea of crypto is going to be dead in a decade, right? People are not going to be talking about crypto. We're just going to talk about finance. Everything is now merging together. You have the crypto world and you've got the traditional finance
So
world.
crypto will be just so intertwined with the financial world that we won't even use the term?
We used to think about the internet, like internet finance, and then there's the finance industry.
Now it's
just finance. Same thing's going to happen with crypto, right? BlackRock as an example. BlackRock could be described as a crypto company. Their most profitable product is their Bitcoin product. They're talking about tokenization all the time. Like, they are trying to adopt these new technologies. All of the big asset managers, they're trying to figure out, how do we play here? Do we actually have funds that invest in this space? Do we tokenize our funds? What do we do? And so over the next decade or so, crypto as a concept is going to be dead, and you're just going to hear people talk about finance. And I think that's a good thing. That's the maturation of the industry.
How long did the people point out that, I guess, how long were tulip bulbs a thing? They were for years and years and years. I don't think 20 years, though, was it?
Look, I think that what people forget sometimes is how quickly everything's accelerating now. One of the things that we've done is we've launched a software product called Sylvia that allows somebody to come in and they can attach their bank account, their brokerage account, their crypto account. They can upload their real estate, their private investments, their credit cards, all this stuff. And the AI goes to work and starts to immediately begin helping them get their financial life in better order, right? It's kind of help you grow your investment portfolio. And the reason why that's important is because now all of a sudden software can replace financial advisors or your stockbrokers. And so we think that the same way that AI is attacking things in personal finance with a product like Sylvia, we also think that the same thing is happening. Bitcoin is attacking store of value. We think stablecoins are attacking medium of exchange. We think tokenization is going to attack the stock market. It is the digitization. And the framework I've been talking about since 2018, 2017 is we had an analog financial system. We then upgraded it to an electronic QSIP system. So you used to have a physical stock certificate, a physical deed in your home, etc. It all became electronic. Now we are going from the electronic QSIP to this digital world. It's the same assets, it's the same market structure. It is just now going to be in a different form factor, and that allows the software to get to it.
And use a lot more energy.
It does need a lot more energy.
All right, Anthony. Thank you. I wanted you to
Drill him?
participate, give him some of your concerns. Give him some of your, I do it for you.
You have no concerns.
I just had all kinds of concerns. I just said, what if it goes to zero? I said, how long was the tulip bulb?
So where was I supposed to go?
Well, I don't want to have to give all your concerns if I don't really share them. I feel like I need to do that for you.
You were doing it though. Coming up next, the FAA reducing flights at major airports by 10%. It could be a holiday travel nightmare. We're going to find out how you can protect your travel plans. And later, President Trump announcing deals with Novo Nordisk and Eli Lilly to slash weight loss prices. Dr. Oz, the administrator for the Centers of Medicare and Medicaid Services, is going to be joining us. We're going to talk to him about all of it when Squawk Box returns.
Time now for today's Aflac trivia question. What's the longest river located east of the Mississippi? The answer when Squawk Box returns. Now the answer to today's AFLAC trivia question. What's the longest river located east of the Mississippi? The answer? The Susquehanna River, which runs 444 miles from New York to the Chesapeake Bay in Maryland.
As the government shutdown continues, the FAA has ordered a 10% reduction of flights across 40 major U.S. airports. It's likely going to be a chaotic time for travelers. Senior personal finance correspondent Sharon Epperson here now with more on what you need to know to protect your travel plans.
Well, you know, Andrew, first we need to put this in perspective. The FAA estimates it handles more than 44,000 domestic flights every day. So reducing flights in these 40 airports from New York to Atlanta to Los Angeles means that eventually about 1,800 to 2,000 flights a day could be impacted. So far today, over 800 flights have been canceled. So many flyers are concerned about how their travel plans could be impacted. Here's what experts we spoke to said you should do right now. Download the airline's app, enable notifications so you can stay on top of cancellations and schedule changes. Plan for off-peak travel. If you haven't booked flights yet for the holidays, schedule to leave Thanksgiving Day and return on a weekday. Avoid weekends. And know your rights. If an airline cancels your flight, it has to give you a refund, even if you bought a non-refundable ticket or basic economy ticket. And even though the airline may offer you a travel credit, you are entitled to get your money back in cash or the original form of payment. Now, if you decide you don't want to go on that flight right now, some major airlines have also said they'll offer refunds or waive cancellation fees for customers who want to make changes or cancel their travel, even if their flights aren't impacted. But it is important to check this website of the airline for the most up-to-date information. Now, traditional travel insurance may not necessarily cover costs you incur related to this disruption unless you have cancel for any reason or interruption for any reason benefits. So you need to read the fine print on the policy very carefully. And as one expert told me, it pays to pack your patience. Airport workers, they're so stressed right now. So are a lot of travelers. And a little bit of kindness can make it a little easier for everybody. For more strategies to help relieve other financial stressors you may have, sign up for my Money 101 newsletter or at the QR code right there or at cbc.com/money101.
Okay, so one of the questions I think a lot of travelers have right now is if I have travel insurance, for example, will that actually cover things like meals and hotels if the flight ends up being canceled or delayed due to flight reductions?
Now, so if you do have travel insurance, the thing to recognize is that every policy has different issues with it, but you want to make sure that they are calling this a common carrier disruption. Usually that's for a mechanical issue, but if that is what the airline is saying in this case, then the travel insurance may apply. But if it does not say that, then it really is up to the discretion of the carrier. And so the jury's still out there on what travel insurance will cover. If you do have the cancel for any reason or disruption or interruption for any reason, benefit, that upgrade on your policy, you will have more flexibility.
Okay, what happens if I have a fancy credit card, like a Platinum Amex or one of these other cards? Does that help me?
Well, it helps you in this way for sure.
Okay.
You get access to the lounge while you're stranded.
While you're waiting. Okay.
While you're waiting.
What about
So
anything
that's
else?
be great. You may again, you have to check the travel insurance. Usually it's better to just deal with the airline
Right.
and figure out to get some relief that way, because the travel insurance company is usually gonna ask you if you've done that anyway. But you may be able to do it, depends on your card.
Sharon Epperson, thank you.
Sure.
Appreciate it.
All right, coming up, check on the markets this morning, and then Dr. Mehmet Oz on the president's deal to lower weight loss drug prices, the government shutdown, and much more. We're coming right back. Welcome back to Squawk Box. There you can see the futures have turned negative now, down.
They've been negative all morning.
More negative.
Worse and worse and
More
worse.
negative. Well, down 100 points, Andrew.
I know, I'm just saying we were down, what was it, like
Down,
5 points, 10
we're
points.
down 0.1%, we're now down 0.3%.
Just give me some context. Now you're giving some context.
Now I'm giving some
Both of us with the context.
What was contextual was the NASDAQ yesterday. It was 400 or something. That was that yesterday. I think it resumed what has been something that, if you're worried about an AI bubble, it resumed yesterday, that concern, 445 points. Not great today, down another 100, but we shall see.
Meantime, Dr. Oz coming up right here on the program. We also jumped into a scary situation yesterday when a White House guest collapsed during an Oval Office press conference, and he's going to be with us live next. And revolutionizing the restaurant business, Wonder founder and CEO Mark Lowry is going to join us to talk about his groundbreaking vision for the kitchen. Squawk Box, I'm right back.
White House announcing a deal with Eli Lilly and Novo Nordisk to slash prices of obesity drugs. Joining us now with the details, Dr. Mehmet Oz, the administrator for the Centers for Medicare and Medicaid Services. And we've seen a couple of instances of this, Secretary, and thank you for joining us. We appreciate you. I guess I should call you Mr. Administrator, not Mr. Secretary, but we appreciate you. That sounds weird, doesn't it? I want to call you Dr. Oz. Everybody knows that. Dr. Oz, I want to talk to you about really what Democrats want to open the government. But let's talk about this first. Is this a template for what we can do with a lot of different overpriced pharmaceuticals, if they are overpriced?
Let's set the stage, Joe. I know you know this, but for everyone who doesn't appreciate how much of a ripoff we've been living through with global freeloading, the president adamantly has been saying that he will no longer tolerate the American people paying 3 times more for the exact same drugs made in the same factories, put in the same bottles, the same boxes, as folks pay in Europe. And so this most favored nation drug pricing strategy has resulted initially with a leading U.S. company, Pfizer, then a leading European company, AstraZeneca, then we did all the fertility drugs, and today, maybe the biggest of all, because it's the single largest category of drug spend in America, these GLP-1 weight loss drugs. And the reason yesterday that we embarked on this voyage of keep trying to share with America why this is such a critical opportunity is because if you're sitting in my seat, if you're administering Medicare and Medicaid and the exchanges, you need to figure out how to bend that cost curve down because they're increasing at 7, 8, 9%. And that's 3, 4, 5% faster than the economy is growing. So we've got to find a way of actually bringing the real costs down, not just throwing money at it to reduce what consumers pay, but actually bringing down total cost of care. And if you're going to drop drug prices meaningfully, you'll do that. But in particular in this category, because of all the things we can do, Joe, reducing obesity in America not only buys us a lot of health, but it also reduces the healthcare spend. We estimate that obesity by itself probably explains a quarter of the total healthcare costs. And so by using these medications, which on average can drop your weight 15, 20% over the course of a year. And again, obesity is not an absence of GLP-1s. You have to use diet, exercise, all the MAHA elements that Secretary Kennedy speaks of are vital to this process. But part of making life easier, making yourself healthier, and making it easy to be healthy, which is what MAHA is really about, is using medications if they're effective. So most Americans would consider this if they were overweight, and a third of us are. Unfortunately, most Americans can't afford these drugs. They're $1,200, $1,300 a month. So in this deal, we are reducing the cost on average to about $250 a month. And if you're on Medicare, which I administer, you're going to pay $50 copay, and government will pick up the rest, and we can afford that because at that price point, within 2 years, it'll be cost neutral. It'll save us so much by reducing downstream problems of obesity like hypertension and problems with the diabetes and even bigger problems like renal failure, strokes, heart attacks, dementia, that we'll actually start saving money. And if you're on Medicaid, it'll be free to you, which is still okay because governors have a moral hazard right now. Obesity is rampant in underserved, vulnerable populations, but they're the ones who benefit the most as well and reduce costs when you do that. So we'll actually help state budgets by driving down these prices.
The narrative of the pharmaceutical companies, doctor, was that the way Europe offered these drugs at much lower prices was basically price controls. And the innovation is done here in this country, and in this country we allow companies that spend a lot of money up front on research and development of these great drugs, we allow them to recoup all that investment. Whereas if it was in Europe and you don't allow them to price the drugs to where you can actually benefit from all your research and development, there's not as much innovation over there. And if we import those price controls here, the argument is from the pharmaceutical industry that they're not going to be able to afford innovation and testing on new drugs. Is that totally false, or is the truth somewhere in the middle?
I think that specific narrative is false, and my evidence for that is all these drug companies, Eli Lilly and Novo Nordisk, are well-run companies. Their CEOs were in the Oval Office. They came there willingly. They were not hostages. They've all signed these deals. Pfizer did too, AstraZeneca as well. The argument that we're making and they're agreeing with is that it's inherently unfair for us to pay 3 times more. We still pay most of the money for development. But I hear the concern that we need to be able to innovate. And so if you get Europeans to pay a bit more, we can pay a bit less. Also, some of the areas we're giving opportunities to companies include giving them access to larger populations by making these drugs more affordable. But Joe, here's the real conversation. You sit in a room with these executives, you look them in the eye and say, you went into this business because at some point you really cared about people. And as an American, and in the case of Eli Lilly's CEO, he is, that you really want to have your legacy about making an innovative medication class that is changing lives accessible to everybody. It's the most American thing we can do. It's about fairness. And the president has adamantly been pushing this narrative because most Americans get that story. I'd also give you a better metaphor than what you were saying. I think it's more like NATO. We have external threats. Everyone's got to chip in. How much they chip in is the question. Yes, maybe we'll pay a bit more in some instances to get the innovation there, but we all have to defend ourselves. NATO countries are chipping in more. We're asking the same thing right now for an internal threat, disease, illness, cancer. And I'll share one big secret with you. If you have an advanced cancer in America, your survival numbers are better than if you're in Europe because you actually get access to all these drugs. There are no price controls here. The market moves this. We're making it easier for companies to say yes. They're bringing their prices in line with what other countries are paying. It's fairer for America, but it's also more sustainable for these pharmaceutical companies, and that's why, in general, their stock prices are staying strong. Investors realize they want stability in the markets, and they don't want government coming down hard. These are negotiated settlements, and I've got news for you. There's a dozen more companies waiting in line to come down the pike to have their prices align with what the rest of the world is paying.
Thank you, Doctor, for that. You're going to have to fix the healthcare system in the United States, or make the Affordable Care Act actually affordable instead of the unaffordable Care Act. Let's talk about this government shutdown. So we know it's a clean CR. It's the same funding that the Biden administration was doing. The government should have stayed open, but the Democrats, maybe they have a point, that people need to, obviously, people that are going to have their subsidies double or triple, it's something that resonates with people, and that's why you can't even find, you would think if a party closes down the government to get something that they want through extortion, you would think that the Republicans would have the upper hand. That's not what it is, because the healthcare system is so broken, and I guess the rap is that President Trump talks about alternatives, Republicans talk about fixing the healthcare system, but right now, Obamacare is all we have, and it's important to the people that have it.
Well, Obamacare is a program I manage, and I'm going to take care of it. And just to put it in context, the average person in original Obamacare, which is folks making between 1 and 4 times the poverty level, their average premium is going to be $50 this year. We know that because the numbers are already out there. Healthcare.gov is already, the marketplace is open. People are signing up. So its average premium that you have to pay out of pocket is $50. And that's $13 more than this year. So in that original population, there doesn't seem to be a huge issue, and we're not hearing huge complaints. The added benefit that occurred during COVID, again, we're not talking about the actual subsidies to the ACA, to the exchanges. They're already there. They didn't change. There were additional subsidies added that took the support from being 80% of your cost of care to 90% plus. That's the part that's being disputed. And that really hits hard at what's called the cliff, when you get above 400% of the poverty level. And there's a little bit of a hazard here, because if you look at all the examples that you see in the newspapers, it's usually a 62-year-old who has a $150,000 pension. That's more than 4 times poverty level. And so they retired early because they could crunch on the Affordable Care Act insurance program subsidized by the government. And now they can't retire early. They've got to wait till Medicare, the other program I administer, for that reason. So I completely feel that pain. And that's really the area that most of this debate is about. But you've hit a very important issue. The real concern is the total overall cost of care in medicine. It's just increasing too much. And the real salvation to this is not going to be throwing more money at premium dollars or enhanced premium dollars or COVID era enhanced premium dollars. I mean, after a while, it becomes hard to keep up with how many subsidies there are. We have to actually reduce the underlying cost of care. That's why in the One Big Beautiful Bill, we did offer some solutions. There was something called a CSR that would have naturally brought down premiums in the exchanges. It was rejected by the Democrats. They didn't want an answer. And that's why I think this is being used as a political tool. The things we need to do to truly reduce cost of care, the Democratic Party doesn't seem to enhance. They just want government to pay more for it. It's not a long-term sustainable solution. And just like we did with the most favored nation drug pricing with pharmaceutical companies, you've got to come to the table with solutions everyone rationally thinks can make sense long-term.
But
what we did with One Big Beautiful Bill was bend the curve for Medicaid. We've got to do the same thing with the ACA.
But Dr. Rose, I think the big question is ultimately how to do that and what that really looks like. And not, I mean, we can take the government shutdown piece of this out of the situation, but if you were king for the day, and I know President Trump has been talking since he was president last time about trying to fix things meaningfully, do you think you could ultimately reduce costs and provide better service? Is that even possible, or do you think it's just a fundamental change in expectations that has to take place?
So it is absolutely possible to reduce costs. I'll give you two concrete examples. Over 10% of the $1.75 trillion that I administer is fraud, waste, and abuse. That we can deal with, and we're getting aggressive. And just this week, we put out a rule to take out $23 billion of what we believe in often was not well spent money with these skin substitutes that are no longer going to be sold the way they were, where you actually literally pay doctors an extra 6% if they pay the most expensive version of the product, not the products that actually are selling in Europe for fractions of the price. And the second big issue, which will probably take the healthcare costs down at least another 10%, is by truly empowering beneficiaries with information. Every other industry you talk about, as for example AI you were mentioning earlier, all these industries benefit, whether you're Uber Eats or Uber itself or streaming videos, they benefit from AI supporting the system. Banks work better that way. We haven't brought those tools into medicine in a meaningful fashion. We have a digital transformation that we are heavily embarked on that will allow us to bring those same efficiencies into the healthcare system. And by empowering patients at the time of care with better information about what they ought to do, by nudging them with insights that can help them with chronic illnesses, by giving doctors incentives to use these tools and giving them also the better ability to manage their care as medicine rapidly advances with better tools that cost less, we reduce costs. And the most important message I have is bad care is expensive. You pay someone to do a bad job, you pay someone to fix that bad job, and you pay for the complications. So the most important thing we can do in healthcare to reduce costs is improve the quality, and this president is committed to this. The Secretary Kennedy will not take no for an answer. That's what MAHA is really about, and I'm passionate we'll get to the finish line.
Dr. Oz, just to bring the conversation full circle since we started at GLP-1s, I'm just curious about one component part of this, which is how quickly do you think that the GLP-1 drugs are actually going to improve? I mean, one of the things that a lot of people worry about is muscle loss and all of the sort of component part issues in that. And I wonder whether, I mean, as you think about trade-offs and also what you think we're going to learn about these drugs and how they work over time.
The field's advancing rapidly. I learned yesterday, I'll break news with you here because I had the CEOs cornered in the Oval Office. We're going to have pill versions of these on the market by March. Martin McCary, who runs the FDA, is going to fast track these approvals. And so we're already looking at a new generation of solutions. We estimate that the American people will lose about 135 million pounds over the next year with these solutions. And we are also optimistic that within 2 years they'll pay for themselves, as I mentioned, just because they can reduce some of the healthcare expenses, but they're also going to be made in ways that reduce the muscle loss, some of the side effects, the anorexia. But you know, Aaron, there's other benefits as well. There's a reduction in addictive behavior. I mean, there's less online shopping, so there's other opportunities for these family of medications that go far beyond just overeating.
Right. And then finally, Doctor, you got put into service yesterday inside the Oval Office. Tell us what happened, because we were all watching this video that's gone viral.
Well, standing for hours at a time, if you don't know how to do it the right way, it can be difficult. This wonderful gentleman, I noticed his knees were beginning to buckle, and you don't have to be a doctor to know this. The most important thing if someone's about to faint is catch them. You know, and make sure, because a big injury happens when they bang their head on the ground. The cause of the fainting is almost always manageable. So we got him down, we put a little chocolate in his mouth, we've got an IV in, and he got excellent medical care. And I connected with him last night. He went home to his wonderful wife. But I got to share just a little behind the scenes here. The president, God bless him, called the wife from the Oval Office, giving her updates on how her husband was doing. When you actually know the man as a human being, not as a political actor, you have to love him. And I appreciate that he did that.
And Secretary HHS Kennedy was heading off to get a warm towel, or initially I think to get a chair because the guy's knees were buckling. The haters on the left, I mean, the conspiracy theories, I'm not even sure what they're implying. He was running for, why are they asking why RFK Jr. was going out of the picture? What else would it be? He was afraid it was contagious or something? I don't even know where they get these ideas.
Joe, he literally went to get a towel because he'd been in
I know what he was doing. I fully know what he was doing, but it's just it's just beyond belief. Anyway, Dr. Oz, I appreciate your time. Thank you.
God bless you.
Okay, coming up, a deal in the restaurant industry that could revolutionize the food business, but There are a lot of questions surrounding AI and robots in the kitchen. We're going to get all the answers from Wonder CEO Mark Lori. Squawk Box will be right back after this.
Coming up, AI and robots in restaurants. Wonder founder and CEO Mark Lori on his efforts to change the way that we are served. Then American Airlines CEO Robert Isom will join us as airlines around the country are forced to cut flights because of the shutdown. Squawk Box, be right back.
Welcome back to Squawk Box. Shares of Sweetgreen are down big this morning after the salad company cut guidance in yesterday's earnings release. Sweetgreen also reported a drop in revenue from the same quarter a year ago. That stock is down 84% this year. But that's not the story we're going to talk about this morning. The story we're going to talk about this morning is this: food haul and delivery company Wonder acquiring Spice from Sweetgreen. It's the business unit that developed and launched robotic kitchen technology. Joining us right now on the set, first on CNBC, is Wonder founder and CEO Mark Blurry. Good morning.
Good morning.
So tell us about what's going on. I don't know how many people know what Spicy Then is. So
Yeah, Spice has been at this. They started with automated walks up in Boston. It's a team of MIT trained engineers, and they've been working on this technology for the last 10 years.
This is robotic kitchen.
Robotic bowl technology. So for Sweetgreen, they're able to make salads automatically without any human intervention. Perfectly. Looks beautiful too without a machine.
And so this deal is going to do what for you? I mean, how's it going to transform this whole situation?
Yeah, first we love the technology that's already been built to automate all of the sort of bowl making, but more importantly, it's really about the steam and the robotic technology that they built, applying that to all the restaurant concepts that we have inside Wonder. We have 30 restaurants inside one small kitchen. This is going to unlock the ability to put literally hundreds of restaurants and thousands of meals out of a small kitchen.
So tell us just about what's the growth plan at this point for Wonder?
So we have 80 locations open today. We'll be 200 at the end of next year and 400 at the end of 2027.
Okay, when you think about this technology,
Yeah.
how many people, what does the labor story look like in one of your kitchens, in one of these shops?
Well, right now it's already pretty lean. Like at peak, we're maybe max 15 people.
15 people?
Yeah, we could run off-peak hours, so we're going to be open until 2 a.m. in the suburbs and 5 a.m. in New York City come Q1. And we can operate that with just 3 people, all 30 restaurants. So that's really, we've already invested a lot in the technology platform that we built. But this gives us the ability to add literally hundreds of restaurants out of the same footprint, create thousands of meals. Like one example is the robotic technology can be used to build a sauce machine that's capable of making 90% of all sauces in the world on demand. So think about what that could unlock in terms of the possibilities, in terms of the meals that can be pumped out of it.
So tell us just a little bit more about sort of where this all heads then as a result. I mean, sure, what are the other kinds of restaurants therefore? I mean, you're talking about all living under sort of a wonderland, or just you're talking about sort of
anything.
A massive scale.
Even potentially people creating their own restaurants on top of the platform. So think about Wonder as a technology platform with robotics and AI and the ability to, precisely cook thousands of different meals. Think about how many different restaurant combinations you could make with that capability.
So what are ultimately, do you think you could actually even scale down the number of people?
I mean, it's probably doing more sales with the same people. So these same 15 people now, you're talking 5 or 6 million in revenue. We think that location could go to 20 million in revenue. And this is 2,100 square feet. This is the size of a Chipotle.
Burying the lead. Do you have to tip these robots?
Oh, do you have to tip the robots? That's a good question.
No, it's not a good question, but you don't have to. I mean, this is big. This is major, is it not?
Yeah, how do you feel about tipping right now? We've been talking about tipping.
But you
just
don't
on the
have to tip
broadcast.
robots for what, oil or something, or?
I don't know. You probably don't have to tip directly. Yeah, you don't have to. What's your tipping policy?
No, the charge to the couriers.
Right.
That's what the tips are going.
It's all going to delivery now.
Delivery.
So you're still gonna.
I'm just fascinated about how many people do you have working on the tech side of this?
The Spice team is 38 people strong.
Okay.
We have hundreds of engineers at Wonder that have been working on the tech that we have today. But this unlocks the ability to take it much further than we
What
could.
can't the robots do now, but you think they will be able to do in the future?
I mean, in the future, like I said, this sauce machine is something we're very interested in. The ability to make, batters for frying on demand, so you can have your own recipe for the precise batter you want, and in real time would make that batter, and then you can fry the chicken with that batter in real time automatically.
We have GLPs to go along with these GLP-1s.
Automated woks, so that you could, create any stir fry you want on demand.
What's going on right now with food costs for you?
Food costs?
Food costs. I mean, we're all sort of.
Yeah, food costs, they've been going up for some time now, sort of stabilized a bit, but.
Do you think, do you feel like any better about it than the sort of the inflation we were seeing?
Well, I think we're a little bit more insulated now, even especially with this acquisition, because we're able to, make great food a lot more accessible in terms of price points. So we're able to bring people higher quality food at a much lower price.
So that's what I was gonna ask, what pricing wise, what's an average meal?
So an average meal is a platform. So you have everything from stuff that's under $10 all the way to a Bobby filet mignon steak that is $35, $40, right? So.
And are you seeing, sometimes we hear from some CEOs who say it's a tale of two cities. We have sort of this upper end luxury consumer that is just, as elastic as can be, pricing wise.
Yeah.
And that there's this other group that has become even more and more price conscious. Is that what you're seeing? But then there's other people who say they see nothing.
Yeah, we definitely see that in the market, but us at Wonder, because we have price points that range from, great price to value all the way up to premium, it's well diversified across. And I think this robotic acquisition is gonna allow us to bring down the prices of great food, so make it even more accessible and close the gap between fast casual and fast food. That's really the big unlock here.
Who else has this technology or something even like it? Meaning, over time, your ability to license this out to others and how this all works.
Yeah, we haven't seen, this is the best technology in market that we've seen, the only truly commercialized robotic machine.
Right.
So we're very excited about that.
Is there any party that says that Elon Musk is going to have his Optimus robot and that they're just going to take over the kitchens everywhere and that they're going to outdo whatever's already on tap here?
Yeah, so this is not taking existing equipment and using robots to replace humans. This is about creating new equipment to do new things that humans wouldn't be able to even do. Like I said, to make thousands of sauces on demand.
Right.
That's not like a human thing, right? So that's why we're not doing this for an automation play. We're not trying to just take existing systems and reduce human labor. We're trying to augment humans and create things that weren't possible before.
It's very cool.
I saw the negative comps, but
I love this.
I love the stock. I love the stock here. I had great discussions with Jonathan, the CEO. I think he's a visionary founder, and I think we look forward to a long-term partnership. I think what the move he made, selling it, was smart for both of us. We're going to continue to supply machines to Sweet Green. So I really enjoyed getting to know him, and I think he's a great leader.
Wanted me to say the stock hasn't been sweet or green.
Who wanted you to say that?
Someone in my ear. One of the
Clever producers.
one of our handlers.
One of our handlers.
It gives us all. It actually gives me almost everything I say is from them.
Really?
Most of the
One, thank you for coming in.
I need that.
Congratulations. It's really fascinating.
I need that.
Have you? I hope you've been to Wonder. Have you?
No.
Why not? What's wrong with you?
No, I'm Domino's.
Come on, he'll get you hooked
Farrow
up.
Pizza from Brooklyn on Wonder.
What is it?
The Farrow Pizza
Is that
from
like
Brooklyn.
as good as Famous Ray's or something? What's
It's a nice,
Maybe better.
get the square, the Farrow,
Yeah.
or
What
straight
else?
brick pizza.
Tacos?
Like pizza, tacos. We've got tacos. Yeah,
Like truck tacos, how about?
yeah, pistachio tacos. Yeah. You like barbecue brisket?
I do like
That's
that.
very, very good.
Okay, we can talk.
Okay.
We can
We'll
talk.
take this offline. In the meantime, CNBC's Phil LeBeau joins us. He's got American Airlines' CEO, Robert Eisen, with him. Phil.
Thank you, Andrew. Robert, we are here in the Nerve Center, in the Operations Center. This is where you manage all of your flights around the world, but here in the United States, the question is, with the government shutdown and with fewer flights flying, how did you make the decision? You've got, 221 flights that were scheduled for today that you've now canceled. How did you make that decision in terms of what flights to get rid of?
Phil, I'll just start with this. This is frustrating. We don't need to be in this position. We got to get the government back open so we don't have to cancel flights. But what we've done today is we tried to minimize the impact on all of our customers. It's only 220 flights out of 6,200 flights. And we've done it in a way that really impacts our smaller aircraft. And it's more taking frequencies like Miami to Orlando from 9 flights to 8 flights, or DFW to Corpus Christi from 7 flights to 6 flights. It's that kind of stuff right now. Now, this level of cancellation is going to grow over time. And that's something that is going to be problematic.
And we'll talk about that in a bit. But I want to ask about these flights that were canceled today. That might be maybe 10,000 people who have to redo their travel schedule. Any issues rebooking them? Because there's not a lot of slack in the system.
There's not a lot of slack in the system, but right now, our customers are going to be fine. we're making sure that they know well in advance of getting to the airport if their travel plans have been disrupted. And it's a very small portion of the total 650,000 customers that we have in a given day. We're going to make sure that our customers are taken care of no matter what. And then, Phil, I just want to say safety is a priority. So I commend all of our air traffic controllers, TSA agents. At the end of the day, Administrator Bedford's doing the right thing by trying to get in front of this problem.
But how worried are you? Look, we've got good weather around the country right now. God forbid we have a bad storm roll through the southeast or the northeast or anywhere. How frustrating will it be to try to handle that and the cancellations that go with that?
Let's get the government back open. That's the first key. We don't need to have this problem right now, but we're going to make sure that safety is priority, and we will handle storms and other things. But you're right. As this problem grows and as cancellations grows, there's not a lot of slack in the system, and managing the airline, managing the industry becomes exponentially harder as you increase the level of cancellations.
Talk about that, because this is not simply, you're not doing this flight from here to there.
Right.
Aircraft have to be parked, crews have to be rerouted. Is that the biggest challenge at this point, separate from the passengers?
It's an incredibly complex environment that we deal in. And so whether it's planes that need to be maintained, our pilots that have to maintain currency, our crews, right, when you cancel a flight today, right, they don't just simply pick up where they left off. They have to be totally rearranged. So all of this it just creates complexity that makes it harder and harder. And our customers shouldn't be dealing with this. We're here in our integrated operations center. We shouldn't be dealing with all the complexity, the rework that's going on. This is something where we've got to get the government back open.
We are 20 days from Thanksgiving.
Right.
A lot of people have already made their plans, but they're also going to make them beyond Thanksgiving for the holidays. Are you starting to notice an impact on bookings?
Well, of course there's an impact. Nobody wants to put up with hassle. And again, we're doing everything we can to make sure our customers know. But as we get into the busiest travel a part of the year, this is something that we just can't let happen. And Phil, on that, I'm confident that everybody in the government understands how important aviation is to the overall economy. 1 in every 11 jobs is somehow related to travel and tourism, hospitality. We can't bring a bigger, wider group into this situation that we find ourselves in today.
And just to reiterate this point at the beginning, it's 3% of the flights for the system overall today, 4% to the top 40 markets, but it goes up from here. How tricky does that become to manage as it goes up close to 10% cancellations? And if we're there by the end of next week, what kind of stress does that put on the industry overall?
Well, we're not canceling any service to any smaller markets. We're not, we're making sure that there's presence that's maintained. Today I mentioned that, we can handle this 4% by reducing frequencies, but next it becomes a lot harder. You're going to be really digging into, some more heavily traveled areas. And on that, as you get to 10%, let's face it, 10% is a big number.
Robert Isom, here in the Operations Center at American Airlines. Guys, interesting being down here. I mean, they're handling everything, but you can tell, and you can tell when you fly, people are frustrated, and they're at the heart of it right here. Guys, we'll send it back to you.
Hey, Phil, while you have him there, I know I can't talk to him, but I was just checking some of his comments and the appearance at the White House. There's a perception that the airline industry has sided with the White House and Republicans on this for asking for a clean CR. That's at least the perception. I know Scott Kirby made similar comments, and
I'll ask him this. This is a question from Joe. Joe says there is a perception that the airline CEOs and the industry is siding with the White House in terms of a clean CR to get the government reopened. Do you have a position here in terms of one party over the other?
Absolutely not. We're not political in any of this. We're for getting the government back open, and if a clean CR is the way to do that, absolutely. But whether you're a Democrat or a Republican, you need to understand the impact that we're having on the traveling public, on all of our team members, and ultimately on the health of the industry in the long run.
All right, there you go, Joe.
all right. I can dance around that because if you ask, it'll say yes. Mr. Isom specifically said the Democrats need to vote for the clean CR. But coming up, Moelis and Company, Vice Chair and former House Majority Leader Eric Cantor will join us. The futures this morning. Take a quick look. You can see we are in the red and over 100 points now in the NASDAQ after 450 points yesterday. Squawk Box we
Welcome back to Squawk Box. Today marks the 38th day of the government shutdown. It is the longest in U.S. history, and our next guest has firsthand insight into resolving gridlock on Capitol Hill. Joining us right now is Eric Cantor, Vice Chairman at Moelis and Company, served as House Majority Leader from Virginia's 7th District, of course. You have lived through this, nothing as long as this, though. I mean, you got close at one point, but this seems different in terms of what could actually be a tipping point or inflection point to actually get both sides together at this point.
Look, Andrew, this is it's really pretty stunning to me to see how the Democrats are digging in now, because traditionally when you got a shutdown, the party that's seeking a policy change and trying to use shutting government down as a leverage is the one who gets blamed and ends up losing. And then there's sort of a path to try and figure out how do you save face to reopen. And the Democrats after Tuesday have just now become emboldened.
Right. Because it's been Republicans in the past and they didn't have the media on their side to totally skew the impression of what's going on.
It is pretty amazing to the point now where even John Thune said, I think yesterday or today, that we're now not going to go and follow through with some of the firings and layoffs that have occurred during the shutdown. And I mean, that means that my side is starting to negotiate with the Democrats, which again, I'm pretty amazed at that.
I mean, Leader Jeffries, I watched him yesterday, and again he calls it, he says the president and the Republicans shut down the government. And no one in the media, no one in the media says anything about it. There was a clean CR. Maybe what the Democrats want is very important and but they are demanding something that has nothing to do with keeping the government open, to open the government.
And now, look at the polling, and look what happened
Well, the
on
polling
Tuesday.
was underwater for Republicans.
Look what happened on Tuesday.
Right.
I mean, let's not just, this
Well, how
is-
do you explain that to me?
Well, right, this is the only thing,
And Trump hate.
Right, well, look, right, but at some point it's gonna get bad enough. Look, you had the CEO of American Airlines on just now. You can tell, it's gonna start to boil. I've always said when it started that it may be Thanksgiving until this thing
I thought it would end right away because I didn't.
And you think Thanksgiving just because of the travel issues?
I think the pain factor is going to start to elevate, and now finally they're focused on, the media is focused on this. So we'll see. But
What do you think? Did you hear the idea that Joe and I were discussing earlier about airplanes?
no, I didn't hear that.
You want to explain?
Yeah, if we want to shut down just the if you
Teterboro?
just shut down the private, then all the elitists in Washington will really get serious
I did
about
hear
it because
that.
they'd have to fly commercial.
I did hear that, but I do think you're
Then they
right.
shut-
And you said, and Bernie and
Bernie would show
Warren,
up.
they love the
There,
private.
we only need 5 more, and so you got Bernie and Liz.
I know you're saying.
But okay, if it's not travel, is there something else? And by the way, who do you think is going to get blamed? Or do you think nobody gets blamed? That's the thing I don't understand about all this.
The rapidity of the news cycle is such, you don't even remember what happened last month. That's part of what all this is about too. So I'm not sure it's even going to be a factor when it comes to a year from now in the midterms. But
Do you think in the midterms that if the Democrats are able to hold out and get something, they're going to be able to point back to this, or if they don't get anything, they're going to say we tried? How is it?
Well, no, look, all this started because their base was furious that it seemed that they were feckless and unable to stand up to the president. That's why this started. They say it's about health care, and now that's what the media is now pushing. But here's the amazing thing. Think about every incident in the past. The Democrats are about SNAP. They're about all the monies that are so imperative, you cannot shut this government down, and they are now turning their back and saying, fine, we'll just let it go and have people without these benefits.
They're immediately saying Trump is the one that's, and then you got federal judges that, play into that and say you got to pay him as if you can't. You can theoretically, but
What is your political analysis of what took place on Tuesday as you look at the Democratic Party?
Listen,
You've got, Virginia, you got New Jersey, you got New York, you got California.
First of all, let's say off-year midterm elections always historically go against incumbent parties. That's number one. So it wasn't as if it was a surprise. I think the bottom line is we looked at what happened in Virginia. The voters, the low propensity voters that vote for Donald Trump did not turn out. I'm not saying the MAGA base didn't, but I'm talking about the low propensity voters that get up off their sofa and they come in and they vote, and traditionally or not, they didn't show up. So I think going forward, my party's got to figure out, how do you start to identify voters that can turn out, that come to these elections? Otherwise, we've got to start to grapple with the fact that, Donald Trump is one of one. He's able to go and pull out some voters that have not necessarily been involved.
And what do you think about what's happening in the Democratic Party? We make a lot here in New York of Mandami and this, move towards socialism. I'm not sure whether we were talking about yesterday, whether we're overdoing it. By the way, becoming a New York City mayor, we often sort of overplay where they go. They do not actually become the president of the United States. In fact, I actually don't think you can find one example.
I don't think
I'm not even sure you can find an example of one becoming a senator.
for him to become one because he's too young.
Well, listen, I think New York City is a unique place. This cannot be imposed on the rest of the country. That's number one. Number two, the progressive base, they are throughout the country, but they are much less of a percentage, and this is a very deep blue place here. So, you look at Spanberger and Sherrill, they had a much different presentation to the voters. They came off and they tried to portray their centrist.
But do you think that the Democratic Party looks at this and says, okay, we got to go this way or we got to go that way?
Oh, they're going to have, this is going to be the fight within the primaries.
But you've lived through this in your own party.
100%, and there will be people that will be nominated that shouldn't really win a general election, and we'll see. I don't think Tuesday was a wave election. Even if you look in Virginia, what happened, these were seats that Trump either won by 5 or less, 5 points, or Kamala won by 5 points or less. These are the swing seats. We happen to be a more swingy state. So the Democratic Party will have this internal fight with these progressives that came out in force here throughout the country. But listen, I think in the end, when you look at 2028 for them, you know, their party is you know, I think the most important voting bloc is the African American vote in the Democratic Party. And I think, not that you can apply a one-size-fits-all to any voting bloc, but traditionally they've been much more conservative on social issues and the rest to buy into some of this real craziness that Zohran Mamdani's about.
Eric, thank you for coming in this morning. Nice to see you. Appreciate it.
Hey, coming up, what is coming up? The U.S. employment picture on what would have been a Jobs Friday if not for the government shutdown. Then later, Elon Musk biographer Walter Isaacson joins us on the CEO's new possible $1 trillion pay package if things work out. Squawk Box will be right back. OpenAI CEO Sam Altman says his company has no plans to seek a government backstop for its $1 trillion worth of data center investments. Altman further walking back comments from OpenAI's CFO that some interpreted as indicating the company was hoping for government guarantees. CFO Sarah Fryer had already clarified her comment from a panel on Wednesday, saying on LinkedIn that American tech strength will require buy-in from both the public and private sectors. Before Altman's social media post yesterday, Trump administration AI czar David Sachs wrote on X, "There will be no federal bailout for AI. The U.S. has at least 5 major frontier model companies. If one fails, others will take its place." He added he didn't believe anyone was genuinely, at this point, asking for a bailout. They don't need a bailout now. But they're too big to...
Well, but
that was the question.
And the other question, and we talked to Dan Driscoll about it, is ultimately, you know, what kind of compute power the U.S. government is going to need, and whether they should be supporting this through, you know, army bases and the like. So it could become a sort of quasi-private public thing. Like that's happened for many, many years in terms of the internet and so many other things. But then there becomes the larger question of, you know, do you privatize the gains, socialize the losses?
Right.
These are always the big issues. Coming up, some employment data on what would have been. It would have been, but it isn't. The Labor Department's Jobs Day. Officials report suspended, of course, because the government shut down. But Steve Leisman has been crunching some data that he's got, and he's going to bring us an update on the hiring picture right after this.
We are getting the jobless claims data from the U.S. government, despite the government shutdown. And senior economics reporter Steve Leisman joins us with data and a look at what all the alternative job numbers are telling us, and a very firm conclusion about the state of the labor market we're going to get from Steve, I'm told.
Thanks for setting me up there, Joe. That's not going to happen. I'll do the best I can. First, let me give you the jobless claims data. It's gathered individually from the states, seasonally adjusted by Haver Analytics, our data provider, rising by 10,000 on the week. Still a modest 229. You can see that in the next chart there. Rising. It's the top of the range where they've been the past several months, but not really through the roof. Though continuing claims, that keeps edging higher together with that surge in mass layoffs that we reported yesterday from Challenger. Well, that suggests maybe some further weakening weakening ahead that bears watching. Meanwhile, the separate count of continuing claims by federal workers, that's worth watching here. It continues to surge, now topping 23,000. That's the highest since 2019, reflecting perhaps some impact of the shutdown. Also, the beginning of the wave of laid-off federal workers who would now be eligible for benefits, applying for those benefits. We do have a slew of alternative job reports giving an impression of a labor market, I would say, cooling but not crashing. None of the indicators are giving runaway signals either way. Take a look at the signs of strength or stability. The ADP preliminary data we gave you a week ago, that's 14,000 average for weekly job gains. And then the national report was up from minus 29,000 now to 42. We brought you yesterday the Chicago Fed's estimate of the unemployment rate, pretty much unchanged around 4.3%. And there's that initial claims. Now let's look at the signs of weakness. Challenger Job Cuts report gotta top that list at gaining 153,000. Continuing claims edging higher towards the top of the range there. The Indeed jobs posting above the standard of 100, but has been ticking down continuously. And then the ISM manufacturing and service employment indices, both of those have ticked up on the week, but they remain below 50. So subjectively, I put them into the weakness categories. We're putting all this together, folks, and you can see. Oh, one more thing we have. You can read our coverage at a new site that we created, cnbc.com. /alt data. The Fed looking at all this data likely has more of it as well, but what's missing is good alt data on prices. We'll have some of that we can roll out next week, Joe.
Maybe. Oh, well, that's good, Steve. And I think this is it's gonna happen soon. I think, don't you? I think we'll be back on track pretty soon. But then, I just don't know how to handicap where I can argue in a debate either side. Job market's fine. Job market's not so fine.
I mean, that's what the alternative data is telling us. I'll tell you, Joe, do you know how you get a feel for something beyond, say, what the data say? You and I have both been doing this for, I don't know, more decades than we want to admit. When a number comes in and it's up or down or well below what you think it ought to be, you get a feel for it being out of sorts. We just don't have a feel for how this data reacts or how to react to it in real time. The market seemed to react yesterday to the Challenger data, and I'm watching how the market reacts to it. I will say this, Joe, if they can get their act together and get back to work in the next, say, 5 or 6 days, they can get that November employment report out. I was looking at how they did it in 2013, and they came out and they did it later with a bunch of asterisks, but they were able to get the 2013 data out. It's pretty much similar timing. They were able to get it together with I think with a 1-week delay. So if they can get their act together, hey, why don't we have some benefactor come in and pay for the BLS report like they did on the military data?
The military. There's no way, Steve, that all of a sudden things move so quickly that we wake up and it's a 5% unemployment rate. Is there?
I hope not. I really hope that this data is giving us a feel. We gave you yesterday, for example, the Chicago unemployment rate estimate, and what they said is that there's a 41% probability we're at 4.3%, and some lower probability that it's higher by 0.2 or 0.3. I think what you're saying is a good conclusion, Joe, that it's unlikely that there is a major swing going on in the jobs report that we're not picking up in this alternative data. ADP is not spot on month to month, but over a series of months, it does tell us which way it's going. It would be very unusual. Actually, Austin Goolsbee said this yesterday, and that's a really good question, Joe. Austin Goolsbee said this yesterday, that it's unlikely you have a crash in the job market with these claims in the range they're in right now. So that's probably telling us that it's lackluster, it's cooling, but not crashing.
There's some scary layoff data, though, right? Right, Steve? People were running with that. People that want the economy to be bad were saying, look, this is the worst since what year? That number of, what was it, the Challenger report?
Well, the worst October since 2003, but take that a little bit with a grain of salt. I'll tell you why. Remember, a layoff announcement is not necessarily a layoff. Companies can affect these layoffs through attrition and other methods, and it also takes place over time. There's a lot of restructuring going on in the tech business, and a lot of right-sizing going on from overhiring and maybe even some labor hoarding from the pandemic. I'm not sure that it is a cyclical sign of real weakness going on right now. Some of it may be. Let's see if it continues in the month of November.
Okay, let's see then. All right, thanks, Steve. For more insights, let's bring in Roger Ferguson, former Fed Vice Chairman and a CNBC contributor, and Sarah Malik, Chief Investment Officer at Nuveen. Good to see you both. Happy Friday. Roger, what have you been thinking about the past couple of weeks with an absence of a lot of data points?
Look, I've been thinking about the messages the Fed has been delivering and how sort of the dual mandate is creating what I describe as a dueling Fed. We had one Fed governor, Governor Myron, who's thinking more in terms of the so-called neutral rate and using that as an argument to reduce rates. But most of the other Fed officials seem very much to be where they were before, which is some open to the possibility of moving. It feels to me like most of them are in a very cautious stance. And the truth of the matter is, without data to break the tie, I think it's going to be a judgment call when they get to the next meeting. So it's really a wait and see with the Fed that's very much divided.
Roger, is it possible that both sides of the dual mandate are kind of, just not awful? I mean, is it possible that inflation's kind of grounded, and is it possible the labor market is in pretty good shape? And I mean, we do find things to worry about a lot.
We find things to worry about. Look, I think the most recent data are telling us that we have a low hire, low fire labor market that's pretty unusual, gradually weakening perhaps. We certainly see inflation that is, running above the 2% target, probably at 3%. So I'd argue that it's possible that both sides of the dual mandate are somewhat disappointing, with neither one necessarily, winning the battle, so to speak.
Yeah.
I think that's the Fed's dilemma.
But, no one's talking about a misery index up in the double digits anytime soon. Sarah, what is this, if this is all true, what does an investor, what's an investor to do?
The wall of worry is definitely getting taller, and that's for 3 reasons. First, investors are concerned about AI spending, given the meta results we recently saw. Second is the pace of rate cuts. Is it going to be fast enough to please investors? And then third are these employment markets. That challenger data yesterday, the worst in 22 years. I think what investors need is one of 2 catalysts. First, we need the government to reopen so we can get some certainty around the economic data, and then get a vision on whether we're going to get a rate cut again in December. And second, for tech stocks, which have been the main driver of these markets, NVIDIA reports earnings on November 19th. That could be the catalyst that revives tech stocks. Until we get one of those 2, I think markets are going to remain mixed and likely volatile to the downside.
Where are you on? I'll ask both. Is the Fed on track, Sarah, to cut again and then into next year as well, or was Jay Powell sort of signaling that that's not guaranteed?
Jay Powell was definitely conservative in his recent commentary, but I see 3 more rate cuts over the next 12 months. I don't know if we're going to get that in December because we just don't have enough inflation and employment data to determine that. But I think either way, we are going to get a gradual pace of rate cuts, because inflation, while it's not at the Fed's target, it is running in the about 3% sub range. So I think the inflation is manageable for the Fed, and then employment data is weakening. We're seeing that with claims driven by government layoffs, but also with the challenger data. I think that the economy slowing with the employment markets is going to cause the Fed to cut 3 more times.
Does the Fed know what it's going to do at this point, Roger?
No, I think the Fed does not know what it's going to do. Each individual knows what he or she would do, but the consensus is right now hard to find. It's an evenly divided Fed. I hope that Sarah is right, that inflation comes down. I think most folks do, but I am not 100% confident of that at all. And it feels like the job market is somewhat easing, but not necessarily falling off a cliff. So, Sarah may well be right. I've known her for many, many years. She's very smart, very capable. I would not at this stage say 3 rate cuts in the bag. I'd say it's incredibly uncertain. And I fear that the data, whatever it is not going to necessarily clarify this situation. It's going to be meeting to meeting, data dependent, and it's very much wait and see.
Roger, do your colleagues at the Fed talk to you about the successor to Jay Powell? Do you have any inside info? Anyone who's got the inside track there? Do you have anyone you prefer? Are any of these questions going to be things that you actually answer or not?
Yeah, I'll answer all these questions.
Right.
No, they don't talk to me about the likely successor. There's only one person who knows that answer, and for a while that person is President Trump. My bet is it's someone named Kevin. Is who I'm meeting if he leaves, but I have no particular insight into that. And the Kevin I'm thinking of is probably Kevin Hassett, but we'll wait and see. And in fact, I think my name may undercut anybody.
Yeah. I thought you were trying to double your odds with because there's two Kevins in the running. Obviously, but you think Kevin Hassett. Are you following it, Sarah?
Not because it's
sorry. Yeah. No, I just Sarah. Do you doesn't matter to you, does it? You just gotta you gotta look macro more, but maybe it does matter.
We are watching it closely, and that's one of the reasons why we think we will get 3 more rate cuts. We think whichever person takes that position likely will be somewhat dovish when it comes to rate cuts. I don't have an opinion on who will win. But another thing we're watching, though, is the consumer, just another area of potential weakness. We are seeing consumer companies report fairly weak earnings, and what they're saying is that the lower-end consumer is really struggling here, and they're trading down, and the higher-end consumer is really carrying this market. That's another concern, that narrowness of the markets, with just the Mag 7 basically leading or lagging, and then just one area, one segment of the consumer performing strongly. Sentiment is poor. All of that is worrying for the markets, but I will end on one good note. That's third quarter earnings. They are coming in at plus 10% year over year. So that is the one strong note that is keeping this economy chugging along. And I also wanted to say it's great to be on with Roger too. As you know, Joe, he was our CEO of TIA for a very long time.
Yes, that's right. I forgot about that. That's right.
Absolutely.
A lot of things. Sarah, thanks. Roger Ferguson, thank you, as always.
Thank you.
Coming up, we've got Elon Musk biographer Walter Isaacson. He's going to join us following the Tesla shareholder vote to award Musk a potential $1 trillion payday. A lot of things have to go right for that to happen, but we're going to discuss it all with Walter right after this. Welcome back to Squawk Box. Take a look at the futures right now. We are off this morning on Friday here. Dow Jones looks like it would open down about 117 points right about now. The NASDAQ off about 145 points. The S&P 500 looking to open down as well, about 25 points. And do take a look at crypto right now, because we've been talking about it all morning, perhaps as a signal of animal spirits, or maybe the lack of. Bitcoin sitting just at about $100,000. It actually dipped below that briefly, and we were talking about that earlier in terms of what that means. Meantime, shares of video game maker Take-Two Interactive falling after the company said that its upcoming Grand Theft Auto 6 would be delayed again. Now, the game is scheduled to launch November 19th of next year. It was initially scheduled for release this fall, but has now faced multiple delays. You're looking at that stock off this morning, close to 5%, a little over 4.5%. Joe, you want to talk about Airbnb?
Yeah, I do. I'm sorry, but I wasn't here. I thought you were going straight to Walter. Did you read my stuff?
I was reading your stuff.
Did you read my stuff like I would have said to you with the?
You know, I didn't have the sort of, I didn't add any perspectives from the from the right.
No, or just any type of historical context or insight.
All of the
no
insight
that could help.
No insight,
Institutional
no help,
knowledge.
nothing. Just
Airbnb.
Just straight up.
You know, we had the Airbnb person on. Remember, they're rising.
His name was Brian Chesky.
What he was on this week?
About 2.5 weeks ago.
No, it wasn't.
Yes, it was.
We'll find out. Rising after the company reported mixed third quarter results.
2.5 weeks ago.
And upbeat revenue guidance, third quarter revenue of $4.1 billion, slightly beat estimates. Earnings per share missed expectations. The company said for the fourth quarter it expects revenue between $2.66 billion and $2.72 billion.
You might have perspective and political
Was it really
views.
2.5 weeks?
I have a memory. October 22nd. It's November 2nd. You can go look at a calendar.
So that's not 2.5 weeks, though.
Do you want me to show you a calendar?
That's only a week and a half, isn't it?
Today's Friday.
Yeah.
Go back.
It's not 14 days. It's definitely not 18 days.
No, it's 2.5 weeks. It's exactly what it is. October 22nd. It's a Wednesday.
So what's today's date?
The 7th of November.
It's the 7th.
Yes, sir. Okay. 16 days ago.
That's 2 days.
Okay. History-making moment.
Business
folks.
day. Business days.
Tesla CEO Elon Musk, after shareholders approved a pay package worth up to $1 trillion. Here's a guy who's got a memory. Elon Musk author Walter Isaacson. He's a Perla Weinberg advisory partner, professor at Tulane, CNBC contributor, friend of the show, and it's great to see you, sir. Nice to see you, Walter. Contextualize this for us. You know, I think there's a lot of people who are looking at what some people even describe as a split screen. This idea that, you know, Elon Musk is on his way to potentially $1 trillion pay package. He's got to do a lot for that to happen. At the same time, in our country, or at least in this city, New York, where Mandami won, and I think people are trying to sort of grapple with sort of the larger philosophical question that's taking place in our country before we even get into the Elon Musk of it all. What do you think?
Well, it's definitely true that right now you have greater excesses of wealth and inequalities of wealth. You wrote about it in 1929 in your book when you had those sort of things, and it leads to a populist backlash, and I think you're seeing that.
When you look at the pay package that shareholders approved, I don't think they truly had an option in all of this. If you were handicapping the situation, what do you think the chances are that he hits these milestones? I mean, the last time this kind of pay package was put together, people thought it was absurd. It was never going to happen.
I'm going to prove you right about historical memory, because I remember you in 2018, and you were quoting all of your sources in the financial industry, and you said for that $50-some-odd billion pay package that hitting the marks would be almost impossible, that everybody you talked to said it was ridiculous. Well, he did it. This time it seems even more of an insane moonshot. He's got to get 1 million robots sold, 1 million totally driverless cars sold. I think increase the share price of the company 6-fold. So it seems more than just a stretch goal. It seems a moonshot goal. But pulling back my historical perspective, You and I and many others thought it was unlikely last time, and he did it.
Here's a different philosophical question. So I love the sort of pay for performance idea. With this, the Tesla shareholders will, if he does well, they will do even better. There's no question. Having said that, you know, there's another view, which is you look at somebody like a Jeff Bezos or Warren Buffett, who got stock in their company at the very beginning and never got another share of stock. What do you think about just those two different approaches?
Well, certainly I think that Musk feels he needs the stock not only for the money of it, he wants control of a company that's going to be taking AI and put it into the real world settings. And he's said this for 5, 6, 7 years, that he's going to do the Optimus robot, the self-driving cars. He founded OpenAI with Sam Altman because he wanted control over how AI would be deployed and, in his mind, keep it safe. He tried to fold OpenAI into Tesla a few years ago, and that didn't work. So I think the main thing here is him feeling that he needs at least 25% if he's going to have robotics, Optimus, full self-driving, and AI all in one company.
What do you think about there was another vote, fascinating one, about whether the board should consider acquiring a part of, or I guess potentially all of, though I think it was really about a part of, potentially XAI, his business that includes the social media platform, but really his AI effort.
You know, you put your finger on it, man. This is so interesting. He started XAI, and I have a chapter or two on it in the book, because he wanted to have a separate AI company, and he felt he needed to make it an independent company. But deep inside, he knew it should always be inside of Tesla, just like he thought OpenAI should migrate to inside of Tesla. What you had is the shareholders very split on the notion, should Tesla take a major stake in Elon Musk's AI company? It kind of passed, but there were so many abstentions. And the particularly interesting thing is Robin Denholz, the outside director who's chair of the Tesla board, says, well, they have different missions, so maybe that shouldn't happen. I think you're going to see that play out in a pretty tense way, because I suspect Elon Musk is going to want to take all of his AI work, including building the chips, working with NVIDIA. They should all be part of one company eventually.
Walter Isaacson, it's always good to see you and get your perspective on something that you are truly an expert in. We appreciate it. Thank you.
Good to see you, man.
Okay.
And a big call in the banking sector. As one firm names another a top pick. We're back in 2 minutes. Breaking on Squawk Box this morning, shares of Tesla trading lower after shareholders approved a $1 trillion pay package for Elon Musk if he hits a series of targets for that company. Morgan Stanley naming Bank of America a top pick this morning. No word yet on whether Bank of America is naming Morgan Stanley a top. Okay. And about an hour ago, here on Squawk Box, American Airlines CEO Robert Isom again implored Congress to pass the clean CR to reopen the federal government, saying we don't need to be in this position. Today is the 38th day of the government shutdown, and that is the longest in history.
Take a quick final check on the markets. Dow off about 122 points right now. NASDAQ down 133 on this Friday morning. The S&P 500 off about 22 points. Let's show you what's going on with treasuries, and then I want to talk a little bit about crypto, because we've been talking about that all morning as sort of a sign of maybe how connected.
Sorry, you can't talk about it.
5-year or the 2-year right now at 3.5. You're looking at the 10-year now at 4.1. Let's show you Bitcoin. We're really sitting now at about $100,000 a coin. Ether down this morning at $3,200 basically, and then Solana down at 152. And I don't know what you think this really says about things.
Trying to hold. If it doesn't.
But what's the you look at the charts. Where's it go?
I think Katie Stock was on, and I mean, it could go below where it is. I mean, it's Bitcoin. It could go. Yeah. I think she said 80. There's some support in the 90s, some in the 80s.
We got to go. Have a great weekend, everybody. We'll see you on Monday. Squawk on the Street begins right now.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla. Scott Wapner here, post 9 of the New York Stock Exchange. Kramer and Faber have the morning off. Stocks do look to close out a down week with some additional losses as Palantir, Meta, Oracle, crypto, all lower pre-market. Shutdowns now in day 38. We'll watch the Senate today, but air traffic is being disrupted in the meantime. 10 before 1. Our roadmap begins with fears about AI valuations gripping investors as OpenAI's Sam Altman weighs in, trying to allay those concerns.
Tesla shareholders approving Elon Musk's $1 trillion pay package. We will discuss what's next for the company and, of course, the stock. And shares of Affirm getting a pop in early trading on the back of its latest earnings. The fintech CEO, Max Levchin, will join us first on CNBC.
Let's begin with the markets as we wrap up this volatile week for the AI trade. Meta shares down more than 17% since their last earnings report. A lot of discussion about sort of Microsoft this week being used as a source of funds. Meta, I think it was the JP Morgan desk said, kind of a ho-hum quarter, and meantime, concerns about OPEX, concerns about CapEx.
Microsoft's down 7 straight sessions. Meta's down 5 of the past 6. The NASDAQ has had 3 1% pullbacks in the last 6 sessions. It's the worst weekly performance since April 4th when it was down 10%. It feels like we've hit a bit of an inflection point this week, don't you think? In terms of the scrutiny that is going to be placed on the hyperscalers, not only for their spend, but in some cases for, if not the hyperscalers, the valuations of other companies. You look at Palantir, for example, 4th straight loss yesterday, the longest slide since August. It's the worst week since April. There definitely is a difference in the way that these stocks and the commentary from them is being perceived.
You know what? You're an idiot. The thing's up 4,000% in 3 years. And you're picking on people. Oh, this channel. You know, they get me. They get on this little high horse. They really do. I mean, they're gloating. They've been wanting a pullback for months because they don't want Trump to look good. And everybody, you know, I know that this market's a little frothy. I mean, I've been saying it. Stocks just don't run up like this. They've been frothy for the last 10, 15 years. But the government printed so much liquidity. I'm talking about $100 trillion. in the past 20 some years. Unfunded liability, I mean, I think when I first started it was at 65 trillion. Now it's at 168 trillion, something like that. When I first started trading, we had Bill Clinton balanced the budget, balanced everything. Then George Bush added 4 trillion to it, and Obama added 16 trillion to it. And then Biden, or not 16, it was at 9 trillion. Bush added 4 trillion. And Biden added 8 trillion just in the deficit, and his unfunded liabilities went through the roof with 20 million, 15 million illegal immigrants that are hacking more than half the welfare system right now. And I blame that on definitely on Harris and Biden. And then we elect a communist in New York. Now he's begging for money from his constituents. I mean, woo! I'm Washboard Jim. I'm Narcissist Jim, where I build a strategy where I talk about chart patterns, moving averages, and being in the now. Market jitters, AI valuation, all of a sudden, they're saying, just all of a sudden out of the blue, AI valuations are through the roof. They were all for it, boy. It's a new wave, I mean, for months. Then all of a sudden, it's all derived. It's the rigging of the market. They used to be able to do this before the retail traders come in, and it happened every 4 years. We ain't had a recession, I don't think we've had since COVID. And they were afraid, they didn't want to call it a recession because Biden was in the White House, shutting all these cities down. I felt it just because of inflation. I mean, I've been in business for 35 years. 35. 30 good years. And I've never seen it like it was during the Biden years, where it went up 20 to 40%. I can just name off all the stuff that it cost. I mean, I was boasting there for a while about how much profit I was making, but I don't do that anymore. And I was charging cheap, $25 an hour. We've got inverse head and shoulders right now on the S/ES on the 5 minute. I noticed this morning when I was looking through charts, some of them look like they're getting at the point where they could start breaking out again. We got the right shoulder here getting hit. We could have a double bottom it open, but right now we're sitting on a inverted head and shoulders. Save, and this is the third touch, so I mean it has to break out You know what's going to break out? That this moving average is the 200. Simple moving average of the 200 SMA. Yeah, I'm quite impressed with these guys working on this paint job. I mean, Jim should go make a cup of coffee. How about time? It's 8:09. How'd you get that so right, Jim? I would rather trade the SPY. As I approach the 5-day, this is my oh, that was the low support. 66668 is what I typed in yesterday. So we did have a new low for the week. Today's what, Friday? Failed a triple bottom. So the triple bottom will now become resistance. Do you understand? Someone say yes. Randy yesterday said I was right. He said I might be right. I'm not scared. I had to write a song about that. I might do it today. I'm not scared. I'm getting ready to sneeze. Woo! That's very unprofessional, James. Airbnb hit my resistance level of 128.14 this morning. So let's go over the watch list. First, I need to take off my shoes. Today I'm wearing the Ghost Max 2 by Brooks. Very comfortable shoe. I'm thinking about getting the 3. And that'll be my 3rd pair in 2 years. This is the DNA Loft nitrogen injected Brooks Ghost Max number 2. Very, very comfortable shoe. The wash is good. I've been up for a while. I got up at 1:30. I went to bed around 8. Woke up around 9 something and had a hot chocolate and got on the internet and drank my hot chocolate and went back to bed. So I might be a little tired today. We'll see. Might take a nut. Had coffee. Anybody wants to ask Jimmy a question this morning? Feel free to. Don't be scared of me. Hike. I keep thinking of this song that I learned in Jamaica when I wrote a song, and I keep thinking of Madani or whatever his name is. So I think I'm going to write a song about him. Oh, Madami. Write a song about him. Whoa. Sure enough. That's right, Czar Trader. Morning, matey. I think I will go. Well, maybe I'll just have a hot chocolate. I've had plenty of coffee. Everybody welcome Czar Trader 101 to the room. I talked to a guy yesterday in another chat room that had, I think he said he had 48 years of trading experience. And he was asking me about my moving averages. He'd never seen anybody use moving averages like I do. And I told him I use them as resistance levels and support levels. And he's probably never seen anybody trade them like I do. He found it quite interesting. I respect the fact that he's been in the business for that long. I mean, I don't think I've met anybody that's been trading that long. Bill might have, Wall Street, Mr. Wall Street might have been. But he had a weird way of trading too. Trading penny stocks like Buffett. So that's kind of scary. I mean, you get a pop on penny stocks, you want to sell them. Maybe 1 out of 10,000 will keep going. And he had so-called, I learned the 7-day trading rule from him. And I come up with the 5-day and the 3-day after that. I noticed a lot of times we'd sell off for 3 days and then we'd bounce up. You notice he didn't call me a knucklehead. He called you guys a knucklehead. Because I'm the sergeant. I'd tell him to get down and do 20 push-ups. Do you understand? I first heard that I was watching the Marines going into boot camp. And Sergeant, do you understand? And then I started watching this judge. He says, I'm going to have leg monitors on you at all times, and you will report every 30 days to do a drug test. Do you understand? So I started using it because I really he's like a Pee Wee Herman, but man. Ay, ay, ay. It's such a pretty world today. Baba might be good to watch today. AMD might be good at open. There's some good setups, I'm telling you. I've got a fallen wedge on NVIDIA. Meta just ain't stopped selling here. I heard something controversial about Meta. That 11% of its profit was through a scam. Something like that. Zuckerberg scam people? I know he threw me in jail 3 times. Oh, we're getting to my low support channel. Oh shit. This is serious business. What is this? A gap play? Oh, it is. Meta has entered the gap. I knew it was something fishy. We're at the pivot point. $606, strong buy. Do you understand? Meta. Someone asked me about gap plays the other day. Let me see if I can find this sucker. Oh yeah. No, it wasn't him. It was that. my darling, oh my darling, oh my darling Clementine. I got to sing happy birthday to an IRS person this morning. My darling, oh my darling, oh my darling Clementine. Okay, I have 6 minutes. I think I could get into the kitchen, make my water, all within 6 minutes. Less than 6 minutes. So I'm going to go see if I can do it. I want to see if my girl is showing cleavage today.
Today.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network, live at schwabnetwork.com.
Trading Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Opening Bell. Let's count down to the start of trading. And joining me now to help us break down some of the levels we're seeing is Sam Vadas, of course, host for the Schwab Network. So Sam, really, it's been a pretty busy week, as it is most weeks, it feels like, around here, but we're expecting to close the week lower in our four major averages. We've seen some of that pressure really accumulate on and off since really Tuesday's session. What has really stood out to you this week?
Well, Jenny, as you say, it's been a bit of a struggle street for these stocks this week, and certainly as far as the views are concerned, a bit of frost coming off the top of we've been sort of grappling with a number of moving parts, everything from the AI valuation conversation, as this US government shutdown has now entered its longest in history. We're watching, of course, travel disruptions as well, with 700 flights being disrupted today as far as that headline is concerned. Obviously, we've seen this trickling across European and Asian equities as well. In fact, we did give back a lot of the gains that we saw overnight in those regional markets as well. As we get up and running for trade today, obviously we are looking at a jobs data Friday with no jobs data, but we've had plenty to chew on this week, everything from the ISM services, which looked okay, so did the ADP. Obviously the Challenger raised a bit of a concern there, but as far as what we're watching today, it's been a very earnings sort of driven type of week as well, just as far as some of the names that are rallying off the back of what we heard from their report cards. I mean, you see Airbnb, SanDisk up, and those that are tracking lower today, DraftKings and Constellation Energy, just to name a few. So there's a lot of sort of push and pull that's been going on under the surface. We're looking at FX, we're looking at commodities, and there's plenty of moving parts in those patches as well, Jenny.
Okay, and I think that to speak to some of those pressure you just mentioned, I mean, look no further than NVIDIA, as it's still, I mean, a huge barometer for the overall market, the biggest company by a large chunk, and down about 7% this week, off of highs by now 11.4%. And I mean, part of this is attributed to Jensen Huang saying there's no active discussions on selling Blackwell chips to China. So walk us through this latest development.
Yeah, it seems like a lot of clarification coming from Jensen Huang this week. Just as far as the timeline is concerned, this all sort of started because there had been some speculation that President Xi and President Trump would obviously be talking about the Blackwell chip and whether that could actually make its way to China, because NVIDIA has been very adaptable. They've been very successful in their lobbying to try to get these China-made sort of chips specifically for this market because they see this is really key as far as some of their revenues are concerned. But obviously, we've seen some stoppage coming from the US side and now the Chinese side. And then we saw reports off the back of that meeting between the two presidents that, in fact, the US government had torpedoed some of those conversations. So it looked like there was some lobbying going on, certainly from the China hawk side of the equation here in DC. And then, of course, you had this headline that caught a lot of attention, certainly a bit controversial as far as some think, from the FT, that Jensen Huang had been suggesting that China was perhaps ahead in this AI race. He softened his tone later, talking about how there were actually nanoseconds behind the US. So it would have been a very interesting boardroom conversation, certainly if you were in the PR department of NVIDIA this week. But, you know, this has been something that Jensen Huang has talked about before. He has certainly said that China is maybe not ahead of the US when it comes to the AI technology, but they are ahead in the energy, and that has obviously been where we've seen the shift in the conversation as well. But now you're hearing this information report suggesting that the White House is perhaps urging people not to permit NVIDIA to send this scaled-down version of the Blackwell actually to China. That is the B30.
China! And the bell rung. Okay, get ready. We have a 1, 2, 3. Fat cats are loading up the boat, man. Oh, I don't have my mistake. Okay, we have 1, 2, 3 coming up here. Bull flag. Pay attention on the SPY. That's the first one I'm going to trade. We're watching here, Jim. When I speak, everybody listens. This thing's acting slow again. I think if they got this thing rigged. P.S. I'd like to have a meeting with the supervisor of Schwab. The lotto, today's the 7th. Jimmy's looking at the 670s. $6.70s, 90 cents. $89. The strike is $6.70 at 90 cents. It hit 97 for a second. Yippee to the VWAP by the end of the day. We're now at 99. This is a scalp. Back to 90. There it is, right there. So we need to hold here. There it is. Oh, that's the /ES. You fucking idiot. Want 'em? 2 bits and freebie. Well, we just now went below it, so this is not going to come out too good. Top economic world stock market valuations are at historic extreme levels. Could correction happen soon? It already is, man. We got Nvidia at 183. Tesla, Tesla's down to 425. And sell-off keeps going on. Meta, I got 606.64 as the bottom of that gap on Meta. IWM dropped below my support level at 239.09. QQQ at 604.59. SPX looks like it's coming up to a support channel. Could dip a lot more, definitely. There ain't nothing holding it up. I'm gonna have to add on to my calls. We're at 60 now. Probably get 10, that'd give me 15. Maybe 15 if it gets too much cheaper. I'm eating a grapefruit. Meta's getting close to support. We got a tweezer bottom with a hammer. NVIDIA hit my support level to a trend line. NVIDIA. I'm gonna go get my hot chocolate. We got a megaphone this morning that we broke down off of. So resistance will be the top of that megaphone. And that's right at the 21669268. So I'm going to look at the SPX. What the hell is this? Oh. The 6720s or the 25s. If we can stay at this support level. We just broke past 9. So there's your snake, breakout, pullback. We got to get a pullback, or it runs straight up to the 21. The 67.25s are now at 530, 520. Okay, prepare ye. Judge, did I ever tell you that I love you? Strike is 67.25. I missed that one. Is it 525? Okay, here we go back down again. I think I'm going to give this a shot. Just for a fast scout. No, I missed it. Try to get 520. Here we go. He could easily come back down here and hit a double bottom. In this market, you gotta kind of think that that could happen. $5.10. I say it's a little risky because it's not really formed a flag yet. Boom, baby. Woo! Oh, yeah. Uh-oh, I'm not. I'm thinking we get a bounce today. Well, we got to hold this because I had my chance to sell it, didn't do it. Well, shit. Got an inverse head and shoulders. And we're below the 9. We haven't had a candle yet above the 9. So we're going to squeeze right here. It's either I sell it and wait. Because we're still bearish as long as I'm below that 9. But we definitely got the right shoulder. So I'm in a squeeze spot. There's 570, 580. Yeah. Let's break. We have a triple top. We haven't broke the 21 yet. We got a spinning top. That looks bullish right there, but should I sell it? Are we going to break the triple top? $6.40. F no. 660. I think I'm going to take profit. Because I'm Washboard Jim, and that's what I do. Jimmy's out at $6.50. Sheba, what, you want to give me an A+? Uh-oh, hold. We are now at the 63, the SPY. I got an A+, nice. I'm very proud of my trade. I am now getting ready to eat my last piece of grapefruit. Then I'll be going into the kitchen and making some hot chocolate. Sugar-free. Hey, Sue, where are you now? Do. Where are you now? Meta's at support. Meta is at support. Repeat. Meta is at support. It's filled the gap. Meta has just filled the gap. Which Meta? Which Meta? Oh God, you can't get no closer than that. Look at that. Ain't that pretty? Looks kind of bullish right now. We got the 9 crossing over the 21. We broke a triple top. It came back and retested the 9. So it looked clean. We bounced off the second shoulder of the inverse head and shoulders. That looks real clean. Do you hear me? Livid Goose, do you hear me? I know you were scared earlier. Can't deny it. Option trader hears me. They're now at $7. The SPX are coming up to resistance. Do 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 do. Spy. This CS is at the 63, so that's what it breaks. Now we're retesting the 9 on the SPX. So if it wants to stay bullish, it has to hold this one. Not the 21, but the 9. SPY, I have the 670 at 60 cents and 90. I need to go get me some water. Okay, my option here is coming back down to my entry. SPX. I didn't want to see that 9 break. Okay, here we go. It could easily come down and do the shoulder for the 3rd time if it doesn't hold here. So I'm going to make a business decision. $4.50. $4.60. There it is. There it is. $4.50. Yes. Washboardjim's back in it. Miss Kirk, I would like to ask you a question. Erica, could I have a hug? The one that you gave J.D. Vance. The exact same one. With the leather pants on. Please. And the t-shirt. The exact same one. You don't trust her? I'd trust her for a hug. Jimmy trusts her. For one night. We're down at $5. Well, heck. I'm taking a risk here. Oh my darling, oh my darling, oh my darling Clementine. Okay, here goes the other one. So I have 2 of them. $4 $4. That's the magic number. Hey. No. We got a double bottom now. This doesn't hold the double bottom. If it doesn't hold the double bottom, I'm out. Shit. Come on. I hate to be a cheerleader. I should have added 2 more right there. Average is 420. Oh my darling, oh my darling, oh my darling Clementine. I'm even. Come on, Erica. I love blondes. Uh-oh. We're now at 490. All right, 520. That was nice. From Washboardjim, I'm the founder of the Sneaky Snake Trading Strategy. Does anybody see the triple top? Does anybody see a head and shoulders? Yes or no? There's two ways of looking at the triple top. We're going to go this way. I was glad to take $5.20 off this trade. For I am Washboardjim. Livid Goose. See what happens when I talk about pretty women? You know where I get my mojo from, Sue? Woo! Yeah, I'll keep talking about him. Let's talk about Hillary Clinton. I was watching a show this morning on YouTube, and they said Hillary's looking attractive. I said, what? You gotta be kidding me. There's 560. There's my last one. We hit the triple top. I had a girl tell me yesterday I needed help. I ain't kidding you. I do. Especially when you love somebody. I love you. Don't forget it if you're listening. For I am Washboardjim, spelunk, spelink. Uh, 570. Let's go. Oh, 650. Yes, I sold one at 520 and I'm selling the other one right about now. It could go to the VWAP. $6.50, $6.60. Snake, Jimmy called the pullback. Snake, breakout, pullback. Look for the pattern, which was an inverse head and shoulders. Boom! Pullback, double bottom. Boom! Snake, breakout, pullback, inverse head and shoulders, boom. Double bottom entry, boom. So I've scalped that twice. To what? What is that? Can anybody tell me what that moving average is? I'll give you 3 seconds. Want 'em? 2 bits and a freebie. Come on. Someone give me a moving average. Jim, we don't pay no mind to you. We don't really care. 63 is right. Randy wins. Randy wins on the 1 minute. What happens when you hit the 63 EMA? What happens when you hit the triple top? Does anybody see the support level? You have 2 ideas. It's either going to be the 21 or it's going to be the triple bottom or the shoulder line. You have 3 ideas. 66, 77, 30 in that area, or it holds a 9. You have 4 ideas. You have a triple top. You have the 9. You have the 50 and 21. You have the inverse head and shoulders with a 2-headed snake. Or you have a triple bottom. Nancy, I would let you make me hot chocolate, but I'm afraid you're going to put a drug in it, like a Valium, and I don't need that right now. I need something to pep me up. Would you go into the bathroom and dye your hair blonde, please? You will? Yes, Jim, I'm getting some gray in here, and yesterday I told all my colleagues that I wasn't going to go ahead and run for another election. I've decided after 40 years and making $400 million trading stocks that I think I'll go ahead and bow on out and enjoy some of that money. At $400 million, thank you, taxpayers. I did get her a nice jumpsuit. You want to see it? You must have missed my vacation with her. Let me see if I can find it. I had to take pictures of it. It's just so beautiful. This is Nancy last time we went on vacation together. I'll never forget that day. Everybody was looking at her. I said, she's mine. She's mine. Nobody could ever. The slashy yet made it to the VWAP. I don't know how he does it, but I was informed that Washboardjim is one of the best traders in the country. And I have no clue how he does it. I had a guy yesterday, he says, you're always saying we're bullish. I said, well, that's correct. Every day I come in here thinking I'm a bull. Some days it bites me, but I'm always looking for that reversal. But if you notice, I told the guy, it hit my support levels, didn't it? Yesterday. Now, YouTubers, this is the SPX chart. It's called a TTM squeeze. This is a /ES, the VWAP. So I just called the VWAP out. We had a little resistance level there off the 200. If you go over here, look what happened. The thing pulled back $120 a contract, $200 a contract on that one candle. So by looking at the VWAP, it gives me an idea to maybe sell off the SPS to sell my SPX. Does that? But I sold it at a triple top. Why did you sell it early, Jim? So I could get out of the trade fast. No one else is thinking of it. But by identifying a pattern, which is a triple top, that is a reversal pattern to the downside. In most cases, there's going to be every once in a while where it goes ahead and breaks out. So if you're hanging around a trader that trades triple top breakouts, you're only going to win once out of every 20 times. Because it will pull back and then maybe go out and break out the fourth time. So always remember, Washboard Jim said, sell the triple top. You can always get back in on the dip if you feel bullish in the trade. Correct? Jim, my grandma's watching you right now and she wants to know if you're single. Tell your grandma yes. As long as she's not over 75 years old. And she's a blonde. Now we're up to the triple top. And I'll be right back. They still try. I can't find a pattern that represents this bearish or bullish. I've seen so many of them. I keep saying it's bearish. But I think it just might be unloading. Then it has a chance to break out. And I wouldn't take the trade until it did. Because there was no support here at all, except the tweezer bottom. And it would have been too late to take it. Because we were below the 50, so there was nothing else holding it up but this shoulder line. I would have almost assumed it would have had one more red candle down there. Then I would have took it and run it back up to that two-headed snake. Jimmy called out AMD first thing this morning. Had a double top. Now it's a triple bottom. NVIDIA. Meta. And Apple's the only one that's really been looking good in this last couple of days, holding up. We're back down to 450. I'll be right back. I'm going to see how my chicks are looking.
Real-time market insights,
Oh,
live from the
God.
NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Whether you're an experienced
Marley.
investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth,
Chart patterns.
value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Here, let me pick up the phone here. Hello, this is Washboardjim with a Schwab Trading Strategy Technical Analysis. May I help you, please?
Yes, we were watching you play that double bottom just a bit ago on the SPX, and I was going to ask you a question. I seen that you had another chart sitting next to it. What is that? Could you please respond?
Yes, that is called the /ES. I use it sometimes corresponding with the SPY and the SPX when I'm trading them. For example, if you have the VWAP, that would be a pivot point area. And if you're below the VWAP, you'll always be bearish. But if you're above the VWAP, then the stock becomes bullish. So if this SPX broke the VWAP, or the /ES broke the VWAP, and you're wanting to trade the SPX, I would jump into that trade. But always know, once it breaks the VWAP, you broke a pivot point, and it could come back and retest that pivot point one more time. Do you understand?
Oh, yes, I do understand. Can I ask you another question? Are you single? I'm 75 years old, and I'm the one that was talked about earlier. My grandson was sitting here watching you, and he turned me on to your YouTube channel. So I spend up at night when I'm drinking my Pepto-Bismol watching you trade on your videos, and I've learned a lot. You're a handsome young man.
Oh, well, I'm on the air right now, ma'am. We can talk about this later. I'll have my secretary give you my phone number, and have a great day.
And then add another trillion to 8.5. That's the final goal, and sustain that level to max out this potentially $1 trillion pay package. Right now, Tesla's market cap is $1.43 trillion, and Musk is currently estimated to be worth $493 billion. But there were some other really important things that came out of this meeting, one of which I thought was pretty substantial was Elon Musk saying that, quote, maybe we'll do something with Intel. He said, I'm super hardcore on chips right now, as you may be able to tell. I dream about chips literally. Now, one of the things I'm trying to figure out how we do is make enough chips. Then he went on to say that he has a lot of respect for Tesla partners Taiwan Semi and Samsung, but maybe we'll have to do something with Intel. He said, quote, haven't signed any deal, but it's probably worth having discussions with Intel. He also then paved the way for SpaceX to potentially become a publicly traded company, saying he wants to figure out a way for Tesla shareholders to, quote unquote, participate in SpaceX space ambitions, saying, quote, maybe at some point SpaceX should become a public company despite all the downsides of being public. Now, those were two big headlines that stuck out to me. There were also some EV commentary here. Cybercab production expected to begin in April, saying that they're planning to do it with no pedals or a steering wheel, which could face major regulatory
Okay, we're pulling back
scrutiny.
here.
Also goes against what the head of the board had previously said, that there would be a steering wheel. But Elon Musk says that there will not be. It doesn't have pedals or a steering wheel or side mirrors. It's optimized for the lowest cost per mile in autonomous mode. He also said that the manufacturing line could have a 10-second cycle time, meaning that he could produce 2 to 3 million cyber cabs in a year. In addition, also planning to unveil the Roadster 2 in April of 2026.
2 to 3 million.
Production of that vehicle would begin 12 to 18 months from the date of the reveal. And then finally saying that he believes that they'll win approval in China for full self-driving by early 2026. They have a partial approval right now.
Well, I don't know about
Full
that.
approval by February or March. So a lot of really important headlines there. Obviously, this one.
I mean, I'd have to have a steering wheel on mine where I'd have the option that I could use the steering wheel. Because but I think they're going to be out in the streets soon. Especially if the elderly, if they can dial it in correctly, it'd be a lot safer for them. You don't see too many 85-year-old people driving a car. And if you do, it's a rare scene. But if they get them a Tesla that's autonomous, and they still know how to, put in the directions where they want to go, and it might be voice command, but they still would have to make sure it's correct. I can see it taking away jobs of like delivery people. Maybe.
It's at the top end.
So we come back to the shoulder line right here. This is a possible setup to the upside. Now it's getting close to my lunch time, so I'm going to go in there and make lunch. I have an early lunch because I was up at 1:30 this morning. And I've had a couple bars, candy bars, half of a donut, and a half of a cookie with a bunch of icing on it. And so I think I'm going to go whip up some hangers. Got a free loaf of bread yesterday. I bought some hamburger buns a couple weeks ago, and when I made my burgers, the bread got real soggy on me, and I don't like soggy bread when I'm making my burgers. So I got upset because I had two options. I went and got the cheaper bun, but I thought it was a good bun. I gave it the squish test, and I got home and I made my first burger out of it, and it was just soggy. I mean, I said, I don't like this. So I got mad, and I went out and bought me some different buns, and I sat around and made little toast out of the ones that I had. So I got on an email, and I told them how upset I was about the buns. I said, this is the worst buns I've ever had in my life. And I don't write letters like this, but I felt like I had to. And a couple weeks later, I got in the mail some coupons, and I had the choice between the buns, the rolls, and the bread. So I bought a loaf of bread yesterday for free. I get 2 loaves of bread, and I can get 25 cents, 2 tickets for 25 cents off my next orders. So I thought the bread looked good. We're going to find out when I get ready to eat some. So I figured I'd make some pizzas out of the bread, some cheese and pepperoni and some pizza sauce. See how that works. Put it in my little waffle maker. I may just put the pepperoni in there with the cheese on it and just cook it I might do that right now and try it. I was going to have a burger, but maybe Okay, now we're coming down to the triple bottom. I think we're going to see the triple bottom. So get ready, triple bottom coming up. Randy? Here, let me get rid of this. Might just do the same calls. Now these are getting too far out of the money, so I'm going to move my calls up. I'm moving the calls up. $6,700s. $6.10. You got a hold right here. 550 and 610. Slash ES got a triple bottom also. Needs to hold right here. Shit. Come on, baby. No, 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 no. Yeah, I'm not in a, I wasn't in a, I wasn't, yeah, I would exit it, but I wasn't in a trade. I just like to get closer to the money because you feel like you're kind of too far out of the money. So I look for the one with the highest amount of volume. And we got a triple bottom on the slash ES here, so this really needs to hold. And another note, it's that time of day where I usually don't, I usually like to take my lunch because I know this is about the time of day where people kind of walk away from trading. Usually I cost average down if I'm in a trade. But I sold these at the triple top. I was just waiting for the pullback, and I had different options, but we failed the triple bottom here. That kind of a little worrisome. So if I can get a bounce. And we're at 630 right now. Ah, you dick. $680. Woo! I'm in another room showing off right now. Got invited. I get invited to rooms all the time. Depends on how they ask me. Come on, baby. We don't want you to sink. Tempting. Just hold on to them. As long as we stay above this triple bottom here, it's been what, 9 minutes now? And that hammer. That I could add. I don't want to spend more money on this trade. Not really. Come on. Investor sentiment sours on record October layoffs, fueling pre-market losses for U.S. equity. They're looking for every excuse in the book. Come on, baby. We're at 480 now. I'm gonna have a heart attack if I can't get out of this trade. Volume's really creepy right now. We're going to find out any minute. Always when that volume slows down, they're making a business decision. Yeah, I don't know. I'm not feeling it. Come on. We're at 420. I'm going to put a stop on it if we get below $4. because we still haven't hit a new low yet. We're about to. On the slack. There it is. There's 4. Can't go any lower than this. Boom. Shit. About to stop out. Now watch it reverse. I ain't out of it. I said I was about to. And they're too costly to be adding, so just have to play it out. Down almost $200. Over 200. Now I'm at 200. 180. Come on, baby. Give me 66.93. Some here I'll be down 180. Am I focusing too much on the /ES? Maybe. We're squeezing between. Oh, no. I needed it to go up. I think I'm fighting a lot of bears right now. I'll be right back. Take my phone with me. Walmart would look real good during recession or sell-off. Jimmy. Don't look like it's going to work. Turtleneck. Turtleneck.
I think it's good whether it's institutions or individual investors.
I really don't want to listen to Marley right now. Come on. Might have to add 2 more. It's getting cheap enough now. Maybe. Better just take my loss and bite it. Puts are expensive. Come on. Man, it went below my support. QQQ new low. We'll just see how my experiment worked. I'm still in them. Damn it. That didn't work too good. Well, my great experiment didn't work yet. I think I got to change a few things around. I got an idea. Yeah, this ain't working too good. PLTR. Could correction happen soon? Well, they didn't help me out. Now watch it bounce. You sucker. I got stopped out a little bit ago, but $400. I'm gonna go try that pizza again. That one turned into like a sandwich. Maybe that's a good idea. Well, You guy's mustache. Marley, you look hot in that outfit.
Oh, they slow. The actual computers, the hardware of that. Micron, big exposure to that. And I think the biggest reason, this was kind of my number one idea this week is I like the fact that this stock is kind of disconnected from everybody else.
It is.
You look at, I'm going to talk about Palantir in a minute. You look at NVIDIA, you look at all of these high flyers, all pulling back hard. Here we got Micron, sure it's a red day, but it's just down single-digit %. So I like to see that when you've got that story accompanied with that kind of, hey, I'm not going to pull back with everybody else. I want to keep trending higher.
All right, Rick. So as we look at the
it's pulled back now
that we've seen from Micron, and as Tim noted, some less significant pullbacks than some of the other big tech names that we're seeing. What are the technicals showing us?
Right, as Tim said, one of the reasons perhaps this one is pulled back less is Micron makes chips that are more based on memory and storage rather than processing. So a bit of more of a picks and shovels types in play here. But
you think so?
We are still within our channel here, our upward sloping channel.
The megaphone goes all the way down under 66.20.
Pretty consistent, but we are on the verge of slipping lower here. So if we were to go too far below that 225 level, that could open the door to retesting our recent lows right about here near 218. That's about where things bottomed out recently. Beyond that, there was another gap that sticks out a bit near 193, but to the upside, the highs, 246.41 would be the mark to beat if things do start to recover on what's been a pretty rough week so far for many companies here. Our moving averages that we follow, not too terribly much help in this case because of the speed with which Micron has risen, but we can see our 21-day EMA here comes in just below 214. That could be one supportive area. When we look at RSI, this is a good example of why bearish divergence does not necessarily mean a price collapse is coming. You can see that we've had repeated forays above that overbought level, which is typically a sign of strength, even as the overall momentum is trended downward here. So mixed signals there on the part of this RSI.
It'd be a little bit.
But for now, the thing to be looking out for would be if we started making new relative lows on the RSI.
It'd be $11.
Starts to break lower as well. And then eventually, if we were to slip below that 50 midline. So finally, when we look at our other studies here, volume profile, not really, again, too much help in this case here because of the relatively short amount of time we spent trading at these levels. But the biggest node anywhere close to current prices, right around here near 193, which is our light green line there. To the upside, our highs came in pretty close to the +2 standard deviation channel, our orange line there. That comes in at about 240.
Okay, 240, and we're trading right now at 227.81, and like Tim mentioned, down about 4% today, but not a massive move to the downside. So let's move to your next one, Palantir, who has seen a pretty significant pullback this week despite strong earnings. Walk us through this pick.
So, this is one of those stocks that was actually on the big three back in August, the day after Citron Research, Andrew left, went short. And I don't really understand this with Palantir. I'm a huge fan, love their tech, love their CEO, Alex Karp. But this has been one of those stocks that just everyone loves to hate for some reason. Going back to 20, 30, 40, 50, 100. And that day that Andrew went short, it was at,
I don't hate it.
150. I was on the big three. I was like, buy it. I think this thing is just going to squeeze the shorts. Now we have a very similar situation with Michael Burry this week. And listen, I'm not smarter than Michael Burry. I'm never going to ever say that. But I think this is another one of those trades that reminds me of the Big Short. And one of the lines was, I'm not wrong, I'm just early. And in my opinion, he's early on this one. I mean, Palantir is as real as it gets. The AI story is as real as it gets. And, I think a lot of small retail traders can kind of get twisted up in these ideas because they don't understand that he can ride that out. I mean, I hate to keep quoting the movie. Book was even better, but he can ride out that trend up and still make money, where I think a lot of retail traders either panic sell or short into these bulls, and they just create that next leg higher. And in this instance with retail traders, the old quote is the market can remain irrational longer than you can stay solvent. And that, I used to be almost 90% a short seller. I lived that many times. You can look at these stocks. Next stock's going to be an example of, if you don't respect the price action and you're early, you can be right a year later, but it doesn't help you right now.
All right, so Rick, let's take a look at the chart for Palantir, because we know they've seen a massive move to the upside, but of late you can see that, all those red candles moving down.
Yes, this is one of those where, perhaps the line of best fit doesn't tell the whole story here, because for the most part, price has stayed within the boundaries of our channel. The key caveat there being, for the most part, this is one of those things you don't want to really gloss over as a big surge to the upside like that. But I believe this area right around here near 150 is around where Tim was referring to here. We did some stabilization there and then made our next push back to the upside. But in this case, we found a familiar ceiling. It was our old highs right there near 187. We also had this low point after our gap up near about 170. So this floor, 170, around that general point, is the same area, once again, that Tim was referring to here. So we've been within this this range for quite a while here, 187 to 170. But with a push to the upside, we topped out near 207.52, even breaking out of that channel boundary here. But now we find ourselves back near 170. So indeed a crucial test here for this stock. When we look at our other studies, we can see that we have moved below our two shorter-term moving averages, yellow 21-day and orange 63-day exponential moving averages here. So those could be potential resistance areas to consider going forward. RSI has also made a shift to the bearish side as well after breaking below the trend line, and the 50
APLD was when they were pumping.
Look at our other studies
Regetta's
here,
down 31.
Volume profile and standard deviation channels. Our blue teal line right here is our linear regression line, our line of best fit based on closes, our idea of some kind of fair value that comes in near 191. So that could be another area to watch to the upside. Volume nodes here at about 180 and here at about 150. So once again, the 170, 180 levels and that 150 level are the main points of interest.
And right now trading at that 170 level, but even with this pullback, we're seeing in the last 12 months, Palantir still up more than 200%. Now for your last pick, Tim, I actually had to refresh the chart because I thought there was potentially a typo here, but Motorsport Games is up more than 70% this morning.
Yeah, and listen, I don't blame you, Marley, and Rick's going to hate this stock. He's going to hate it. I already know. I can feel it from thousands of miles away. But listen, when markets get shaky like this, it's, as a 20-year day trader, I know that, the money flows out of a lot of the quality names, like we've talked about, all these AI plays over the last few weeks, and goes much more speculative because people get out of the kind of longer term holds, they cash those profits out and go into speculative plays. And this is very, very speculative. Keep that in mind, anyone that's thinking about trading this. But this is that rare intersection in small caps of a company that's actually making money, okay? As a 20-year small cap trader, I mean, it's always, 99% of them are failing, they're bleeding out cash, they're doing stock dilutions and offerings to stay alive. But when you've got this stock that actually is making a little bit of money with that move last night, and then what I like about today is it's setting up for what we call a day 3 surge. So we see these stocks gap up huge on day 1, then kind of consolidate and go to sleep on day 2. It's also Friday, so a lot of the times these speculative companies follow up with Monday morning press releases. So I'm anxious to see how much Rick hates this one, but keep an eye on this into Monday, especially if it can push back through 4. I think that'll bring a new onset of buyers. And as always, a lot of people like to short these small caps. That can definitely be a squeeze point there as well.
All right, Rick, do you hate this one?
The only thing I hate is that it messed up my lines because it moves so much. That's the only thing I hate about it. And, you know,
Ball and
there's
wedge.
all kinds of different ways
That
to
looks
trade.
good.
I would never say that one strategy is right or wrong necessarily. This would be more of a momentum type play here. And we did have this big push to the upside. So the level that I had my eye on initially,
Bowling at 193
was the high point here. We have crossed below that right now. You could still see it stabilize around that level. That would be kind of the closest point of interest, or perhaps even 380 because that was our previous best close. So about 380 to 390 or so is the area that the bulls would want to remain above in terms of our closing prices here. To look at what we saw during the past year, though, some big pushes to the upside. This big surge here in April was a $2.5 million investment for increasing their VR capabilities. This is a company that makes basically racing video games, like car racing games, like more advanced simulations, not like Mario Kart, for example, but more realistic. So down here we can see 222 was a previous low point. That was another low there. That was where things stabilized before we had this earnings push to the upside here. So now we can see that many of our other indicators not terribly helpful in this case where we've had such an extreme gap to the upside. But I will point out RSI is now overbought, typically a sign of strength when a stock is making a trending move here. So be on the lookout for what happens with our moving averages as well. As they start to catch up to price, they could be supportive footholds during downturns here. Finally here, standard deviations help us measure how extreme the move is. So by this measure, we came quite close to 2 standard deviations away from our fair value line, our linear regression line. So that would be the upside boundary perhaps to consider. We don't really have a whole lot of near-term price activity to base our trading on. So around $5, $4.97 is where that indicator comes in. To the downside, our linear regression line could be supportive. I do feel like I would be remiss if I didn't at least show the longer-term chart for this name. It's had a significant decline. They lost their license to produce the NASCAR video games, which was a big blow to them. But it kind of doesn't matter, though. If you're doing it from a momentum perspective or any other viewpoint you have, it can still be a good trade. It all depends on where you get in, where you get out, how you play the trade, etc. I don't hate any trades at all.
All right, right now, this one up 72%, but only trading at 375 for some perspective there for Motorsport Games. Want to thank you both for being with us. Tim Bowen, thanks for always joining us on Fridays. And of course, Rick Ducat, our lead market technician here on Schwab Network. Coming up next, we're going to spotlight Workiva, a cloud platform that just reported earnings and raised its guidance for the full year. We'll be joined by the Chief Strategy Officer next to discuss the company and more. Stay with us.
Sometimes, you know, you could have done better.
It's been kind of a tricky day.
Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m.
Got a snake breakout.
Schwab Network.
Whether you're an experienced investor or just getting
Sometimes
started,
it's best just
Charles
sit it out.
Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Stay connected to what moves the markets.
Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight the cloud platform Workiva. Joining us now is Mike Ross, the Chief Strategy Officer and Head of IR at Workiva. Mike, thank you so much for taking the time to be with us today. If you wouldn't mind starting by just telling our viewers a little bit about your company.
Sure, and first of all, thank you for having me. So Workiva is a cloud platform that operates in the areas of financial reporting, sustainability reporting, and governance, risk, and compliance. Workiva directly connects data, processes, and teams in one secure, audit-ready, intelligent platform that really helps organizations work with their data and delivers trust, transparency, and accountability across their regulatory reporting and risk and compliance processes.
And Mike, you're coming off of another strong quarter, 20+% revenue growth. Can you walk us through some of the highlights from your most recent earnings?
Sure. Yeah. No, we were very pleased with the quarter. We announced on Wednesday. In Q3, we increased our Q3 subscription revenue by 23% compared to Q3 of 2024. Our total revenue was up 21% year over year compared to Q3 of last year. We have a GAAP operating margin and a non-GAAP operating margin. The non-GAAP operating margin was 12.7%, which is up quite significantly from last year.
I don't really care. You've ruined this show, Marley. You've ruined it. So I'm debating if I want to take this shot. It just seems so expensive. I mean, they're not, the more you get closer to the money, they just don't look cheap. God. I tried to make some pizza out of that bread and it didn't work too good. I ate it anyway, but ugh. Well, I kind of like how that price went up on that candle. Like $70, $60 good dollars right there on that one candle. The 6700s, but they're just a little bit too far out of the money. And another knife. We got a double bottom here, 6666. That's the only thing that excites me about this trade right now. Just go for it. Go for it, Jim. Oh. What the heck was that? Someone's out vacuuming my rug. Okay, give it another shot. Come on. Had a new low. I want it bad. I want it bad. You suck. I wouldn't say that. I'm getting ready to get in some calls. Got my hot tea, water, chocolate. $2. Let's go. We got a triple top break past the 50 here. Probably 66, 54, 33. Never heard of circle puts. It's $70 a contract. No. This is a tight market. This is not easy. That one candle lost down $80. I think retail traders are a little nervous right now, trying to scare us. Dad, how come Grandpa doesn't sleep with me anymore? You're freaky looking. Stop with that winking. That there looked like an Erica Kirk hug to her daddy. Dad, how come Grandpa don't sleep with me anymore? He's dead. I'm taking over. Back to 205. I'm in these at 2. The 6700s. I've had one red trade today. Boeing at 192.56, new low. AMD at a triple bottom, quad bottom. Inverse head and shoulders. Apple pulled back. Oh, I'm at 240. Okay, we're back up there again. This time I should sell them and learn my lesson. But if it breaks out, this could be a 100% gain. Scalping the calls, the lotto play, the strike is 6,700, and ooh. Now big old bounce to the 63 EMA. They're at 275. Come on, give me it. Give it! Headline, Democrats cave. Government reopens Monday morning. Just like that, we dropped $70. Tipton, take a break. Boeing new low. Trading View, where'd I get that at? I'll be back in a few.
And I think they'll do a better job than Penn was able to do during the last 2 years.
Well, we appreciate you both being with us to break down DraftKings earnings on the heels of that sharp decline we saw, but now trading up 1% higher. That's Chad Bainan from Macquarie and Zach Waring from CFRA. And I want to thank all of you for joining us today on Trading 360 as well. I'm Marley Kate.
Good riddance.
Download the free Schwab Network app available in the Apple App Store. You can also tune in 24/7 on schwabnetwork.com. I'll be back with Sam Vadas for Market on Close at 3 p.m. Eastern, but stay with us because Fast Market with Diamond T. Hall is coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Yeah.
I'm I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up on noon Eastern at the New York Stock Exchange. And the bears are clawing another slice out of Wall Street today, led by weakness in tech. Let me give you a check of your scorecard as we hit lunchtime. The S&P 500 is under pressure. It is off by more than 1.2% in terms of the weakness. That is being paced by information technology, communication services, and consumer discretionary. Those are the three weakest components of the 11 sectors in the S&P 500. So similar to the weakness we've been seeing all week. The Dow right now off by more than 0.75%. NASDAQ 100 down about 2% right now as the pain trade continues in the tech sector. Russell 2000 small caps losing ground, off by 1.5%. Here's the roadmap for today's show. We'll look at example option strategies for Tesla following the approval of Elon Musk's unprecedented pay package. Plus, the team from Likefolio will be along with new sentiment data on Instacart, and Meta Platforms is also under the microscope today. Now that we've got the roadmap for today's trading action, time to bring in my co-host and trading veterans, Tom White in our Chicago studio, and Kevin Hinks joining live from the CBOE. We've got you covered from exchange to exchange and beyond. All right, guys, let's talk big picture here. Now, today would normally be a jobs report day. We don't have that once again. We did get consumer sentiment. That fell to the lowest level in a few years. Tom, I'm curious your take, and I also want to give some context. I was talking to Jan Hatzius this morning, the senior economist of Goldman, and one of the things he pointed out with the lack of the jobs report is if we don't get that by a certain time, we run the risk of not getting at least one component of that jobs report, because when you need to collect the survey data. So what's your take overall?
Yeah, I think if you would take a look at, just the pullback that we've seen in the market, the S&P 500 breaking that 50-day simple moving average, the consumer sentiment number, I'll throw that out the window. It's politically biased. We all know that. It's kind of reflective that the government shutdown's negatively impacting the psyche of maybe the consumer at this point. This is the second lowest level that we've ever seen in this number. I believe it was 41 months ago in 2022. It was lower at 50 even. But yeah, I'll kind of throw that data point out now on the government shutdown, 38th day record. We need some clarity on this. The Fed needs some data. That's going to be, the reason that we're seeing the implied volatility levels really start to elevate. You got the VIX above the 22 level. But remember this, even though the NASDAQ's down 4.7% this week, S&P's down 3%, you know what? On a valuation basis, when we were hitting all-time highs just over a week ago, everybody thought everything was good. Everything is going to go up higher. And November is typically a really good month for equities. Well, typically we see a lot of volatility in September and October. We didn't see that at all. So it's coming back to bite us a little bit. But you got to start taking a look at the context of where we are and where we've come from, and that parabolic move from those April lows. So maybe a little bit of profit taking is not a bad idea here at this point. We've got those headwinds, whether it's tariff talks, whether it's a government shutdown. So earnings are still good, and I think the concern lies with the consumer right now. I think that's going to probably drive the sentiment that we've seen until we get some resolution to the government shutdown. The weight of the market might be on the consumer, which they've been showing signs of pulling back a little bit.
Okay, yeah. Consumers certainly showing some signs, but not all consumers. And just, Kev, I wanted to just give you a little bit more context too when we think about the jobs report. So Jan was pointing out that the other risk now coming is the November payrolls report, because the reference week when they would collect the survey data for that includes the 12th. So we're coming closer and closer to the 12th. That's next week, right? So we run the risk of maybe not getting a full jobs report, even if the government reopens for November. What's your thought on, you know, kind of the murkiness of all of this?
Yeah, I think, you know, politicians get elected and they don't understand the power that they have over the U.S. economy. The numbers are, I guess, their estimate's about $15 billion a week the U.S. economy is losing. Why? Why are we doing that? Why is this the government shutdown? Believe me, I think that this is, I agree with Tom. The consumer sentiment data that has the sentiment going down, inflation going up, when the market's at or near all-time highs, just every time that comes out like that, it lessens its importance in the market to me. I'm already not a big fan of sentiment data or soft data as it is, and all this does is reinforce why we don't really pay much attention to the consumer sentiment data. Now, I believe the market needs data. Now, we did get the Chicago Fed, led by Austin Goolsbee, did put out an estimate on where unemployment is right now. They think it's 4.36% was the Chicago Fed's estimate. And we can get a lot of data that shows, like challenger job cuts, something we don't normally pay that much attention to, but it jumped off the page actually yesterday when it came out 153,000. So we're getting information, we're just not getting the granular. Remember, the first Friday of every month for my 40-year career has been payrolls day. Payrolls and non-farm, and remember, you got wages data in that, you get a lot of data out of that payrolls number. So yeah, it's a shame that we're doing it. This is 2 now, and then you're right, Diane, once we get to a certain level, you're not gonna be able to trust the November number when it comes out in December. And so the economic data, the good news is information we are getting, like our earnings, are doing extremely well. But I grow more and more frustrated with this process that the financial markets, the most important part of our economy, have to rely on politicians to make these big decisions. It's just very frustrating, Diane.
Definitely, I'm sure a lot of people feeling that frustration, whether we're talking about here operating within the markets, you know, from Main Street to Wall Street. Let's hone in on the tech sector, you guys, and NVIDIA. I mean, when I look across the Mag 7, I'm just seeing a lot of red. NVIDIA under some pressure. Today, Jensen Huang, the CEO, coming out with more comments about its relationship with China, saying just flat out there are no active plans to ship those prized Blackwell chips. Right, so it seems like this matters in terms of investor reaction. It just doesn't help the downbeat sentiment over the tech sector that we've seen all week. Shows NVIDIA down more than 4% right now. Tom, what's your take?
Yeah, that pullback, we're down 15% from all-time highs that we saw just over a week ago. So, you know, getting into sell-off territory here in NVIDIA. And, you know, you take that information that Jensen Huang, they're not going to be selling the Blackwell chip over in China. I think that was kind of on the table already. The information actually came out with a report that the White House is going to block the scaled-down AI chips, so not even the Blackwell chip, those H20s, that they're not going to allow them to sell to China either. So that's causing some headwinds. It seems like that euphoria that we got during the GTC conference just a couple weeks ago is gone from this stock. But the pressure that we've seen from tech in general, that's kind of weighing on NVIDIA also. It was at elevated levels, all-time highs prior to this week, so that's also putting some pressure on it, maybe some profit taking at this point. But you can't argue with the demand and the hyperscaler build out here as far as AI CapEx that all these companies are putting into the mix. And NVIDIA is still the leader in this space. They got 90% of the high-end AI chip sales. And those don't seem to be pulling back at all at this point as far as investments from those hyperscalers.
Kev, what's your take on NVIDIA?
You know, I think that Jensen Huang has got a little more verbal this week with some saying that China's gonna win the AI race and then walking back that statement. And then, listen, we cannot arm the Chinese government with these chips, and now they're coming out. The story is today that even the B-38 chips, when clustered together, used in large clusters, can basically simulate the large language model that they need. So, Jensen Huang has to walk very carefully when he treads near national security, and that's just the way it is, right? He's got plenty of demand for his products here in the United States. I thought it was a little odd how verbal he was this week on some of the concerns. So I think all that does is disrupt the trading. I think his sales are still going to be great. Stock's down, I've got the stock on my chart down 11% in a week. So pretty significant, pretty violent correction here in NVIDIA, and that's not normal for a stock like that. So remember, I think the 5 trillion level was a little over $200. It's back to 180 here, so we're nowhere near 5 trillion now. I think with their earnings coming up on the 19th, I think there'll be a lot of attention given to NVIDIA over the next 2 weeks.
Yeah, great point. And maybe for the believers, this will end up being a buy the dip opportunity. Let's talk about Constellation Energy. You got a mixed report card over there. It is weighing on the stock today. It is down more than 4% right now. This one's been a high flyer. And this is, of course, because of the rising need for nuclear to power AI. Tom, what's your take on its quarterly results and how it's performing today?
Yeah, it's still up 50% so far this year, so it's had a great run. You mentioned the mixed earnings. EPS of 304 versus 312 expected. Q3 revenue came in at 6.57 billion versus 6.55 billion. So basically a meet on that side. They see fiscal year operating EPS 905 to 945 versus 942 expected. So coming in a little bit lighter than that. Remember, they're in talks right now to buy natural gas, Calpine. At this point, so that's still in the works at this point. But then they did come out and they said they see another hyperscale deal before the Q4 earnings call. So before their next earnings call, they expect another big deal to be announced in here. Stock's down about 4% on a day where the market's down over 1%. So maybe just a little bit of profit taking here. But still, the outlook for the amount of energy that's going to be needed to kind of, be there for this AI infrastructure build out is massive, right? And everybody keeps talking about it, that you don't realize how much energy that we're going to need. They're in the nuclear space already, and they're continuing to expand their operations into natural gas and other sources of energy just due to the demand. So maybe the outlook's a little bit good, but pulling back here a little bit, maybe some profit taking.
Okay, Kev, your take on Constellation?
I think this stock has had an incredible run. It's backed off here in the last week or so, but they didn't announce any new deals. And that sounds very petty, but guess what? The market is very petty. And the fact that they didn't announce any shiny new deals, I think I'm disappointed. They tightened up some of the guidance. It looks like, if you do the math, pretty close to in line to what it was before. All they did was kind of tighten it up. So I think all things considered, this is still a company on the forefront of energy, which AI, data centers, they're all going to need energy. Nuclear energy is the obvious long-term choice for clean energy that we have going forward. Even though it's a scary word, it's never been more safe. And I think nuclear energy stocks or stocks like this are still going to be extremely volatile, but the future is moving towards them for sure. But I think the market's reacting to a little bit of no new deals announced by them. The market doesn't like, when they get expectations, they don't like to be disappointed, Diane.
Okay, all right. Thank you, Kevin. We got some breaking news crossing the wires as it relates to Meta. Not sure
Breaking
about
news.
the shares right now. We still see shares under pressure, but Meta making this announcement of a $600 billion investment in American infrastructure and jobs. They talk about industry-leading AI data centers and committing billions through 2028 to support AI technology, infrastructure, and a workforce expansion. Tom, I know we're going to be talking about Meta later in this hour, but I want to get a quick thought from you on this. We see shares trying to recover a bit, but not by much.
Well, it's $7 off of its session lows, so it's having a good little pop here on this new $600 billion by 2028. Their investment to support AI technology and infrastructure. I mean, this is a big deal, but this is what companies are doing. They're coddling up to the administration right now with promises of building out infrastructure. The deregulation that you're seeing in this space has helped a lot of these hyperscalers, Meta Platforms being one. Their stock has been under pressure since earnings due to the fact that they upped their guidance as far as AI infrastructure build-out, CapEx build-out, and the cost related to that, $70 to $72 billion this year. That was a little bit above what the street got from them last quarter. So this is a continuation of these big tech companies going to Washington saying, hey, this is what we're going to do over the next several years. Allow us to get, CEG's probably right in the mix here, right? They're part of the energy discussion with these hyperscalers. They need to build that out. So the deregulation is going to help them. But this is, just kind of, more pounding of the table from some of these big tech companies that, hey, they're here to invest. They're going to continue to grow. They're going to help the U.S. become the leader in AI infrastructure build out. And I think that's what, that's why you're seeing the pop in the stock here.
Okay, all right. Thank you for your reaction to that. Kevin, I want to pivot to the airlines and the flights that are being canceled across the country. You got more than 700 flights canceled amid the ongoing government shutdown. It's not all bleak as it relates to travel because there's still strong demand for Expedia's lines of business. Those shares have been rallying today off the back of its quarterly results. United, you got some pressure here. Delta, you got some pressure here. Those two, along with American, the bulk of these cancellations. What's your take, Kev, when you look across this space, including Expedia?
Yeah, the headlines that they made this morning, American Airlines canceling 220 flights. That's out of 6,200. So it's a hassle for the people involved, but I mean, the promises are for more. United Airlines, fewer than 200 flights, although over Saturday and Sunday they could be down as much as 4%. Delta canceling 170 flights today, so this is a problem that's really not going away, and it's only going to keep getting worse. Listen, we all know what this market needs.
SPX are back at 2.
The government shutdown to stop to get the air traffic controllers. Because the good news, you see it in Expedia's earnings. There's demand for travel. People want to travel and are trying to travel. What's not happening is the ability and the waits. And these waits, if we get close to Thanksgiving, people aren't gonna. You know what's the news is? Rental cars are spiking. Why? People are gonna drive. People want to travel. Employed U.S. consumers want to travel, but they have to have the means, or they have to have the ability to travel. So, listen, all this, this market sell-off, all this is solved by one thing: open the government, Diane.
Oh, that's a great point.
Open the government.
People would rather have it open sooner rather than later. All right, great.
Well, why is it reacting just lately?
Bear coming up. The guys get their example trades put together for Tesla after shareholders voted in favor of a new massive pay package. We'll be right back.
Thanks, Patrick.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Back up.
Sometimes, you know,
My SPXs are now 220,
you could
35.
have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. A
260.
green light from Tesla shareholders. Stakeholders overwhelmingly approved a first of its kind $1 trillion pay package for CEO Elon Musk. More than 75% of the votes were cast in favor of the massive pay package.
Very good.
The agreement clears the road for Musk to potentially
I have
become
no
the
issue with
first
it.
ever trillionaire, provided he meets certain milestones. Among those, re-energize its car business and increase market value. All right, let's put on the trading glasses now. Welcome back in our co-host Tom White and Kevin Hinks. It is bull versus bear time. Before we get to your example trades, we've got to talk about your take on this green light from shareholders for this massive compensation package. Kev, I'll start with you, and I'll start it with this. Rick Ducat says the first trillion is always the hardest. What's your take?
$1 trillion is just not what it used to be, Diane. You know that. But this pay package that a lot of people feel is unattainable, but they thought the last pay package was unattainable. But think about this: the size of Tesla will have to be 2 apples. Apple started the day 3.99 trillion in terms of market share. It would have to be more than 2 apples. He'll have to sell 1 million robo-taxis and 1 million robots and 12 million vehicles. I mean, that was a big, shiny, sexy headline, right? But some of the other little things he talked about, remember, whenever we talk about Tesla, I always talk about what's in the pipeline of Tesla, right? And talking about something to do with doing something with Intel, talking about a SpaceX IPO and allowing Tesla shareholders to participate. He talked about a lot of little things that really sparked a lot of interest. Now, the stock is down with the rest of the market today, although it was weak yesterday as well. But think about where Tesla stock has to trade to be worth $8.5 trillion. Just think of the wealth it will create among investors that are. It's hard to wrap your mind around it, Diane. But all I can tell you is this, in a nutshell: bet against Elon Musk at your own peril.
Oh, that's a great point. Bet against Elon Musk at your own peril. Because, look, that's
They're
fair.
now at $3.
But at the same time, you really have to brace yourself if you're an investor as it comes to Tesla, because it can be very volatile, especially, when the critics are loud around it at times. Tom, what's your take before we get to the example trades?
Reminds me of an old 80s song, Promises, Promises. That's what, Elon Musk does. He comes out with these bold statements. He's going to have 1 million robots. He's going to start mass production of the robotaxi, the Cybercab in April. It's going to take time. I think the key thing, why it probably passed, a lot of retail investors.
This guy's something else.
To be leading this company.
You don't like Elon.
Tranches that are going to get paid out based on, production, right? And hitting goals. Well, we all know he sets a lot of goals. He rarely hits them lately. His first package, he hit those. But at the same time, this is a little bit different because
No, it
there's
ain't.
different areas within his company, whether it's the robots, whether it's the cybercabs, whether it's productions of more EVs at this point. So he's got to meet those goals. So it's based on what he does for the company.
I'll tell you
So
what.
that's the good part
Schwab
of it.
has got, ever since they hired Marley, or ever since she showed her ass on here, this channel ain't the same anymore. And it kind of depresses me. I want Caroline back. How dare you talk bad about Elon? Do you ever talk good about him when the stock's up?
I think it's so loud here, but I think you're talking to me, Diane. So
It's so loud here, he says.
the one question I would ask Elon Musk if I ever got to interview him, what do you see that makes you agree to that pay package? He must see something. That's what I want to hear from him. So along with that kind of a theory, the trade that I looked at for Tesla is a 2-week long call diagonal. Buying the November 28th 4:30 call, which is, it was at the money for a little while. Yeah, it's pretty much right at the money. And then selling the November 14th, next Friday, 460 call. The expected move out to next Friday, right at $31.60. So you've got your short strike right in line with where the stock is projected to be if it goes higher. It could also go lower or somewhere in the middle, but that helps us with our strike selection. So the 2-week 430, 460 call diagonal, the debit was about 1825. It's about 1840, pretty close to right where it was, Diane and Tom. So Tom, this one collects data, it's risk defined, but as you know, it's a $30 call diagonal in line with the expected move. And these are some bigger numbers in Tesla, Tom.
Yeah, definitely. This is a bullish example trade here. We've got a few weeks until expiration on your long option. November 28th, weekly options. Buying the 430 strike call, basically at the money as Kevin mentioned. And then selling the near-term November 14th weekly options that expire in 7 days, the 460 call. Bullish $30 wide call diagonal. Paying roughly $18.25 debit for it. There's your risk.
We're at the orb. This is an exit idea.
That this stock go.
SPX. That floor was getting pretty loud there. Back to $2. Huge depreciation.
peak out, right? The call vertical would go to 5, and the short call vertical would go to 0, and you'd max out there. The risk is definitely on the upside, Tom, but you do get the benefit of that call vertical going to $5 before you start getting hurt on the short call vertical. So if you don't lose as much money as you would think on a $25 call vertical, so because you make about $8 or so, $8.50 on the credit plus the long call vertical. But yeah, this is one that collects theta, and all you want is for it to sit here, maybe go up a little or go down, Tom, and have everything go to 0.
Break even, about a 75% chance that break even is going to be out of the money at expiration, which is what you want on this type of neutral to bearish trade. So there it is, Diane. Bull bear debate continues here in Tesla.
Bear debate is on over that one. Coming up, cash tags. The team from Lightfolio will be along with new sentiment data on Instacart ahead of its earnings. They'll come on Monday. Stay right here on Schwab Network. Fast Market. We'll be back after this break.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest.
I'm his mom.
Level up and invest smarter with Schwab.
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. Taking a look at Instacart, Maple Bear. For that, let's bring in our next guest. That is Megan Brantley, Vice President of Research at Lightfolio. Megan, throughout this week we've talked about DoorDash. We've looked at recently at Uber, which obviously includes Uber Eats as well. So now our eye is on Instacart, especially given they've got earnings coming up on Monday. Shares are higher today and really a sea of red. But it's been an underperformer year to date. What does your data tell you about how it stacks up against competitors?
Yeah, when we look at Instacart, stock, as you mentioned, is down about 14% year to date. Last quarter was actually a really nice report. I think the company beat on earnings and revenue. Stock initially jumped, but has given back a lot of those gains. And when we look at where data stacks up comparatively in the delivery space at large, we've got a bit of a mixed bag this quarter for Instacart. I will say, it's tough to make a comparison of Instacart versus DoorDash versus Grubhub versus Uber Eats, partially because it's now partnering with Uber Eats, but also because it really specializes in groceries. It really specializes in those big ticket items. But when we look at just the momentum at large, you can see Instacart, that demand has shifted lower by about 4% year over year. So a bit of a loss of momentum from last quarter, but some of this you could argue that may be priced in with the stock pullback that we're seeing right now. And I will say that this is typically a bit of an off season whenever we look at where Instacart sits now. If you think about right around the corner, we have essentially the Super Bowl of grocery shopping, right? We've got the highest date activity that is traditionally recorded, at least in our data, for a company like Instacart, which is Thanksgiving. And so we're starting to see things tick up. We saw a nice little pop on around Halloween. So I think that we're starting to see some momentum build for Instacart, but for the current quarter, we had a bit of a loss of momentum. And when you look at how the market reacted to reports like DoorDash, where our data from the consumer perspective looked really strong, our data even for Uber from the consumer perspective looked very strong, and we saw a little bit of uncertainty there. So I think that expectations, even though the bar appears low, they may be higher than we would typically expect. And so we are actually, heading into this with a bit of a neutral front just because of that mixed bag, but we are optimistic long term because we think Instacart has carved out a really nice space for itself in grocery with those larger ticket baskets versus peers like an Uber Eats, like a DoorDash.
Megan, it seems like, everything's getting a little bit bifurcated. DoorDash had a pretty good report, but they gave a little bit lighter guidance. Their costs went up because of investments that they've made. But with Instacart, it just seems like the underperformance is probably, because partnerships that they have, those partnerships and Kroger and Amazon actually doing free delivery now for their Whole Foods brands and, their own in-house brands. The competition in this space is really dire at this point. They're supposed to grow revenue, they're supposed to grow EPS, but when you look at guidance moving forward and the consumer getting stretched a little bit, are you guys seeing the data that just kind of makes maybe these delivery companies?
Okay, I was asked about Amazon on YouTube.
I think that it's interesting because if you look at the chart where I showed you the kind of the year-over-year change in consumers kind of leveraging these tools, we see some
Here you
nice
go,
momentum
Bobby.
in DoorDash. We see nice momentum in Uber Eats. We still see consumers
Well,
reaching.
I've got a support here. I'm gonna see where it comes from.
Basket sizes are getting smaller. I think Instacart even noted that on its last report that while orders were up, the actual size of those baskets were lower, partially because it lowered its bar for the Instacart.
It's not on
orders
that.
Will deliver up to a $10 order. So that's something to certainly keep in mind because really where the profit is made, and Instacart kind of highlighted this, is when baskets exceed $75. And so when you have those bigger items that you're shopping for, and that's why we like to look on these big holidays for these big grocery drivers. And we did see a bit of a pop on Labor Day. We saw a bit of a pop on Halloween.
Well, we pulled back to support
large,
level.
The quarter just
That's
showed
for
a
sure.
little bit lacking momentum versus prior quarters. So it's going to be really interesting as we head into the future. What Instacart
I'm gonna
has to
download
say
this,
about the health
re-download
of
this
the
thing, see if I can get it
consumer,
better.
certainly, but I think from a sentiment perspective, which is another angle that we can kind of give some insight into, Instacart also is higher versus peers. Consumers like Instacart. They like the shopping experience. Whenever we look at our long-term gauge, we have an earnings score, but we also have kind of like a long-term heat score that actually trends bullish, partially because of the experience that consumers feel like they receive whenever they shop with Instacart. And they seem to be reporting faster
Around
delivery times and things of that
238.50
nature. So from a long-term perspective,
is a support level for
the
sure.
health of the consumer, the health of the Instacart consumer for us looks
And
nice.
we're just off 1 penny
Near
off
term,
of that.
As you mentioned, there certainly is some strain on the consumer.
On the
and,
280, so let's look at the
A
hour.
bit of uncertainty even on our end heading into this report.
Megan, let me ask you this, and I'm curious to know if other consumers have a habit like I have. I go in and out with Instacart.
Yeah, I'd say that's a
I don't
major
have it to
support
be,
level.
Something I need all the time.
238.51. If not, we could probably see
And the reason I go in and out with
232.
it's because
Another $6 dip.
For like if I'm sick and I need to have something get to me,
And that
like
should hold.
medicine, food,
If the
oranges,
sell-off continues.
whatever, and then I'm like, okay, I don't need it anymore. I just needed somebody.
So I'd say
to get something from the drugstore to
232.83
me.
to
How much of the
238.51.
consumer base, or how much insight do you have about
That double
kind of,
top
I guess,
break.
bumpiness in the consumer and how they sign up?
Yeah, I think that one thing that we can track are these mentions of the Instacart membership. I think that's like a really sticky indicator because once you splurge for a membership, you're more likely to use it. That's why all of these companies are clamoring for the membership, not only for the recurring revenue, but also because then you're more likely to do a repeat order. We do have some positive traction for Instacart, at least at the overall membership level. So I think that that could be a positive sign for the company, that it's proving that it can continue to grow its membership base. I think kind of dropping that level, that
That's what
barrier
I'd
to entry
say.
to say, okay, yeah, if you're a member now, we'll deliver an even smaller basket size is certainly
It should be a
enticing
Christmas
to jump
play.
on, but could
It
weigh
had a
on
big bounce
near-term
off earnings.
profitability. So I think that, you know, for us, on a consumer sentiment perspective, Instacart looks really healthy, but on a demand perspective,
You see what happens when you put the Fibonacci on that earnings.
so guidance, I think, is going to be critical, which for Instacart, it's heading into perhaps the busiest season of its year. So certainly be interesting to watch over the next few weeks. But us, for this earnings event at least, we are sidelined. Our signal is neutral. If you look at that web demand chart with the stock chart, the two are converging nearly perfectly right now. So,
So
we
we
don't
went
have
below.
a clear edge, bullish or bearish on this one. But I will say long term, you know, this is a
Yeah,
that
I don't
if we do
know.
see a pullback, while we are watching competition
It's not matching
from
up
the
too
likes
good
of
with
DoorDash,
that.
from Walmart, from Amazon, as Tom said, Instacart, in our data at least,
I'd
still
stick with
appears
that.
to be
238.51 and
sentiment, and that tends to be the
232.40,
longest
83.
term indicator of bullish success. So I would say that, you know, we're cautious near term, but long term, at least for right now, we are bullish because Instacart seems to be making its consumers very happy.
All right. Thank you, Megan. That's Megan Brantley, Vice President of Research at Likefolio. Appreciate the insight there. Now, for the trading perspective on all things Instacart, I'm going to yield the floor to you, Tom. Let's get Kevin back in here. Tom, I know you have a final thought on the data from Likefolio before you guys get to the example trade.
Yeah, and just like Megan mentioned, 25% of Instacart's gross orders now have partnerships with Amazon, DoorDash, and Uber. That's not going to be good maybe going into this report. I think it's going to be about guidance. I did mention they're supposed to grow EPS by 19% year over year. Revenue is supposed to be up about nearly 10% from year ago level. So they're probably going to give good numbers. I think it's going to be based on guidance. But Kevin, I was looking at the chart in Instacart, Maple Bear, as it's called. It's bounced off the 35 level repeatedly over the last 10 months or so. That's been a big base for this stock. The option market pricing in about a plus or minus 83 cents. Either way, on a percentage basis, I guess it's something, or that's just for today. Next week, about $4.10. How do you want to look at this one from an example trade?
Tom, for our viewers, I want to start with two words: price discovery. The markets on this are wide. Tom, here's a stat that I don't think I've ever thought.
Check my phone.
If you look on today's option stats, about 2/3 of the way down the page on the Thinkorswim platform, the percentage of puts that trade in between the bid asks, I mean not in the bid, 92%, Tom, trade in between the markets. I don't think I've ever seen something so incredible. So the bid ask are wide, and you really got to use price discovery. So what does that mean? That means put a limit order in where you would want to buy it and don't move it. And leave it there, and if you don't get filled, then it's not meant to be. So, Tom, what I looked at is just a 1 week, 32 put calendar in Cart or Maple Bear. And I looked at it, it's trading about 15 cents. It's looking mid-market, but it's all over the board. Now it's 10 cents. It was 60 cents a few minutes ago. The markets are incredibly wide. So, but this is, you know, the expected move for next week is about, it was 390. Now it's a little higher. I think it's up to 410. Yeah, 408. So that takes you, maybe you want to do the 31 strike if you're bearish, or the 39 strike. This is the 32 as the stock was a little higher, Tom, but very low net debit on this trade, Tom. I don't know if you can get it on or not. The markets are not terribly liquid, so make sure you use price discovery.
Yeah, let's break this one down. Giving yourself downside exposure in case the stock falls, kind of like what DoorDash did, for inexpensive, right? So if you pay 15-cent debit for it, that's your risk. $15 per spread on this. But let's break it down. November 21st, monthly options that expire in 14 days. Buy the 32 strike put. Sell that same 32 put in the November 14th weekly options that expire in 7 days, where you're going to capture that earnings. Sell that same 32 put, 1 week wide 32 strike put calendar to the downside. You're paying 15-cent debit, 15 bucks in risk. Now you got a range probably between about 29 and 35 for this to be profitable on this. And it looks great because the profitability looks like you can make over $100 per spread. But remember, the option that you're buying will fall also on the vol crush post earnings on Monday morning. So keep that in mind. But this is just an inexpensive way, taking advantage of that vol dispersion that we talk about, where you're buying a lower vol, selling a higher vol due to that event risk. But it gives you downside exposure, about that 1 standard deviation that the option market's pricing in. On Cart or Maple Bear, Diane, for some downside exposure, it needs to break through this 35 level that's been a big area of support over the last 10 months.
All right, thanks, guys. Coming up, the breakdown, we are taking a look at Meta Platforms. That stock is under more pressure today. We'll be right back.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live on the floor of the big board. Before we get to the breakdown, let me give you a check on where your markets are at this hour. We are still seeing pressure across the board. The S&P 500 down more than 1%, down lower by more than 0.5%. NASDAQ 100 bearing the brunt of the losses in today's session, down almost 1 3/4%, but off the lows of the session, if you will. Russell 2000 down by more than 1% at the moment. Meta continues to be plagued with headaches, sending the stock lower once again today. According to a Reuters report, the company relied on numbers showing that about 10% of its annual revenue would come from running ads for scams and banned goods. A former Meta safety investigator highlighted in the report says Meta's acceptance of suspicious revenue puts the spotlight on a lack of regulatory oversight. Time now for the breakdown. For that, let's welcome in Sam Vadas for a deeper look at Meta. All right, so Meta also put out a press release today saying they're going to make a big investment. So you've got shifting sands around it. What's your take?
I mean, look, let's start with that because it is the breaking news just in the last hour, as you mentioned. And it looks like very much Meta seems to be trying to reassure investors out there about some of the concerns that they have. It's been coming out to say, according to a statement just in the last hour or so, that we're investing $600 billion in American infrastructure and jobs, including industry-leading AI data centers. Obviously, we've seen this big push as part of Meta's sort of super intelligence group, and also, it's a huge amount of capex that's been throwing out there to really delve and make its foray into this side of the equation. But it's interesting timing that it's come out with such a statement like this, Diane, which I'm sure you mentioned at the top of the show, when we have very much seen shares under pressure. Now, suffice to say, we are seeing a lot of pressure across the board today for mega cap tech, and that has certainly been the case for most of the week as we start to see these AI valuation type of concerns creeping into the conversation, a bit of froth coming off the top perhaps, certainly a rotation into more of a defensive and cyclical type of trade today, but no doubt trying to reassure investors, as you mentioned, as we have seen very much this Reuters report shining a spotlight on some of the regulatory concerns here around fraudulent ads. Now, let's just keep in mind here as the sort of caveat that Meta does rake in a lot of its revenue from advertising. And so, when you come out with the headlines like this, no doubt people are paying attention. Let me just read you a couple of perhaps the cliff notes from this report, because it is a huge investigation that Reuters has broken here. They're projecting 10% or $16 billion of its 2024 revenue could have come from ads or scams of banned goods. Internally, these estimates are showing that its platforms have showed users 15 billion scam ads per day. So, I mean, you and I could have seen some of these. Who knows, Diane?
Probably
But,
did.
you know, for at least 3 years, they're claiming they failed to identify and stop an avalanche of ads here. And they go on to say that fraud does get detected by Meta's internal systems, but only bands that the system thinks are at least 95% sure to be committing fraud. The others, which they're not too certain about, they actually tell them to pay a higher price to try to dissuade suspect advertisers from placing those ads. That's the interesting part. But I would just take a step back and say, of all the
Starbucks is up today.
so far, Diane, this got punished the most after earnings.
did.
And this is obviously because this is a margin story. There is this thinking out there that right now the Google, the Microsofts have better spending discipline, particularly because they have more advanced AI partnerships as well. Microsoft and Google have the cloud revenue, but Meta does pull a lot of and generate a lot of its revenue through those ads. So as I said, no doubt a concern when you're talking about that. But you know, as we see this pullback, a lot of analysts have actually been saying today, as we've seen the sort of tech wreck that people have been referring to, that maybe it's a healthy line of questioning that you know, investors are wanting to show proof of all this spend right now.
Yeah, absolutely. And even with the news about the spend and the investment in infrastructure and jobs, right
Chipotle
now, it
new
seems like
low.
the market is taking it as a punishment cycle, not a winning cycle. We'll see if that, you know, page flips again back to where this is actually seen as a good thing. So, all right, let's put a pin in that. Thank you, Sam. That's Sam Vadas with the breakdown on Meta platforms today. All right, let's get Tom and Kevin back in here. So, Tom, you've got the example trade in Meta platforms. And, you know, it's interesting that we have all these things swirling around it, one good, one not so good. What's your approach here?
Yeah, we got the bonus package today because we were going to talk Meta anyway before this news came out on the stock, and now it's about 6
SPX is down again.
The session low for this stock, but it's still down nearly 24% so far from those recent all-time highs that we saw a couple months ago.
Got a head and shoulders.
Back to those earnings, which were good earnings, right? They saw solid growth across all their
Solid
metrics,
head and shoulders.
including you know, the over 3.5 billion daily active users across their platforms, and then ad revenue continues to surge, right? Because they have the eyeballs, so that's where people are going to advertise. But the stock is now in bear market territory, below its 200-day moving
Every
average
time it
for
drops,
the
it
first
just
time since early
you get closer
May.
to the money, it doesn't help.
And it's you know, oversold on a technical basis.
This is a weird one.
That's kind of why I wanted to talk about this stock, because the RSI on it's down to 23. So I looked at a strategy in here where the current IV percentile is still below the 30% level. So we're in the bottom 1/3 of what implied
water.
volatility levels have been over the last 50
Just had me a little hamburger.
So I looked at a strategy that takes advantage of upside if you think the stock's going to rebound, because it is in bear market territory and oversold on a technical basis. So I went out 4 weeks. December 5th, weekly options that expire in 28 days. I'm going to buy the in the money 600 strike call and then sell against it the 650 strike call. So a bullish $50 wide call vertical. You're going to pay roughly, I've got $18.50 debit on it. That's where it was trading earlier. It's trading closer to 19 bucks now because the stock has popped on the back of that news. But if you pay an $18.50 debit, $18.50
I'm going to go get
risk
my water,
per spread
come
that
back.
can expand to $50 if we go back above the 650 level in this stock over the next 28 days. Break even.
There was something that I looked at
16.50 to the
yesterday
upside.
on a weekly
That's only
time
about
frame.
11,
I forgot what
12
indice
above
it
the current share
was.
price. Kevin, give me your thoughts here on the bullish call vertical. You know, you're
Anybody
offsetting some of the
remember?
costs on it, but it's still one of those trades you need to move to the upside. You need the stock to rebound a little bit.
Bullish play, giving yourself about 28 long deltas. So it's a bit chunky.
You having a
in
bad
terms
day
of
again?
The premiums, but you've got a chance if Meta were just to recover slightly. Remember, it was trading 750 when the earnings came out, Tom. If it gets to 650, you make 150% on your money if you buy it under $20. So pretty solid return if you're right, Tom, as you know.
Yeah, that break even we've got up there, $618.50, $619 if you pay $19. That's only about 2% above the current share price in there. The idea here is the 600 strike call, slightly in the money. It's got the higher delta. This has got a big delta on it. But at the same time, with only a 2% move needed, giving yourself 28 days. And because you're buying this, it gives you that flexibility, Diane, where, hey, I don't have to wait 28 days to get out of this trade and hope it's trading 650. If I get that move to 625, 635 over the next couple of weeks, I can close this early if the market's open also, so it gives you that flexibility.
Okay, so the flexibility where you don't have to wait almost a month to get out of it. Thank you. Good stuff, guys. That is going to do it for us today on Fast Market. Happy Friday, everyone. I'm Diane Kinghall alongside Kevin Hinks and Tom White. Download the Schwab Network app. It's in the App Store. Tune in 24/7 on schwabnetwork.com. Stick around. You've got Next Gen Investing coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Nice little bounce back.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time
It's
coverage
Tesla here.
right from the floor. Subscribe now at schwabnetwork.com.
Well, I'm thinking support's right around 417. 418, somewhere in there, 418, 419. For Tesla.
I'm Jenny Horn alongside Alex Coffey, and as we do check in on markets, we've been in pretty much a sluggish session all day as we've seen weakness that has sort of lingered around actually these current levels, with S&P is down just shy of 1%, and then we also do see the Dow
David
down
Goose
about
says
0.5%. The
buy
Nasdaq
has
picked
to
up
break
some of that
those
pressure
200s.
today, down now 1.5%. The Russell down just shy of 1%, but what this does
Break
mark
the
is a pretty
VWAP at
monumental
least.
week because we're closing out a week lower, which I believe is the first time in quite some time we've been able to say that.
Yeah,
if it breaks the VWAP, you might have a chance.
Turnaround, which you could never say impossible, but maybe less and less likely with just 3 hours till the closing bell. But
it's on its
make
way.
sure we leave the door open just in case. That said, we were making it looks like a run at the lows just about 10 minutes ago, but a nice little intraday pop off those levels. We're about 20 points higher than where we jerked.
You got a double top right here.
About, I don't know, 10 minutes ago. So
you went from 80 to 235
right
to 6700s.
NASDAQ down 1.5%, the NASDAQ 100, that is. And a lot of this comes down to...
There's a 200 EMA right there on the SPX. And we're back at the orb.
Jenny, even though Apple tried to stage a rally earlier, was unable to hold on to that green candle.
Can it break it this time is the question.
About 2% today. And we've talked about that correlation basically being
the SPX.
1.98 over the last 3 months. Doesn't hurt that over 50% of the names are higher in the S&P 500, but it hurts bad that 7 of 7 Mag 7 are down.
It does, and it hurts bad that NVIDIA is, pacing for a pretty substantial repricing to the downside this week. NVIDIA has, of course, been a huge, really read and point of strength for the overall market, but now contracting about 9.7% on a week-to-date basis, and off of those highs that we made. Just at the really end of October, we're down now about 14% from those levels. So I think that speaks to the broader market weakness we've seen throughout the week. But we'll dive through all of the various NVIDIA headlines throughout this show today. Really, when we kick things off, we'll dive into some of these earnings movers as well as recap some of the biggest headlines for NVIDIA of the week. We will also then dive into 2 of our Mag 7 names, which are looking less than magnificent as of late. Meta has plummeted about 17% from Wednesday's close last week. Microsoft is now down for 8 straight sessions. So we'll be diving into the technicals on those names, as well as really diving into Tesla, as we have seen shareholders approve, of course, that $1 trillion pay package for CEO Elon Musk, as well as really discussing some broader trends we're seeing in right now these more, I'd say, new age era of aviation, Archer Aviation tanking after they did see a
personal taxes are due.
That were a pretty mixed picture showing the expense right now of growth.
Yeah, no George Tillis today, but in spirit, I'm sure. As I know we normally talk Joby, so I don't feel as bad. We're talking Archer.
I was thinking the same, that it's a good day to pivot away from George because he's our Joby guy.
Yeah, he's chief Joby correspondent. Jokes aside, those names, hey, that's a risk he's highlighted, potentially dilution of shares. But let's get some of our movers. There is some green on the screen here around earnings. We'll start with it. In the case of Expedia, basically making its last month of trade today, up almost 20% over the last month, almost 18% today.
Yeah, talk about an optimistic note to start on. We're up almost 18% today in Expedia shares, as we did see earnings were pretty broadly ahead of expectations Thursday after the close. Also, very important is they did signal that travel demand remains to be strong, and not just for richer customers. So they reported a 12% increase in gross bookings, 9% rise in revenue. Booked room nights also climbed around 11%. That was the fastest growth rate in the United States in more than 3 years. And they did say this reflects an improved demand environment, disciplined execution, and real progress on some of their strategic priorities. Their business-to-business segment delivered standout performance with 26% growth. Business-to-consumer bookings rose more modestly, but still 7%. And this strong performance was really in the Expedia brand, which drove about a 15% rise in hotel reservations, plus repurchasing $451 million in shares in the quarter and declaring a 40-cent per share dividend payable on December 11th. So I think that right now you see so much of the travel really demand and really strength led by such a niche and very, I'd say, a more so insulated consumer, that being the more high-income consumer. We've heard it from cruise lines, we've heard it from airlines, we see it from hotels. But they gave a bit of a different tone, saying that across the board they're seeing this demand. They didn't really give the specifics, but I think that was also really encouraging.
Yeah, I think it was seen as just better than the space. Like, you can be in a category that is showing weakness and be an outperformer, and sometimes that's, more than enough. This is a stock that, I think the performance around earnings gives credence to that. Over the last year and a half, so 6 quarters, it's been up, 5 of 6 times, and 3 of those times have been over 10%, with 2 of them over 17%. So really, really nice report out of Expedia, and a bright spot on a day where there wasn't a lot of them.
It's very true. There was not a lot of moves to the upside on the heels of earnings this week.
At least not this big.
Yeah, at least not this big, and at least not, I would say also this week, we could say safely. And now now we're seeing Block as our next name. I'm diving into all things Airbnb because that name is actually reversed its earlier strength. But Block today is one where we are seeing shares having fallen as much as 10% this morning after actually missing on its top and bottom lines. But now we've eased off of lows by a bit. Still a pretty brutal day. All things considered, revenue saw a 2% increase year over year. Missed estimates, though. Adjusted earnings also did miss those forecasts. And Cash App, again, though, did the heavy lifting, really, for the quarter. We saw gross profit jump 24% year over year. That was a pretty sharp acceleration from the 16% last quarter, driven by this 21 basis point rise in monetization and a 134% surge in borrow originations. Monthly transaction actives also ticked up to 58 million after 6 flat quarters. And primary banking users did hit around 8.3 million in September, with another 400,000 added in just October alone. So all that to be said, the most interesting part of this entire report, maybe just from like a personal interest standpoint, is that they reported their G&A costs rose 14% on a GAAP basis. This was driven by a one-time $68 million company event. And so that, if you strip that out, it would have been basically like breaking even with last year. But if you consider their employee headcount, which was roughly 11,300 through the end of last year, that totals out to be around $6,000 a head. That is some company party that I have tried to find details on. I wanted to see like visuals. Can't find it, but I'm fascinated by this.
Yeah, analysts weren't super fascinated with it. They thought that was a little bit flippant with the spending, and I saw some, call that out specifically. But Cash App was strong, not enough though, and some of it due to that one-time event as you talked about. Let's talk Affirm. This stock's going in the right direction in terms of to the upside here. Impressive numbers out of a company that I think has got its fair share of doubters.
I know, and I do have a bit of a skeptic look on Affirm because to me, if you're utilizing buy now, pay later, if you're utilizing these ways in which to like recredit your purchases, that to me does not signal consumer strength. I mean, this is a company where you would be outright making the purchase in full if you had that. I mean, maybe it's just my own experience, but if you had that cash available, so it's not like this is like you could build credit. I mean, it's just a different type of company. I think that worrisome that they're actually doing so well. But logging a strong fiscal first quarter with what had been deemed as a pretty much all-around beat by the street. They did raise their 2026 outlook.
Come on, break the 200. I beg you.
As they now expect GMV to reach more than 47 billion. That was up from the 46 billion expected. And they also did guide for adjusted operating margins that improved by about 1% from last year, 27.1%.
This could be it.
And the street did applaud.
It's kind of itching its way across.
GMV growth, which again rose more than 42% from last
year. No, not yet.
And driving a lot of the enthusiasm was its 0% APR product, as well as its Affirm branded debit card, and expanding partnerships with these various payment service providers. The CEO did also say they have not seen a slowdown or degradation in consumer spending or consumer habits across the board. But again, I think that
coin bouncing.
A surge in Affirm, it's saying that you're basically making purchases that you cannot afford at that given time.
Well, maybe. I guess how I look at this is, hey, credit is good until it isn't. This is just, I think, objectively seen as lower quality credit. So if you do start to see the net charge-offs and things start to balloon at a company like Affirm in this buy now, pay later sort of almost layaway 2.0 type of a space, perhaps that's indicative of financial stress. I don't know that we're seeing that yet, though, just to be fair.
No, then that's a good point. Also, like it's more of just my general take on like the consumer habits. But I mean, to their point, they are continuing to be a very strong company. And from like a stock perspective, we're up 7% today. This is a clear win for Affirm, which has not always been such a winner on the back of earnings, as we've seen some volatility several times over the last several quarters to the downside. Now, last name today, not an earnings mover, but we said the same thing last week, Alex. It might as well have been. I mean, we're up or down, 2.5% today, fueling some significant repricing in NVIDIA shares, and a lot of this tied to CEO Jensen Huang saying that the company has no immediate plans to sell its Blackwell chips to China. He did say it's up to China, but the Trump administration has so far blocked the sale of these chips to the country, citing potential military and industrial advantages to that nation. On Friday, we did also see Wang clarify his comments, which
finish the day off good.
That China could win the AI race. He went on to say that's not what he said, and what I said that was China has very good AI technology. They have many AI researchers. So he's just clarifying that they're not winning the AI arms race. But it does come shortly after the Trump administration reportedly to decide to block NVIDIA's sale of its latest scaled down AI chips to China,
Jenny's back.
which was seen as a response
I
to
can
Wong's
handle her.
warning that Beijing could surpass the U.S. in terms of the AI race. But they have been permitted to sell those H20 chips in China. Wong has repeatedly noted the country has no interest in NVIDIA's products, and that leaves them with little to no share right now in China's advanced AI market. But as we've talked about several times throughout the last several months, they've given guidance that does not include at all any benefit or impact from China. So I feel like any easing relationship there would be a huge win for NVIDIA if they do then continue on their plans to sell various more advanced chips in the nation. So a lot hangs on the geopolitical fray, which has been the story for several weeks now.
So while you were going through that, I decided to just do a quick little check. This company has lost about $700 billion from its highs. And
should I sell it?
Okay, it's hard for me to say. In the top 20 is Oracle in terms of market cap. Oracle, the total value of Oracle is $670 billion. So it's lost all of the value of Oracle just since the highs, and Oracle is in the top 20 for sure, biggest companies on the planet.
And see, that goes to show, and I think that that's everyone's fear of like, yes, you've become this massive, I mean, 5 trillion at your peak now, 4.5 trillion. So we're almost back down to levels before we
Let's even think OpenAI. This is all the rage. It's the most exciting thing. Weren't we just celebrating that this company got a $500 billion, valuation on its most recent round of funding? Well, NVIDIA just lost that, and then take it another 40% higher just since the highs. And I know there's been some headlines, but not really.
I mean, it's ridiculous, but that's the risk of being so massive is like the harder you fall. And I feel like you do see that in real time and weighing on the overall market. On, again, no massive shift from the company. We haven't gotten like a fundamental update. We haven't gotten an earnings release. We haven't seen anything change outside of course, GTC last week, which was actually a pretty big positive, of course, for shares. So bit of a
Is
pause.
it still higher than where it was post GTC, or is it about back to where it was?
I would say it's about back to where it was. Yeah,
okay,
because
so hey, fought it to a draw. That's okay.
Yeah, that is okay. And, hey, there's always opportunities when you see some of these pullbacks, as we've heard from like pretty much every guest on the network over the last several days. There's always areas of opportunity when you see this weakness, especially for a real leader of this market, which has still been NVIDIA. So we'll be watching, of course, how things work out over the weekend, and if we see any developments from the ongoing administration as well as from China. We'll leave it there now for the top of our show today. Coming up next, though, we'll talk to NVIDIA's Mag 7 peers. We'll be diving into the technicals and Meta platforms as well as Microsoft, both seeing some weakness and both expecting to close this week.
I'm gonna look out and check the mail, and I'll be right back. Need to get in it. Do. We're above the 200 now. That's a good sign.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab. Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Chartmaster here on Next Gen Investing, and let's dive into two of our Mag 7 names now, as we've seen a pretty substantial pullback, specifically in Meta here following its earnings, of course, released last week. So Meta, Rick Ducat, our Chartmaster himself, Meta has been really in a point of pain ever since last Wednesday, I guess, but also seeing some pressure that has really been since we peaked out. So walk us through the latest here from a technical standpoint.
Yeah, certainly a difficult move during the past couple of weeks here. We can see that our problems began at this point here, where we had a significant gap downward here. The low point there came in around 740. Now price has retreated near some of these old areas of interest that we've seen here around the 600 level. So we filled this relatively smaller gap here compared to some of the other ones we've seen on this chart. Now the question is, will this be a supportive point that now the bulls can establish a foothold? So if we were to look at some of our other studies, as well as some of our horizontal support and resistance lines, we can see that that 620 level stood out here. It was a notable low point after we had our gap up. That has since been breached today. That was about where we bottomed out yesterday, but the bulls were not able to hold on. So now that we've closed that gap, the next possible area to be on the lookout for, 570.50, was the low point after we had another gap up here. So now we're getting into some more familiar territory in terms of our price activity, unfortunately for the bulls. We have crossed below our purple 252-day exponential moving average. That's our long-term moving average, the most significant one, the most important, that it's been breached and is starting to turn from an upward slope to a downward slope, a sign of potential trend change. Our RSI, our momentum indicator, is below the oversold level and on pace to make a new relative low along with price. So typically this would be regarded as a sign of weakness in this downward trending market here. So additionally, when we look at our volume profile and standard deviation channel studies, our point of control, our heavy trading area, all the way up here near 713, 714. So we have long ago given up that point. We swiftly fell through this relatively lighter trading area here in terms of our volume activity. Now we are once again in the thick of this more a prominent block of trading activity here between about 590 to 640 or so. A pretty big area, I know, but that's kind of just the lump of volume activity that we see here for now. Our -2 standard deviation channel, our orange line here, that comes in right around 600 or so. So that 600 level also kind of sticks out as well as a longer term point to consider in terms of potential support.
Okay, yeah, and Meta Platforms down another 1.5% today, roughly. So unfortunately for the company, seeing that weakness persist. So all that to be said, as we do consider now trading Meta Platforms here, for example purposes, Alex, Meta has been in a bit of a different tone, it seems like. Like overall, just enthusiasm has waned. This also is attributed to the overall market, of course, but I mean, sort of walk us through your thinking here when you look at trading a name that has taken it on the chin ever since earnings.
Yeah, this is one you can make the argument, kind of a substantial repricing, especially post-earnings. So say you're looking at this and you're saying, hey, maybe it's time to dip your foot in the water here, test those waters in a risk-defined example trade fashion, selling a put vertical, neutral to bullish in Meta Platforms, leaning into that weakness, saying, hey, maybe this is an opportunity to get a little bit of bullish exposure, especially given that Rick talked about you're in an area now that has a lot more supportive price history. With that being said, it goes out to the December monthly cycle. That's the December 19th expiration.
Alrighty, keep going.
Elongated Z risk profile, $5 wide spread to 575.65. If you collect $1.50, that would be 30 cents for every dollar of risk. You create a risk profile where you risk 350, chance to make 150, Jenny, and your break-even would be 568.50. But This does go out to the December monthly, so has about a month and some, maybe 2 weeks or so till expiration. So a little bit more time than some of the trades we look at, but looking for stability.
Stability would be welcomed by a lot of these Mag 7 names that have really been in a different trend that we've seen, again, following a lot of those earnings announcements. So now, as we shift gears and look at another name that was a bit of a laggard on the back of its quarterly update, Microsoft. And so Microsoft has not been as vast of a repricing and as stark of a downtrend, but we've also pulled back pretty substantially from highs here.
Yes, and we did break through another standout horizontal level here. This darker green line near 500 was an old high, a subsequent low, and roughly where things bottomed out once more. We did make some fluctuations beyond that point. But we can see now that we are within what would have been viewed as probably more of a supportive zone. This low point here near 488 also stands out. So 488 to 500, that's the level to hang on to. We have also dropped below our modestly sloping white trend line here, so another more bearish development potentially. We can see that the pattern that price moved in, kind of an M-type shape here where we had a double top near 555 or so, and then we can also see that we hit that same level. Crucially, we did not make further highs beyond that point, and then that led to our collapse, which is where we find ourselves now trying to stabilize. So when we look at our other studies, unlike our last chart, we have fallen below our two shorter term moving averages, but our long-term purple EMA, our 252-day EMA, still a good bit below our supportive area. So the upside confluence here, we have our two shorter term EMAs lining
Microsoft
up
I was looking at the other day.
With each other there, right around the 515, 514 level. That could be a point to watch out for as well. Another sign that things are not quite as bad as our previous chart, we have not yet made our way into that oversold area below 30 on the RSI. As I said before, that would be a sign of further weakness if it were to happen in tandem with another downside price breakout. So finally, we look at our other studies here. Our point of control for volume profile lines up with our moving averages right around that 510, 515 level. So some extra emphasis there. If we were to move lower, we have another slight volume node here around the 480 level. That lines up with some of our other indicators as well. So around 470 to 480 could be another supportive point to be on the lookout for.
Okay, and Microsoft today also down a bit more modest, about 0.4%. So a name that has been really a consistent player in AI, but is seeing some pressure as there is a lot of fears around the forward-looking spend of a lot of these Mag 7 names. So appreciate it to Rick Ducat for always bringing the technicals, of course, on this Friday. And now, last but not least, as we do think through now trading Microsoft for example purposes, Alex, walk us through the thinking.
Yeah, a different type of example here. This is more for those who are seeing this stock as maybe on a cliff and perhaps one that could fall substantially if it breaks down just a little bit further. So a much more bearish strategy and also one probably with a little bit lower probability of success, Jenny. So bear that in mind. So 450 put calendar, looking for substantial repricing to the downside and looking for that to happen over the next several weeks. Selling the November 21st, buying the November 28th. So really looking for this to happen before the end of the month. 50-cent debit means you just have $50 in risk associated with this trade. Very customizable, Jenny. So you can see that risk profile, one that does better, the more precisely you're able to project where a stock goes.
Yeah, and Microsoft has been one of, again, like consistency, reliability, but we've seen a bit of a different tone in today, pacing for its 8th losing day in a row now. So that's a pretty substantial move to the downside, clearly. But we'll leave it there now for Chartmaster today. Coming up next, it's time to dive into FOMO. We are looking at Tesla and specifically CEO Elon Musk with that $1 trillion pay package with 75% shareholder approval.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at npetalides and connect with
330 for SPX.
On LinkedIn,
I want a big
Facebook,
check.
and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Next Gen Investing. It's now time to discuss Tesla, unfortunately moving to the downside today of the overall market, but with some positive news as far as Elon Musk is concerned, that $1 trillion pay package approved, with the bulk majority of shareholders saying that they were all for it. So joining us now is Marley Caden, of course, host of the Schwab Network, to break down more on this story. There's also a lot of other moving parts really following that investor event yesterday. So walk us through the latest and greatest from Tesla here.
Yeah, so there's a lot to cover. Like you said, a lot of headlines. But first, let's focus on this pay package announcement. Elon Musk could become the first trillionaire in history with the approval of this pay package. It was overwhelmingly approved also. I think that's important to note. About 75%, more than 75% of voters approved this plan. And we did see a lot of commentary before the vote about whether or not it was appropriate, anyone deserved such unprecedented pay. And there was a lot of debate, and a lot of
no problem with it, baby.
They would vote against, but an overwhelming passage of this. There
are going to cost you a dime.
Significant milestones that have to be hit for the pay package to actually be worth that full $1 trillion. Some of them are. That they have to increase the value of the company nearly 6 times its current level, deliver 20 million Tesla EVs to market over the next 10 years. Now, they've got much stiffer competition, and that's more than double the number that they've delivered since the founding of the company. Also having to deploy 1 million human-like robots. That's what Elon Musk is often referring to as his robot army. Right now, there are 0 of those. So those 2 of the milestones. Then we have these stages in terms of the valuation of the company. The first stage is to hit $2 trillion. That's not that far off. They're at 1.43 right now. That's the first payout level. Then they have to go up by $500 billion each of the next stages, 2 through 10. Then when we hit stage 11, that's the second to last increase. That's $7.5 trillion. Then Elon Musk has to get the company up to $8.5 trillion and sustain that level. At that point, he can max out the pay package. Now, right now, Forbes estimating Elon Musk currently worth $493 billion, but certainly as he makes it through some of these milestones, that number is likely to really ramp up. But like you said, a lot of other headlines here. But first I thought we could just dive into this pay package because it's just simply unprecedented.
I can sell these at 3, but I want to see.
Of
See if we have a good Friday after this week.
Before the vote itself made it seem at times as if it was not going to go through.
Yeah, so I think that the interesting thing to me about it is it's not just incentivizing creating market capitalization, because that you can focus on different things and maybe add in some, I guess, moral hazards. But this is like 1 million robots, 20 million cars delivered, things like that, where it's like, if the company is doing that, one would assume they're generating quite a bit of revenue too.
Yeah, certainly. I mean, and I think that that's the goal. Obviously, it will be a symbiotic relationship in terms of if he.
Marley, you got a problem with it?
Because the company will be doing very well, and shareholders will in fact be very pleased. But there was a couple other headlines, and several headlines, but two that really stuck out to me. He made a comment that he's not made before about the potential for SpaceX to go public. He said, quote, maybe at some point SpaceX should become a public company, despite all the downsides of being public, because he wants to find a way for Tesla shareholders to participate in SpaceX space ambitions. So,
yeah.
That one really stuck out to me as well there. But the other one, Alex, we've talked about.
Oh, God, your hair looks like a mess.
Something with Intel. And we know how important this chip conversation is. Elon Musk, I'm going to quote him again. I'm super hardcore on chips right now, as you may be able to tell. I dream about chips, literally. Now one of the things I'm trying to figure out is how do we make enough chips? Then he mentioned the respect that he has for their current partners, Taiwan Semi and Samsung, and then followed it up with, maybe we'll have to do something with Intel. Haven't signed any deal, but it's probably worth having discussions with Intel. And that is a massive headline because he has been forwarding this conversation, saying, this is not a car company anymore. Stop calling it a car company. That's not our future. And if this comes to fruition, that will certainly be a hard pivot toward what he's been saying for years now.
So I'm going back to the pay package here because $1 trillion, I feel like it's so tied to like Optimus and the robotics arm and like things that don't exist yet. And that is what, and I'm not going to argue Elon Musk's importance as I've been a loyal follower of all of his narrative and all the things he's had to say on AI. But, so it's not a knock on Elon Musk. You consider though the average compensation for a CEO of an S&P 500 company is $20 million. And so back when we saw that 2018 pay award for Musk that was valued at $56 billion. So now $1 trillion, it's like, how are we getting these figures? And I'm not arguing the validity of his importance to the company, but there is a massive disconnect, it seems like, with what every other CEO currently gets paid.
I would say though, just to kind of play the other side, it's not like he's getting a cash payout for that. So this companies are worth $1 trillion anyways. I mean, it's like 10 or less worth. His pay is all just equity in the company.
Okay, that's also a good point, but also it does bank on the fact that Tesla will reach, an $8 trillion market.
Yeah, the nice thing though, this is a good point to yours, which is, hey, this is all built off hype. This is sort of what I was trying to allude to around the moral hazards, guys, of if it's all just, hey, we're going to promise we're going to do something and then you buy a bunch of our stock and it goes up, that doesn't really incentivize me to act properly. But if I have to get to $2.5 trillion and there has to be 10 million active full self-driving subscriptions for that tranche to be paid out, you have to actually deliver on these promises too. So it was structured in a way, Marley, I would say, that is trying to eliminate some.
Congratulations, Elon.
There's plenty of huge football contracts in college football. Make the playoff, then you can make some more money. Win the national title, make some more money that way.
Absolutely. I mean, there is a motivation factor here that has been well constructed to ensure that what you just brought up can't happen. We've made these promises, and so now shareholders, everybody came in, investors came in, dumped a bunch of money into Tesla, and now look, I've made more money. They've ensured that's not a possibility. I mean, he'll continue to make money and still fight to be the richest man in the world back and forth depending on the day, but there are clear marks that have
they
to
are so jealous.
not happen by investors just coming into Tesla on promise. There has to be actual delivery here. It's shut up and show up time, and he has to do it if he wants to get paid. But interestingly enough, I said it's a real potential pivot away from the car business, but there was a lot of car news that came out too. Cybercab production expected to start in April at their factory in Austin. Now, Elon Musk said that the car is specifically built for unsupervised full self-driving, and it will not have pedals or a steering wheel or side mirrors. But interestingly enough, that goes against what the head of the board said, because they don't want to have to fight for that sticky regulatory approval to have a car that doesn't have the ability for a human to take over in an emergency scenario with pedals and a steering wheel. So that will be interesting to see what happens there, because the regulatory approval for something like that, I was trying to look it up, and the only thing that I could find is that Amazon Zoox has managed to get an exemption because they demonstrated that their custom-built robo-taxis, which are devoid of those features, can function on public roads. They still do not have the full exemption that will allow them to operate a commercial robo-taxi service. So they've been in the thick of this trying. They've got the exemption, but they don't have the regulatory approval. So even if they build these, and he's saying that could be producing 2 to 3 million cyber cabs in a year based on their production time, if you can't get the regulatory approval, what are you doing with 3 million cyber cabs?
It's a very good question, and it's amazing to me throughout this conversation we haven't even touched on the actual way that Tesla makes its money right now, and that's vehicles. We haven't even talked about that.
I've got one. Yeah, I've got one for you.
Great.
The Roadster 2.
Perfect.
Also coming in April. Funny enough, I thought this was a bit ironic. It's going to be tentatively debuted on April Fool's Day.
Oh, there you go.
So I don't know if this is just a really long game on an April Fool's Day joke, but it is April 1st. Tentatively, they are going to reveal the Roadster 2 after, I think, roughly 2 years since they first teased the arrival of this vehicle. And then once the demo has happened, they didn't say the day, once that demo has happened, production of that vehicle is set to begin 12 to 18 months later.
I was also saying it embeds like a 19-day cushion to get back to 420 if you need to. But last thing I'm going to say too, I think this is really important in this particular scenario. And I don't know Elon Musk, I have no idea, but I mean, it's a $500 billion at this point as his net worth anyways. I'm not sure the money itself is the concern. He's even said it's about controlling stake of the company. He wants to be able to continue to drive the vision of Tesla, and you do that through ownership. And he's trying to get that ownership stake pumped back up again.
I think it shows his commitment to Tesla. That was at one point very much questioned, as he had various government ties. I mean, clearly this man is not going anywhere fighting for this. I mean, increased ownership, to your point, of Tesla. I was also thinking the same thing. I was surprised it wasn't 420, but as you know, that's been a favorite date of Elon Musk's. But now as we think through trading Tesla here, we have been fairly actually range bound. I know we're selling off today a bit with the overall market. We're down about 6% this week, but we've sort of chopped around these levels and haven't really seen any drastic movement to the upside or downside of where we've currently been at.
Yeah, neutral bullish strategy. It's called a skewed put butterfly. Basically combining a debit spread and a credit spread, and they overlap at the same short strike. In this case, it's the 415 level. Had the opportunity to do 420, but I guess I missed it here. But it is the 420, 415, 405 skewed put butterfly. Now, done for a credit of $1.50, if it stays above 420, all of these options were expiring worthless in this example, you would simply keep that credit. So in this case, it'd be $150 of profit. Where things get interesting, guys, if it gets down to that 415 line, it can actually be the best of both worlds, where that debit spread expands towards $5, the credit spread would expire near worthless, and you get a possible max profit of $650. What I always like about these strategies, personally, from an example trade standpoint, is less about that, even though that kicker is nice. That kicker lowers the break even further than the traditional put vertical spread would. So the break even is 408.
Cool. What happened here?
You got a pretty decent cushion going out to November 25th.
Boom!
Doesn't mean it's not something that's in play. It's Tesla. It can certainly move there. But you risk 350, a chance to make upwards of 650, but also a scenario where if
Tesla at 370.
You can make $150.
Tesla, I mean,
down about 3.5%.
Oh my God.
So we have pulled back now about 12% from
Jimmy's
highs
happy.
we made actually now almost a year ago at this point. Well, remaining off lows by over 101% to Tesla's credit. We were well off those April lows, but appreciate it too. Marley Caden, host for the Schwab Network, for giving us all of those several headlines on Tesla today. We'll leave it there for FOMO. Coming up next, though, we'll discuss what to watch in the tech trades. AI names have pulled back with momentum this week.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way.
Carl's way is Jim's way, and his way is the best way.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out there.
Where are you going?
Schwab.
Jim's way is the best way.
Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Jim's way is the only way.
Next-gen investment
Uh-oh.
is now time to discuss the latest we've seen from overall tech and pretty substantial moves downside across the
Damn it.
sector this week. So joining us now is Austin Lyons, senior analyst of creative strategies. So Austin, thank you so much for joining us on
Hello.
this Friday first and foremost. But excited to get your thoughts
Sitting here.
because we've seen a lot of this risk-off sentiment sort of wane
No,
and
I'm
come
talking.
really since Tuesday's session. So what do you make of this recent
What's up?
weakness?
Great question. I think
Oh, I don't
there's
know
been
yet.
some noise lately. I think what
Probably
triggered
need to go up
it
and
is
see
we
Mom
had
this year.
earnings from the hyperscalers. We had Amazon, Microsoft, Google, and Meta, of course, in the past couple weeks, where they said they are accelerating their build out
Oh, you are?
to the tune of $100 billion in 2026, roughly.
We'll
Some
see.
are 70 to 95 to even 125 billion of
He
capex.
does.
And so I think all of a sudden investors started to ask, okay,
He
wow,
doesn't
those
want
are
you to
really,
cook all
really
that
serious
food.
numbers.
That don't
What's
make
gonna be
sense.
the return on invested capital here?
You
When
make
are
a
we
lot
going
less-
to actually
you
see
make a
that
lot
play
less.
out? Early on it was just cheering for people to invest in training, and as inference was taking off, investors continued to get excited as these hyperscalers were investing in the infrastructure needed to meet those inference needs. But now, the investment levels are getting so high that investors are just starting to get worried and starting to ask, really, like, when will we see a return here, especially as depreciation starts to stack and it might impact things like free cash flow. So I think that's probably really what triggered the concerns. Now, of course, there's some noise around OpenAI and questions like the Brad Gerstner podcast with Sam Altman, where there's questions around how is this going to be funded, and Sam kind of swung and missed on how to answer that. And so there's questions around like OpenAI and profitability, and obviously a lot of this infrastructure demand is going to AI labs like OpenAI. But I think, really we're just starting to get to investment levels where people are starting to ask, like, when does this pay off?
Okay, so Austin, here's an interesting question for you then. You mentioned earnings. I think objectively they're seen as positive when you have like 82% beat rate in the S&P 500. It does fall a little bit, closer to 75 in the NASDAQ 100. But for both, the one-day average price move is a negative number, and it's almost a full percent negative for NASDAQ 100 components through about 80+% of those companies. In your mind, is that worrisome because good news isn't enough? Or is it always better just to have good news, and if it goes down, yeah, that's not great, but at least it's not bad news driving it?
Yep.
Yeah, I mean, I still had conviction that the long-term narrative is solid, that there's demand that outstrips supply, and that even on the end,
Yeah,
like
I'm
the
glad you
OpenAI
called.
things, enterprises are figuring out
Probably
still
waiting.
how to create value out of all this investment.
Oh, you are?
Why is the stock market falling? Maybe it's just that
Work okay?
things have run a little hot, and even though the long-term narrative is
Okie
good,
dokie.
in light of earnings, there were lots
I'll
of
holler
beats,
at you later.
there's lots
Thanks
of
for calling.
questions, there's some noise out there.
Bye.
I think there's probably a lot of people just pausing and asking, maybe for more signals, maybe waiting for NVIDIA's earnings. But I think long-term, we see hyperscalers that are saying, they're not just trying to manufacture demand. They have demand, and as soon as they
Well, these prices drop fast if you don't take advantage of it.
customers waiting to use it, which suggests all the way down to enterprises are still hungry to use AI and figure out how to get more productive and do more than they could. I think we're just seeing maybe like an air pocket in sentiment, and maybe prices were running a little hot.
Okay, yeah, and I think that's really well put, and I think it speaks to the nature of the bulls still that are still like, hold on a second, this was probably a healthy correction to the overall market here that we've seen this week. Not every week can be, as strong as what we've seen now over and over. And so as far as like recapping what we've already learned from earnings, are there any themes that stuck out to you that clearly resonated as far as like performance the next session or following, several days? Or is there any things that stuck out that maybe didn't work so well?
I think one theme that stuck out is the hyperscalers like Amazon, Microsoft, and Google that have clouds. Investors were still confident that those companies could turn all the projected 2026 spend into revenue. There's a clear line of sight. Obviously, they're going to, like Google uses a lot of their infrastructure to train their own models, for example, or of course to serve all their amazing products that have incredible distribution, Google Maps, search, so on and so forth. But of course, they have clouds where they can just turn around and take some of that infrastructure, rent it out, and make money on it right away. I think we saw Meta get punished. They don't have a cloud, so they're talking about accelerating their infrastructure build out. And investors are starting to say, okay, wait a minute, you don't have a line of sight to quickly, generating revenue from that. So there has to be a trust factor that Meta can take AI compute and turn it into top line revenue, which for Meta means more engagement, more ads, higher ad prices. So I think you're starting to see a little bit of bifurcation on investors and the sentiment around how quickly will that infrastructure pay off, or will it take a long time? Now, to Meta's credit, these cloud businesses, they're running at like 30% margins or something. Meta, obviously, advertising very high margins, so it might take longer, but the payoff might be higher. But I think the numbers are getting so high, and there's some concern out there that it's a safer play in the eyes of investors for the hyperscalers that have clouds.
All right, Austin, it sounds like you're a believer long term. You said as much. I don't want to put words in your mouth, but you'd probably be comfortable
if that was
with
a girl or a
riskier
guy.
for a longer term time frame. But you also mentioned things getting a little hot in the short term. How do you think that cools off? Do we need to see a little bit more of a swift down move from here, or can we go sideways for a bit and grow into it through time?
I'm an optimist. I'm a long-term believer, like you said. I would think that it might just sputter around, be a little volatile for now. I think, NVIDIA's earnings will help. I think at the end of the day, we're limited by supply, which is obviously TSMC wafers, CoWoS packaging. We're limited by power. And so I do think that, these hyperscalers and clouds are talking about not being able to even build enough in 2026, power being a limited factor. It's hard to imagine through 2026 and 2027 them not continuing to build. In the meantime, companies like Microsoft are making tools for developers to make like agentic AI, and so I think that the rate of adoption would be the bear case of just like for the AI to actually manifest into productivity gains for enterprises. It just takes time for enterprises to figure out how do we use this, and Microsoft's bringing tools to make that happen, but that just takes time. But I do think that the rate at which we build out is constrained, which actually gives companies time to use new tools from Microsoft and others and to figure this out and to deploy it. And so I think, while things might feel a little volatile right now, I'm still confident in the long-term trajectory, at least through 2026.
And I think that you join a huge bulk of the majority that still feels like, okay, things maybe are settling down. That doesn't mean that the narrative has shifted by any means. So great place to leave it. We appreciate your time on this Friday. Austin Lyons, Senior Analyst for Creative Strategies. So we'll leave it there, but coming up next, time to talk Archer Aviation, which is seeing a pretty substantial move lower today after some costly news from the company, as well as overall disappointing third quarter financials.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24 hours
Back down again.
trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
/ES is back at the orb here. We need to hold this
Available anytime,
and the 200 EMA.
device for free. Welcome back to Next Gen Investing. It's now time for Under 30. Today we are discussing Archer Aviation, which is seeing a bit of a negative reaction to some of these catalysts. Its earnings, also purchasing LA Airport, and spending a good deal of equity. So joining us now is Sam Vadas, host here for the Schwab Network. And so Sam, walk us through what is clearly leading to some concerns, especially over the cost of this company's growth.
Yeah, certainly it seems to be, as far as the financials are concerned, with this earnings, perhaps a few questions there, but also to do with the share sale. But just let's take it back a second and just understand what this company does, because I'm sure you've seen the pictures, and these types of aircrafts do look pretty impressive when you think of just how futuristic sort of electric air taxis are going to be. This is in the business of advanced aircraft and related technology. It does have exposure here in the US and also internationally as well. It's been talking about deals and business over in the Middle East, and it does certainly have exposure across the commercial sector and also the defense sector, which is notable, a market cap around $5 billion. It's important to note that this is a pre-revenue company. It's not generating any of those sales just yet. They are very much still in the certification phase right now, waiting for some approvals right now, but they have passed their design phase, and
6-pound crappie,
according to this company, to actually scale at the end of this year, early next year. So it's in the business of these electric air taxis, so electric vehicle takeoff and landing, or eVTOL as it's been abbreviated, and they say that they're currently working through the certification with the FAA and other global aviation authorities to actually get the safety checks and clearance so they can actually begin flying passengers in large cities. So they are actually trying to get some of this clearance at the moment from the regulators, commercially speaking. One of the most notable deals and developments that we've heard in recent months regarding this company is the fact that it's actually been selected as the official air taxi provider of the LA 28 Olympic and Paralympic Games. So that's obviously something that they're working towards, and they're actually going to be transporting, as part of this, VIPs, around fans, stakeholders in their air taxis to the venues, and also providing support for the emergency services. So this is something that they're working towards.
/ES off the orb of 115.
$1.9 million. So as I said, they are on this path to profitability at the moment. Interestingly, that was narrower than the FactSet estimates of $178.6 million of a loss. So it's interesting to see some of the discrepancies in just where the analysts were at. But moving forward, they do expect to continue to narrow that loss as well. But the stock lower today, trading at about $7 and change right now, and 13% down, is, as I said, off the back of this share sale, disclosing that it's a $65 million stock offering over 81 million shares is going to dilute the value for current shareholders. So it seems investors aren't so thrilled about that piece of the news, guys.
Yeah. I mean, Sam, I think it's a really, really good point. This is something that George Killis talks to us a lot too, which is the dilution of some of these pre-revenue companies. And that's just kind of the nature of the beast, right? They either can go to debt markets and dilute shareholder value there, or issue equity when the shares are doing a little bit better to raise capital as they're working through and getting some of these regulatory approvals. But final thoughts real quick, 10, 15 seconds.
Yeah, I mean, so this is going to help this share sale, the $126 million acquisition of Hawthorne Airport in LA, as it's going to be, of course, the official provider of the Olympics. But hey, look, this downward momentum that we've seen actually in the company year to date hasn't stopped the likes of Kathy Woods, for instance, doubling down on this name. She's bought into it, and so she's taking advantage of the fact that this stock is trading lower. I'm just looking at this year to date. It's down almost at 21% on the move today as well.
Yeah, so again, seeing, I think the overall
unbelievable
they're expecting is going to be expensive. So we will leave it there, but appreciate all of the help breaking down Archer Aviation. That's Sam.
The orb. Jimmy called it off the 200 here at 115. Now it's at 225.
Thank you so much for tuning in. We have the watch list coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast.
That's what
right
you
for
are.
The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks.
This
to help
Photoshop,
navigate
it's huge.
Schwab.com,
It's huge.
Thinkorswim, and
It's a world
mobile-based
record.
platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Good afternoon, everyone, and welcome to the Watch List. I'm Diane King Hall on the floor of the New York Stock Exchange, coming up on 2 p.m. Eastern Time. Let's start out with our roadmap. Here's what's coming up on today's show. We'll be joined by NFL Hall of Fame quarterback Fran Tarkenton to discuss the privacy and security threat that generative AI he sees posing to businesses. Then we'll discuss the state of Japanese markets following the election of a new prime minister and take a look at some Japanese stocks you may want to consider for your portfolio. Plus, we'll bring in our panel to discuss November consumer sentiment, which came in at the lowest level in more than 3 years. All right, let's get right to a check of your scorecard with about 2 hours left in the trading day. You are looking at equities off the lows of the session. The S&P 500 lower right now by more than 0.5%. Where you still see the weakness has been the three laggards facing the weakness. That's communication services, information technology, and consumer discretionary. But again, all of those off of the lows of the session. You have more sectors of the S&P 500 higher versus lower right now. We'll see if the bulls continue to fight back as we get closer to the end of today's trading session, but still on track for losses this week. NASDAQ 100 still the weakest of the week today, down about 1.25% right now. Dow right now lower by a little bit more than 1/3%.
Small caps off by 0.5%. Again, investors coming off the mat right now, or at least bullish investors. Maybe this is some of the buy the dip crowd, given the weakness that we've seen this week. Let's take a look at some of the other asset classes that we are watching in today's market. The dollar right now off by 0.2%, just below 100. Gold catching a little bit of a bid, up 0.5% above 4,000 an ounce, 40.12 there. Crude oil higher by 0.5%, approaching $60 a barrel for West Texas Intermediate. Bitcoin having a little bit of fight back right now, up 1.5%, a little bit more than 1.5% above 102,000, approaching 103,000 right now. For some of the biggest stories in the markets, we want to welcome in Kevin Hinks, co-host of Fast Market here on Schwab Network, my buddy who's over there at the other exchange. All right, so let's talk about Block, the artist formerly known as Square, ticker XYZ. There's so many things to remember around this one. Now, this has been under pressure off the back of its quarterly results. What's your take here?
I don't want to talk about Block. I want to talk about Fran Tarkenton. You have the best job, Diane. Come on. I love Fran Tarkenton.
And I know. Come on over for that interview.
I just had to say that. I remember Fran Tarkenton playing for the Vikings. Guy was awesome. Anyway, Blocks or Square.
Got
or
less than
XYZ,
2 hours to go.
You want to call it? It's been so many names. Miss on earnings, stock down about 8%. Miss on earnings, 54 cents versus 63 expected. Revenue, $6.11 billion versus $6.33 billion. So miss on earnings, miss on revenue. Gross profits were up 18% to $2.66 billion. Cash App profits up 24%. Remember, Cash App is that platform that competes with Venmo. And Cash App monthly active users, 58 million. Square gross profits, remember, that's how small businesses do their collection. Square gross profits, 898 million, up 9%. Square gross payment volume, up 7.2% year over year. So, this is a company, when Square started, it was such an amazing innovation. But, this company has just kind of failed to grow as much as originally expected. Stock down about 8% after earnings, Diane.
Okay, so that stock is under some pressure, but it's off the lows of the session, similar to what we're seeing in terms of the broad market. But let's talk about a winner, Expedia. It has been rallying today off the back of its results, and to me, it shows that consumers are not willing to give up their experiences. What's your take?
And this is something you and I just talked about on Fast Market. The airlines are going through some struggles, but people are still trying to travel. Expedia put up great numbers. Non-GAAP earnings per share, $7.50 a share. That beats by 62 cents. Revenue, $4.4 billion, an increase of 9%, beating analyst estimates by 150 million. Gross bookings up 12%. EBITDA increased 16%, and margins expanded by 208 basis points. Shareholder returns, they repurchased 2.3 million shares for $451 million and declared a quarterly dividend of 40 cents per share. So, all the concerns about travel not showing up in the travel companies, problems in the airlines, right, with the FAA and flight and air traffic controllers, but not in travel companies, Diane.
Not in the travel companies. Certainly, as in terms of the way we see it at Expedia, those shares rallying more than 17% right now. Big move over there at Expedia, and even Airbnb did better than expected. So it's nice to see that. All right, thank you, Kevin. That is Kevin Hinks, co-host of Fast Market. Now, listen, why not get a big picture take with David Aspel, co-CIO of Mount Lucas Management. David, thank you so much for joining us today. I know you've been paying attention to something that we've talked about a lot, the bifurcation of the economy. We often talk about the K-shaped economy. Today would have been a day where we'd be having a conversation about the jobs report and the impact of that, but that is not the case today. What's your take on, when you look out broad strokes about how investors should think about the health of the U.S. economy?
Yeah, thanks for having me on. Yeah, it's really difficult at the minute, right? I mean, as you said, we should have had payrolls data this morning. This is the second one that we've not seen. It's not clear if we're going to get that well, what's going to happen going forward? The jobless claims data is coming out via the states, but it's not coming out at the national level. There's lots of data that we're missing, and at a really difficult time for the Fed and the economy, you know, it's not great. We really don't know what's happening at the minute, and it's not just the fact that we can't see what's going on because of the shutdown. You know, part of the issue itself is that as the longer the shutdown goes on, the more people miss paychecks, and the more uncertainty goes up. The shutdown itself is going to start causing economic problems as well. So it's really not a great scenario to be in at the minute.
Yeah, no, it's a
The
great
video
point.
double
I was
top.
talking to Jan Hatzius this morning about this. He's the chief economist over at Goldman. And one of the things he pointed out was that there is another risk right in front of us in terms of the jobs report, because
It's
the
weird how
survey
the
week,
opposite
for
works
instance,
on
for
these
November
now.
is coming up. It includes November
This week
12th.
in a
That's
way.
next week, right?
On
so there's
Apple
a
and
risk
NVIDIA.
that even if we get the November jobs report, because we were supposed to get October today, that we still may be
Just
missing.
like you
It may not be as full,
are.
right? Because you can't do both sides of it if you miss that survey period.
My calls that
What
I
do you think
have
about
for
that
the
in terms of
6700 at $2 and
apply
150
what
are
you
now
know,
at
in terms of the
350,
market? Do
and I
you
scalped the
lean into
6700
momentum, or is this about hunting
off
for value
150
now?
to 340 just a bit
I
ago.
think both approaches can work.
So let's
You know,
go.
What we do is we trade a
Let's get to my
management strategy.
resistance.
So we're about momentum in broad asset markets, which is around the dollar, fixed income, and commodity markets as well. So for us, you know, what we do is we look for markets that are shifting either in large directions, either up or down, and then we try and ride those trends.
That's what you
So
are.
either way, whichever way the economy breaks, whichever way the
I like
dollar
that color.
breaks, I think we're just looking forward
That's
to
the
some
color
large
we'll
moves
use.
in these markets.
Let me make sure I got it.
David, let me ask you this. You were talking earlier about the Fed,
Default?
right?
Okay.
And, you know, given the conversation that we're having about missing data points, I want to go back to something that I know was on your radar
Remove.
with the operating in a fog and you slow down, you know, but we got a rate cut last month. There's still the consensus view is that we're still more likely than not to get a rate cut in December, although it's not as baked in. And the Fed chair himself said it's not a foregone conclusion. Are you anticipating the start of a broader easing cycle? And do you see that happening in December or kicked over to January?
Yes, that's right. I think so. We did cut, but then Powell kind of walked some of it back to say that the next rate cut wasn't a foregone conclusion. I can see why he does that. He likely doesn't want to have markets price things at the level that they were priced. I think a December cut was priced at around 95%. It's back down to maybe 65, 70%, something like that now, which is probably closer to where he wants it. I think they'll end up cutting. It's hard to know without the data, but I think that the slowdown itself, the rest of the data that you do get around employment will justify the cut. But I think it's going to be quite contentious. I mean, they've cut 5 times already. The big discussion is going to be around, at least for the next year or so, is how long does it take to get back to neutral? And then also what neutral is. I think people generally think neutral is somewhere around, 275, 3 or so. There's some people on the Fed that want to get there very quickly. Stephen Myron wants to get there in 50 basis point chunks. I think they're going to end up doing that and getting closer to neutral quicker because inflation doesn't seem like it's an issue. And then I think that the next big question you're going to get is to what extent is the economy actually responsive to the rate cuts? That if you get to say 275 or 3%, you're sort of naturally assuming that the interest rate sensitive sectors of the economy are going to respond to that. And it's not 100% clear that is going to be the case because things don't operate in a vacuum. So I think it'll be really interesting to see. I think they will cut in December. I think they cut a bit quicker than is priced, and they get to neutral somewhat more quickly. And then the big discussion then is, if you cut, how much is the economy going to respond to that and how quickly?
Okay. I want to get your thought on this. There's been pullback in markets this week. But you and others have pointed this out that the major indexes do look expensive. So maybe this is not surprising, but you do say there are opportunities underneath. There's some reasonably priced stocks. Where do you have conviction, whether it's sectors or individual names?
I think that's, the issue is that the overall index is quite expensive. Obviously, people have been chasing the growth story through the AI names, and they're fantastic businesses that they execute incredibly well, but lots of them are priced like it, and you're seeing some of that come out now. What's happened on the other side of that is that a lot of quality companies have come off a lot. You know, they're high quality businesses that are growing well, but those have struggled. There's a lot of companies. I think there's a lot of companies in the energy space and in the natural gas space in particular that are likely to be big beneficiaries of the AI and the data center boom over the coming few years that are not really priced for that yet. That people still view, I think, natural gas as a very cheap item, and people are nervous of those types of companies. But I think it's going to be really hard to have an AI wave without natural gas. And I think some of those names look quite compelling. But there's a lot of names across the sectors, particularly the quality names that look good. There's sets of names in healthcare that look quite good also.
Okay, yeah, I've heard some share a similar view, David. And I just want to get a quick final thought from you, if you have like 30 seconds, thought on where we go from here as we wrap up the year.
I think, well, the shutdown, I think how long the shutdown's going to last, what happens with it as we go into the Fed, I think is going to be the main question of the year. I mean, I think they're going to end up cutting because the data, when it does come out, assuming, as you say, assuming they're collecting it, that the data is going to warrant more cuts and people will get more comfortable with it. And then we're just going to have to wait and see on the jobs picture and then what we look like next year on the fiscal side as well.
All right, David, we'll leave our conversation there for today. Thank you so much for joining us this Friday. I hope you have a wonderful weekend. Appreciate your time. You got it. That's David Aspel, co-CIO at Mount Lucas Management. Coming up, we've got Options Corner. Tom White joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news as it relates to JD.com, Starbucks, and NVIDIA. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com. Welcome back to the watch list. Time now for Options Corner, where we analyze unusual options trades seen throughout the day. For that, let's welcome in Tom White, co-host of Fast Market here on Schwab Network. So I got to talk to both of my buddies today. All right, so you've come across a few unusual trades today, unusual options activity. Let's start out with JD.com. You found a bullish trade here. It's got earnings in front of us next week. Take us through what you noticed.
Yeah, I think maybe that's going to be the catalyst for this stock. Out of all the Chinese-based stocks that we kind of follow, Alibaba, Pinduoduo, or PDD, and then also Baidu, this one severely underperformed. It's off about 9% so far this year. Alibaba's up nearly 100% so far this year. We saw a lot of activity from hedge funds and money managers that were piling into Chinese stocks just based on valuations compared to similar names here in the U.S. or comparables. JD is the largest technology-driven e-commerce site over in China. They've got a logistics division, their advertising arm. They don't have the cloud type of business that Alibaba does or maybe Amazon does here. So maybe that's why it's been one of the laggards in this space. But if you take a look at their competition, it's Alibaba, it's PDD, expansion costs and regulatory uncertainties going into this report. But like I said, it's underperformed, and I think this trader's setting up for maybe some upside surprise here in JD. The trader bought 8,000 in the November 14th weekly options, so those expire in 7 days. You're going to capture next Thursday's earnings event. They bought 8,000 of the 33 strike calls, paid an average debit of only 46 cents. These aren't expensive options. So the break even of 33.46 over the next week is about 6% above the current share price in there, Diane. So yeah, positioning earnings type play here in an underperformer out of all the Chinese names.
Okay, all right, so next on your list, Starbucks is perking up today, and you found a bullish trade here. What'd you notice?
Perking up today. You nailed that one, Diane, of course. Little caffeine for this one today. It's pushing against of what's going on in the overall market. Up 3%, still down about 7% so far this year. Brian Niccol trying to turn the transformation of Starbucks into a little bit quicker than maybe the streets anticipated. That's why the stock's been a laggard. They did report recent earnings. EPS missed. Revenue was a little bit above expectations. Comparable global same-store sales increased only 1%. That's actually better than what they've been seeing recently. So that was a bonus for them on their earnings. But they're also, they divested or agreed to a joint venture with Boyu Capital for $4 billion in their China-based business. Starbucks is going to retain about 40% stake and continue to license and own Starbucks brand and intellectual property to the new entity. But this was probably a big weight off their shoulders because China's sales had been lagging a little bit. And then throw on top of it, the union members voted to strike at the company's U.S. stores next week unless it finalizes a contract agreement, which doesn't seem like it's going to get done. But the stock's still doing well. They got new protein drinks there, Diane, that are supposed to be doing really well. And we saw some bullish activity in here also. November 21st monthly cycle that expires in 2 weeks. Traded bought over 3,000 of the 86 strike calls. Paid an average debit of about $1.42 on those, so that break even of 87.42 over the next 2 weeks is about 3% above the current share price there in Starbucks. And I think there's a lot of investors in Starbucks over the last year since Brian Niccol got in, that have been waiting for a turnaround story. It just hasn't taken place, but this trader thinks we're going to see some more gains over the next couple weeks.
I think you're right. I think that's certainly clearly banking on Brian Nichols over there. And I haven't traded in pumpkin spice for protein yet, but maybe I will. All right, the final one on your list you brought is another bullish one. This time it's for NVIDIA, which, I mean, listen, it's pulled back this week, but what did you notice here?
Well, it's getting a little bit of a lift. I mean, the stock was down over 4.5% at the lows of the session. Now only down about 1.75% on the day, but still down about 8-9% so far this week. But still up about 38% so far this year. It's had a good run. Jensen Huang came out with some recent commentary saying no active discussions to sell their Blackwell chip over in China. Then the information reported that even the lower impact AI chips, they're not going to, the U.S. government's not going to allow them to sell that. And this comes on the back of, all-time highs for this stock recently after their GTC conference. Jensen Huang was all fired up about their business where demand is outstripping supply, and that continues. But seeing a nice pullback here has given maybe some traders the opportunity to get in here. And we did see some bullish activity in here also, but this was all the way out in the December 12th weekly option series, 35 days to expiration. A trader bought over 20,000 of the 200, 220 strike call vertical. So they bought the 20,000 of the 200 strike calls, sold 20,000 of the 220 strike calls. So a bullish $20 wide call vertical. They paid an average debit of just under $3.60 for those. So the break even just at 203.59 over the next basically 5 weeks, about 10% above the current share price in there. With call volume, even on a down day, Diane, I think a lot of call activity in there. Call volume is about double normal daily average volume that we've seen over the last 5 trading days. And I think there were some people trying to pick the bottom here in a lot of these tech names. We saw it earlier in Meta Platforms ahead of their news. That stock was down pretty significantly. It's turned around. A lot of the tech names have been leading this bounce off the session lows, and a lot of call buyers in these tech names today.
Okay, thank you so much for the breakdown there and some unusual options activity in names in a variety of sectors, JD, Starbucks, NVIDIA. Thank you, Tom. That is Tom White, co-host of Fast Market. Coming up, from the football field to the front office, we'll be joined by NFL Hall of Fame quarterback Fran Tarkenton to discuss the privacy threat that generative AI poses to businesses. That's next on the watch list.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way.
Carl's Way's the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly.
Seems like a good Friday. Carl's Way's the best way. $6,700. $66.89.11. Then $66.96. There we go, Randy. Boom. Damn, 1630. Bingo, Randy. beautiful.
Opening bell is the sound that makes it go down. Sneaky snake, chart pattern, moving averages, and being in the now. Being in the now. Jimmy eating salads and sipping chai tea. Checking out the cleavage on Schwab TV. Magnificent Jesus, Rob and Randy, Livid Goose, Rich Nixon, Michelle, and Funky is stingy with his grades. We got a lot to prove. Patience is the key for Gamma Jama moves. Opening bell is the sound that makes it go down. Sneaky snake, sharp patterns, moving averages, and being in the now. Being in the now. Buying the pullbacks, riding rockets and rips, protecting our assets, pouncing on the dips, market maker shakeouts, standing our ground, waiting on our setups to capture our crown. Stingy with his grades, we got a lot to prove. Patience is the key for Gamma Jama moves. Opening bell is the sound that makes it go down. Sneaky snake, charge patterns, moving averages, and being in the now. Being in the now.
I hope everybody had a good day today. And that you learn from the sneaky snake trader himself. Patience. I sat here and patient. I figured today would be a good day. It's been a rough week. Been a hard sell-off week.
and how it lines up with what you're seeing across different surveys, whether we're talking about this University of Michigan sentiment survey. I'm curious to know what you're seeing, if you're seeing data points on this yet, on how consumers are feeling about the upcoming holidays, which are coming faster than I think, well, at least I'm prepared for.
I did see that consumers actually discussed the holidays, of course, at a higher rate than in prior months, as they were gearing up to spend some money when it comes to holiday spending. One of the interesting things that I keep on seeing month over month, Diane, is actually that vehicles and anything related to vehicle conversations has been trending upward. And in the most recent discussions over the last month, I did continue seeing that consumers are pretty much ready to go and spend money on new cars and new vehicles in general. And they were both discussed for commercial vehicles and for personal use as well.
Mark, I want to go back to you and get your thought on this. We often have this conversation about the K-shaped economy, and I know this stood out to you. Households with significant stock holdings saw sentiment rise, supported by market strength. What do you think that signals?
This bifurcated economy is as significant as we've seen. Perhaps, obviously, we did see a big part of that during the pandemic, but think about the divide between those who own homes, those who have significant exposure to the stock market, and essentially everybody else who do not have those things. And so I sort of resist the characterization within the economy of the consumer, because we're talking about many millions of consumers, and their results may vary. And so, the National Retail Federation came out with a prediction this week that essentially holiday spending should rise. Let's just put it in the middle of their forecast, about 3.9 or 4% year-over-year basis. Well, you adjust that for inflation, and that's, very minimal increase. And so we know that wealthier individuals have accounted for about 50% of consumer spending. They'll again do a lot of the heavy lifting during the holiday shopping season. And then essentially you'll have the have-nots just struggling to make it.
All right. It's certainly a worry, I know, for a lot of people. We'll have to leave our conversation.
Oh, gosh, you always say that.
And hopefully we get some economic data sooner rather than later from the government, provided the shutdown ends soon. That's Mark Hamrick from Bankrate.
He says has-nots.
Thank you so much. And that's going to do it for us on the watch list. Download the free Schwab Network app.
Oh, boy, sometimes them guys that get me.
24/7 on SchwabNetwork.com. I'm Diane King Hall. Thank you for watching. You've got Market on Close with Sam Vadas and Marley Caden up next.
Marley, God, you got to ruin my Palin hour. I'm going to get some water.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
And I'm Sam Barnes, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll be joined by the CFO of AvePoint to discuss the company's latest quarter that has the stock under pressure and hitting its lowest levels in over a year. Later on, we'll be joined by the CFO of Herbalife after its latest quarterly report and what lies ahead for that company in 2026. And in Options Corner today, we'll check in on NVIDIA, which is down about 9% this week. We'll break down the technicals and look at options trends later in the show. But for now, Marley, take us through what you're watching today.
Well, of course, this Tesla announcement that Elon Musk has a chance to become the first trillionaire in history. Tesla shareholders approved his potentially $1 trillion pay package, but he'll have to meet some very ambitious milestones to get that full amount. We'll tell you the details and discuss some other major announcements that Musk made coming up. But Expedia shares are soaring today after reporting a third quarter earnings beat and offering a strong sales forecast for the final 3 months of the year. The company grew room nights in the U.S. at the fastest pace in more than 3 years, while delivering its 17th consecutive quarter of double-digit growth in B2B. And Block shares tanking today following weak third quarter results that missed Wall Street estimates. We'll break down that full report in just a minute. But first, let's take a look at where the markets stand as we head into the end of the trading day. We are seeing a bit of a mixed picture here. We are still down on the S&P, but considerably better than earlier at 67.17. NASDAQ down 0.5% at 25,005. But the Dow and the Russell have since moved into positive territory after reports that Democratic leader Chuck Schumer is offering a new plan to Republicans that will allow the U.S. government to reopen since the shutdown. This proposal calling for Democrats to agree to pass a so-called clean resolution for short-term funding. It would agree to a one-year extension of existing enhanced tax credits that are used to reduce the cost of health insurance purchased on the Affordable Care Act marketplaces. So that's just breaking right now, but we are seeing the market reaction in real time. The Dow now trading close to a 10th higher at 46,949, and the Russell 2000 also.
Well, the NASDAQ's the only one that's really looking bad. Rest are flat.
U.S. dollar trading down 99.48. Gold, though, higher above the 4,000 threshold at 4,011. Crude oil also rising 59.84. That's up about 0.7. And Bitcoin making a gain here. They were down to 101,000 last I looked, now above 103,000, up about 2.5%. Now, Sam, what is catching your eye today over in New York?
Well, that deal that you just talked about to potentially reopen the government, and no doubt will be music to some people's ears because we've been tracking those travel disruptions ahead of the weekend. Hundreds of flights have been cancelled, thousands of customers affected as a reduction in flights across dozens of airports did take effect today, and we're talking 10% across 40 airports. This comes as the longest government shutdown in history has been dragging on, and airline stocks, interestingly, have appeared to be taking this in their stride today, and analysts have been sort of pointing to the shutdown in late 2018 when travel disruptions actually led to a reopening. So Transport Secretary Sean Duffy saying today an end to the impasse wouldn't necessarily restore things straight away, as it will take time for those air traffic controllers to actually return to work, adding that flight cancellations could rise to 15% or even 20% if the shutdown doesn't end relatively soon. So certainly tracking developments on that front given that breaking news. The government shutdown has also been weighing on the minds of consumers. The latest survey out of the University of Michigan, I should say, showing sentiment at its lowest in nearly 3 years. Now, consumers are
expressing concern about the potential negative consequences on the economy from that shutdown on top of the elevated prices and job worries they've already had. It caps off a mixed picture for the economy this week as the markets digest a batch of non-top tier reports in the absence of that official government data. But I'll send things back to Marley for now, who's with Jenny Horn in Chicago with some of today's top movers.
Thanks so much, Sam. Yes, like you mentioned, Jenny Horn, co-host of Next Gen Investing, joining us here in studio to talk about some of these big movers we're seeing. Let's start with the biggest, Expedia, the top performer in the S&P 500 today. New all-time high, showing high travel demand and stronger than expected results.
Yeah, and I mean, only seeing this move today fueled by the overall markets making a stellar recovery here. So it's looking even sunnier right now as things have only firmed up throughout the session. Earnings did come in widely ahead of expectations, but the company did say travel demand was strong, and I thought very important they mentioned, but not just for these richer customers. So we did see a 12% increase in their gross bookings, 9% rise now in revenue from a year ago, and also did see booked room nights climbed 11%. That was the fastest growth we've seen in the U.S. in more than 3 years. These results, though, per their CEO, they said reflect an improved demand environment and disciplined execution. Their business-to-business segment delivered standout performance, 26% growth. Business-to-consumer segment rose about 7%. And total gross bookings also were higher than what we saw a year ago and higher than expectations. So additionally, outside of all of that good news, they repurchased $451 million worth of shares during the quarter. They declared a 40-cent per share dividend payable December 11th and increased their guidance from earlier estimates, now calling between 6 to 7% growth for their revenue. I mean, there was so much to like, especially because as we see, macro U.S. lodging data has been very soft and I think very concerning as of late. This really bucks that trend, but also speaks to the fact that consumers are still deal hunting, and that's typically why you book through an OTA like Expedia.
Yeah, certainly. I mean, a strong performance, up 20%. This adds now to their gains, up more than 50% on the last 12 months. Now, I want to move to a company you are very familiar with because you are a fan of Monster. Monster Beverage up 5%, posting double-digit gains in sales for the latest quarter as more people want energy drinks.
As they should. I'm here to be the voice of support for the energy drinks. I feel like there's so much stuff right now online about like your health and being chemical free. I'm here to be pro the energy drinks. So also we are making a pretty decent move today in Monster, which frankly has been in a really nice quiet recovery this year, now up almost 33% on a year-to-date basis. And I will say, staples, while they have not at all seen resiliency, Monster looks pretty good here. So double-digit gains in sales for its latest quarter, also highlighting that increased demand for energy drinks, saying that the global energy drink category remains to see robust growth and has also remained healthy. While a growing number of households are buying energy drinks on a regular basis, to right now see a degree of actually price safety because this is cheaper than perhaps going out and shopping or using your local Starbucks. But coffee, they mentioned as a standout, is becoming really expensive. And I mean, we talk about some of the prices of like Starbucks that they're dealing with. It frankly is, and you can tell obviously my bias. I do purchase Monster energy drinks on a very regular basis, but profit came in well ahead of expectations, also signaled growth on a year-over-year basis, and also did say they're, again, specific to their drink segment, climb 18%. We've also seen sales of their strategic brand segment, which includes brands acquired from Coca-Cola. Those actually rose 16%, while Monster's alcohol revenue was a laggard, falling 17%. And yeah, not worth trying. I've had it. It's not good. Stick to the non-alcoholic Monsters. That may be too many chemicals for even me.
And that's following sort of the more broad trend that we're seeing where a lot of the alcohol sales are falling off as people move into more health conscious or other alternatives. But I was also really struck by that coffee comment. He said, the CEO said coffee is becoming really expensive and energy drinks are seen as a more affordable alternative. I don't know how we got to that point.
I don't know either. And I know that if you have a habit, like to me this is a vice type of like habit forming consumerism, where if you have a habit, you're probably going to figure out other ways of your life to justify that habit. Like to me, there will never be, well, I should knock on wood, there will never be a price tag on Monster that has me trading down to like the other brands, but obviously that's my loyalty. I think also if you're a coffee loyalist, to his argument, I kind of disagree with that. I think you're probably still drinking coffee and scoffing at me and the energy drink consumers.
Perhaps, but there's no argument that coffee is too expensive for what it is. Coffee should not cost $7.
It shouldn't.
It shouldn't. Let's move on to Block, one of our worst performers on the S&P 500 today. Down about 6.5% right now, was down a lot more earlier following a weak third quarter.
Yeah, I mean, we saw revenue that rose, 2%. That missed consensus. Net profit did improve on a GAAP basis, but operating income fell short. Adjusted earnings also missed. So I think that anytime you're looking at earnings, we talk a lot about what worked, what didn't. This was a clear miss across its headline numbers. But Cash App, I will say, saw its gross profits jump 24%. That was a sharp acceleration from last quarter, driven by this 21 basis points improvement in a 134% surge in their borrow originations, which I thought was kind of interesting. Now, Square's performance as a namesake also was softer. Gross profit rose about 9%. GPV was up 12%, just slightly ahead of forecasts. But the margin drag from higher processing costs, which are tied to a new partner deal, really continue to bite. But right now, they're trying to find some of this strength in their other products to offset that weakness. So they do seem to have at least a handle on some of the more weaker aspects of this report. But what was the most interesting takeaway, bar none, was the fact they reported that their G&A costs rose 14% on a GAAP basis, which is kind of a lot. So that was because of a one-time $68 million company event that actually, if you strip that out, it would have been basically breaking even with last year. But if you consider that their headcount of their employees was just around 11,300 at the end of last year, that means that this event cost roughly $6,000 a head per employee. That is insane. And, a concern. I know the company has a decent market cap, but I want to know the details of this event so badly.
Yeah, there is probably a lot of shareholder questions happening right now about what sort of event has a price tag that high, and is it warranted to then have a reaction to this, to earnings. But I do want to move on to Tesla, the story that, unexpected story for me. Frankly, I thought with all the naysayers coming out that I was not sure that this pay package was going to get approved. Certainly not with the approval rating that it did for Elon Musk at more than 75%.
I know. This was not even close. And back in 2018 when they voted, it wasn't even close either. But I do think, consider sample size is how I look at it. You have shareholders voting on this. So I can assume if you're a shareholder, you're probably a very heavy believer in Elon Musk, or else why do you own Tesla shares? He is truly, I'd say, almost synonymous with Tesla brand itself. So I get why his believers are approving this. There are some major stipulations of the package. So the package is not equity-based, or is equity-based, not cash. Musk earns a $0 salary. It's worth up to $1 trillion in 10 years. That would be the largest, of course, CEO compensation plan in history, and by a lot. But the key milestones to be made, of course, we know Tesla must achieve both operational and market cap goals, growing Tesla to $8.5 trillion within the decade. So production targets must deliver 20 million vehicles, deploy 1 million robotaxis commercially, deliver 1 million humanoid Optimus robots, and achieve 10 million active full self-driving subscriptions. These are big targets. This is not something that's going to happen tomorrow or even in the next 3 years. These are huge targets. So Musk currently owns roughly 15% of Tesla. This package will increase his stake to 25 to 29%. So that gives him a stronger voting control, and I think that that's exactly what he's after. I think that that $1 trillion figure you see in the headline doesn't speak to some of the achievements Tesla has to make before he obviously is paid out. So perhaps that's also why there's this overwhelming approval. It's like, hey, if you're a shareholder of Tesla, why wouldn't you want this company to achieve these very lofty, very ambitious goals as you go forward into a more robotic and AI-focused world?
And this is certainly one of the most motivated that we've ever focused that we've seen Elon Musk in a very long time. So, and rightly so, $1 trillion is a lot of money.
Sure.
Jenny, thank you for being with us. Tesla reversed its earlier losses. They're up about 0.2%, but we appreciate you breaking down those headlines for us. That's Jenny Horn, co-host of Next Gen Investing. And I do want to send it back over to Sam in New York to hear what we have coming up in the show.
Thanks, Marley. We'll discuss the state of the economy, look ahead to the Fed's December meeting, and even check in on the Chinese economy. Market on Close. We'll be right back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Bardas on the floor of the New York Stock Exchange alongside Marley Hayden over in our Chicago headquarters. Let's just check in with a quick market update, about 44 minutes to go in the session, because we actually have seen things turning around. So we are off the session's lows. We've got the S&P 500 just on the line to the downside. We've reclaimed 6,700 right now. We've got the NASDAQ also off the lows here at about 0.5% lower, 24,990 points. And we do have the Russell 2000 and the Dow Jones in the green now. And this coming off the back of the headlines that we've been tracking about the potential for the Democrats to now offer to reopen the government if healthcare subsidies are extended for a year. So that is one of the headlines that we're seeing coming across in the last hour or so. Maybe a catalyst for a little bit of upside here as we are now seeing things turning around from the start of the day when we were very much seeing tech under pressure, the AI valuation conversation continuing, and obviously we got some more data out this morning, the University of Michigan with consumer sentiment that's deteriorating. The US dollar has been backing off today. We've seen some euro strength coming through. We're at 99 right now, so off the multi-month lows that we've been seeing this week. Crude oil ticking higher. We're still below $60 a barrel, with plenty of moving parts for the energy complex right now, geopolitics and also data. Bitcoin is catching a bid now. Remembering it actually fell through 100,000 earlier this morning, but it's now picking up steam, and we're at 2.5% higher at levels of 103,000 right now. So as we've certainly seen this risk off in tech, we had seen Bitcoin very much following suit, but we are seeing things turning around now for the cryptocurrency. The 10-year yield off that 416 we'd seen earlier in the week, it dipped at around 408 or so in the session this morning. We're now at levels of 410 on the benchmark as, of course, we continue to pass over a number of Fed speakers, commentary, and also some of the data we've been getting. Not top tier, but certainly some of the other points that have been indicating some softness there for the consumer. Technology still under pressure right now, 0.8% lower. However, off the session's lows, as I mentioned, communication services also underwater. But we do have very much a rotation today into some of the defensive names, the cyclical names. 0.3% higher in consumer discretionary right now. Consumer staples also higher. And here are the rest. Actually, we do have green arrows across the board for utilities, real estate, industrials, materials, and energy, which are both higher right now on the session. So we did see a bit of a mixed picture across the sectors, but we are seeing more green now. And here's your mega cap tech. It's been a bit of a mixed performance, actually. Apple was the only bright spot this morning. Now it's Amazon, but we do have Nvidia lower. It was much lower earlier today, but it is now just 0.7% of a decline that we are watching. Microsoft lower, so is Meta, and Alphabet is the laggard on the session, 2.5% lower. All right, let's bring back Marley into the conversation and bring in our next guest. That's Rita Jansen, economist at Kepler. Thanks so much for your time. Look, I suppose we just need to get to the news of the hour, and that is, of course, that we're seeing the potential for maybe a deal on the table. At least maybe they can hammer out some of their differences here. The potential for this government.
Marley looks pissed.
How are you tracking these developments, and just how important
She's running the show.
Solve right away?
I think it becomes more important as the shutdown continues. It's our estimation that you're looking at roughly a 0.1 percentage point cut to GDP per week that the government remains closed. So again, as this kind of shutdown continues, you kind of see a building impact on the U.S. economy. 4 weeks ago, impacts were pretty limited. The impacts now are becoming more noticeable, and of course, you see this showing up not only in places like food benefits, but just ability to fly, right? So I think the pressure to get some kind of agreement done here is definitely rising, and so we'll have to monitor it over the weekend, I think.
And Reed, I saw that you're forecasting for you.
U.S. economy, you had tariff concerns around a declining labor force. We've seen a lot of resiliency. Q2 was pretty strong. We saw a stronger than expected consumer that will likely continue into Q3. And so our expectation is kind of, focused on that 2% level. That's in line with the historical trend. Important to keep in mind that the U.S. economy right now is very K-shaped. If you're in the top 50% of American households, you own a lot of assets, you own almost all U.S. equities on a percentage basis, you're feeling okay, and you're spending through the inflation. The bottom 50% don't own a lot of assets, don't own a lot of equities, higher structural inflation from last decade, not feeling so good, right? So I think it's important to keep in mind right now that top line, the U.S. economy is doing pretty well. That top 50% is really driving that consumption growth, but the bottom 50% of American households not feeling as good right now.
And just switching gears to the second biggest economy in the world, and that is China. We got some pretty ugly export numbers out of that country last night, and that certainly raises some concern because very much the outbound shipments have been sort of seen as the last leg that China has left standing on right now. I see that U.S. exports were down 25%, while the rest of the world was up 3%, which just goes to show that demand is not enough to fill the void left by America. I'm just wondering, how significant that is as far as what you're seeing as we now enter next week, where there's going to be a lot of focus on some of those Chinese earnings from the favorites, Alibaba, JD, Tencent, Bilibili, and Li Auto.
It's been really important, and the Chinese this year have gone back to the model that we have seen them play out over the last decade when they're having growth problems, and that is, extend credit to the economy. Most of that flows to the investment side, and in this cycle, that's been manufacturing investment and infrastructure at the expense really of domestic consumption. And this has really led to a large surplus of output, right? And, net exports this year, despite the weakness, maybe a little bit weaker number we saw last month, the net export growth figure out of China this year has just been eye-opening, right? Even with the step up in U.S. tariffs. And so I think when you're looking at the Chinese economy right now, it's highly imbalanced, it's highly reliant on investment, and it really depends on demand from abroad to continue driving towards that 5% growth target. And so if I'm looking at China right now, my view is they will find a way to get this excess production into the international market. They may need to use pass-throughs or final production in alternative countries if they're trying to get volumes into the U.S. But China's really doubled down on this investment-led growth model this year.
So if China can fix its imbalance by fixing the demand picture, but we know that Chinese demand is softening, what does that mean for global commodities in the meantime while they're potentially looking to fix this imbalance?
Well, I think just focusing in on the oil piece in particular, I think folks often think, when China's stimulating, which is what we're seeing right now, you tend to see an impulse towards higher demand growth in China. Ironically, though, a lot of this investment in China right now is going to EV production. We've seen a huge build out in EVs in China, and it's actually limiting future oil demand growth there. And so I think when you're an analyst looking at the market and specifically looking at the Chinese economy right now, you need to be careful how you consider what has historically been, again, more domestic credit in China is going to lead to more oil demand. Not necessarily true this time around.
Yeah, and I've just seen also that iron ore is seeing its biggest weekly drop since February, which certainly mirrors the disappointing or at least surprising contraction in Chinese exports. As we look across the energy complex, and Marley and yourself obviously raised a really interesting point about crude. I'm just looking at some of the soybeans, but also some of the conversations around rare earths as well, and the Trump administration also talking about how copper, silver, and uranium are the sort of new rare earths as far as what they see as strategically important right now. How you're looking across the entire commodity space, and what is really driving the biggest narrative in your mind?
Really depends on the sector you're looking at. If you want to focus in on precious metals, it was the debasement trade. There may be some shift away from that now into the end of the year. Maybe that debasement trade has shifted to equities, not sure. I think when you're looking at iron ore, probably coming under pressure here into the end of the year, especially if China does struggle to get its products to market. And of course, the domestic property market's very much struggling from here. However, I think one area of strength will be diesel markets in particular. So if you want to play the bullish side of energy markets right now, those Ukrainian strikes into Russia are actually restricting Russian diesel flows into the international market. And so I think if you're looking for some areas of strength, global refiners could find some strength, especially across that diesel production side of the market.
And Reed, thank you for being with us today. That's all we have time for, but really compelling stuff there. Thanks so much. That's Reed Ianson, economist at Kepler. And coming up next, we're going to be joined by the CFO of the software company AvePoint after its latest earnings that has shares under pressure today. Market on close. We'll be right back.
Do 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 do.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Market on close. I'm Marla. Charlie Caden alongside Sam Vadas in New York. The government shut down in its 38th day now, which of course is the longest shutdown in our history. Coming off of reports yesterday saying that the wheels came off during bipartisan talks. And Senate Majority Leader John Thune said that they worked through the weekend on ending the shutdown. But we are just getting breaking reports that Democratic leader Chuck Schumer has proposed a deal for Democrats to agree to pass a so-called clean resolution that would supply short-term funding if Republicans will agree to a separate one-year extension of existing enhanced tax credits meant to reduce the cost of health insurance, reportedly for the Affordable Care Act. Now, details still coming out about this. This is a breaking story, but we thought we might take a look at how the shutdown is affecting everyone right now. Of course, these FAA cancellations, humongous flights canceled across the nation, reductions at 40 high-traffic airports. We've got fatigue plaguing air traffic controllers, all of whom haven't been paid since October 1st. Just today, we're seeing a 4% reduction at those airports. It will be 6% by November 11th if the shutdown is still going at that point. Could be 10% if it continues through November 14th. So many people already being affected by this, but as I said, there is some breaking news.
It's a shame.
The Democratic leaders have offered a potential plan to Republicans to extend health care tax credits for 1 year, but that vote has not happened, and we do not have a time on that yet. But we will, of course, keep you posted if that changes. With that, I want to send it back over to Sam in New York.
Thanks so much for that, Marley. Let's turn our attention now to AvePoint. Shares are under pressure after its latest earnings report, which saw them topping estimates and raising sales guidance for the full year. So joining us now to discuss that report and the company is Jim Cassey, Chief Financial Officer at AvePoint. Thanks so much for your time, Jim. Happy Friday and congratulations on the report. Just give us a sense of what AvePoint does, how you fit into this entire AI ecosystem.
Great. Nice to see you, Sam, and thanks for having me. So AvePoint is really the global leader in data security, governance, and resilience. We really help enable our customers really safely take advantage and leverage AI. So that's kind of how we fit into the landscape and where we're headed with AI.
Okay. Total revenues for Q3 were $109.7 million, up 24% year over year, actually above the high end of your own guidance. So no doubt you were surprised there. What drove that?
Yeah, again, customer demand, key focus. We had a really strong performance for the quarter, both in revenue, in new customer additions, expansion with customers. So really good demand across the globe. We play in all three major segments of the globe: North America, EMEA, and APAC. All grew over 20% in terms of year-over-year growth. So we saw really good demand for kind of our governance and really data security products as, again, people look to enable AI, and I think that's where we can really help them.
Can you give us a sense of, some of your clients, or at least if you can't give any names, the sectors that you help?
Sure. I mean, the beauty of AvePoint is that our solutions are really helping customers across all industries. It used to be just highly regulated industries were concerned about data security, governance, compliance. But as I'm sure you're well aware, every company today is very concerned about data security, particularly as they look to adopt AI. So what was once a more highly regulated industry focus is now literally every industry, every company, large or small, that is, number one, has concerns about data security, but is also a potential customer for AvePoint. So it's great opportunity for us and great demand.
Okay, you're listed on the NASDAQ, but I also see that you've announced a listing on the Singapore Stock Exchange. When do you anticipate to do that, or have you already done that?
We actually, in Q3, we've had a long-standing relationship with Singapore. We first established a presence back in 2009, and more recently it's become our kind of Asia headquarters and also our international hub for R&D. So we've had this very strategic relationship with Singapore, and then it was just a natural extension to continue with our success on NASDAQ in terms of our listing back in 21, that we felt that this was a great opportunity to extend our global presence and continue to enhance our reputation and image in the region and list on SGX. We've often talked about, meeting customers where they are in their kind of digital journey and their transformation, getting to AI. And this was another way for us to meet our potential investors where they are. And so we're really excited about the opportunity. And so far, it's been a great partnership, and we're excited to be on the SGX as well as NASDAQ.
Yeah, I also have a relationship with the SGX. It's where I called home for the last 4 years of my career. So that's an interesting take. And so I just want to pick up on that as to what sort of demand you're seeing from some of these international markets, most notably out in Asia. What are you seeing over there versus what you're seeing, for instance, here?
Well, it's a great point. And APAC is actually our fastest growing region. So it's smaller than EMEA and smaller than North America, but it is our fastest growing. And we have pretty good diversity across all three of the regions, where North America still represents our largest piece at about 44%, EMEA is about 35%, and the balance is in APAC, which is, again, the fastest growing. So we see really a bright future, not only in regions like Japan, but obviously Singapore. Australia is a key market for us, and then even up-and-coming markets like South Korea. So there's great opportunity in all parts of the world, but in particular in APAC as well.
And what's next for your company? Have you got anything in the pipeline? Because you've got some interesting research that you have actually done yourself about how, in fact, some of these organizations are pulling back or at least delaying AI rollouts because of some of the governance concerns. I'm just wondering what you can do to sort of speak to that in particular.
Yeah, it's a great question, and appreciate the plug. We actually just recently published our annual survey, essentially on the state of AI, and there are lots of takeaways in that survey, a lot of statistics that are really important, but the one that probably resonated the most with me was that about 86% of those respondents, and there were about 775 respondents, and literally they were small companies, large companies, and all across the globe. But the consistent theme was that about 86% of them have delayed AI rollouts up to 12 months because of their concerns around data security and governance. And so obviously that plays right into our wheelhouse in terms of what we're helping customers really deal with. And it makes sense, right? That if you're going to have agents in particular combing through your data, that data needs to be secure, number one, and it needs to be properly governed so that the access to certain information is properly restricted and not accessible to anyone or any particular agent that may not need or should have access to that information.
All right, Jim, it's been an absolute pleasure. Thank you so much for joining us here on Schwab Network. Happy Friday, have a great weekend, and we'll talk to you next time. Jim Cathey, Chief Financial Officer at Point, joining me there. I'll send things back over to Marley in Chicago.
Thanks so much to Sam and Jim for that. Coming up next, we've got Options Corner. Rick Ducat will join us here in our Chicago studio to take a look at NVIDIA, as shares have now fallen almost 8% this week. That's next on Market on Close.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close. Shares of NVIDIA are down about 8% on the week as the rest of the overall market has lagged. Comments from CEO Jensen Huang earlier this week spooked investors when it was reported that he said China is going to win the AI race with the U.S. He later clarified his comment, saying that he thought that China has very good AI technology.
China's going to
Now,
win.
It's time for Options Corner. Of course, NVIDIA is the focus. Joining us, our lead market technician, Rick Ducat, here to take a look at NVIDIA, some of its recent performance, and some of the technicals here as well. You know, I was just mentioning it's under pressure along with the broader market this week. But as we look at NVIDIA, you know, against the market and also the semiconductor space, how is it stacking up?
Kind of in the middle of the road, the pack rather, I guess you could say. The semiconductor sector has been kind of the strongest of the strong for a while, but NVIDIA, which was once such a big outlier, has now kind of come back to earth a little bit here. You can see it's up a little less than 26% versus the SMH, which is up about 32%. If you were to look more specifically at the direct competitors to NVIDIA, Broadcom, AMD, Intel, Taiwan Semi, they're all doing better. They're up 44 to 88%. NVIDIA is down here 25%. The beleaguered Qualcomm is the only one who's kind of below at about 1.6% down on the year here. But, you know, it's been a not very good week for this whole space here. Another story that caught my eye, OpenAI CEO Sam Altman had to clarify that he didn't want government bailouts, basically, if things started to go poorly for OpenAI. And, you know, remember, too, Jensen Huang, you know, he's saying these things about the AI race. He also wants to export the chips to China. It's kind of a grain of salt type of thing to consider these comments with as well. If we were to look a little bit more specifically, though, at this chart, our candle chart here, we can see that our white trend line here has been fairly consistent for the past couple quarters here. That's about where we bounced here today in terms of our opening price. We did make some intraday lows beyond that, but rallying a little bit here as we conclude what's been a bit of a rough week here. Crucially, we did not test this 177 level, these old lows that we established here from a few weeks ago. We are holding on above 185 as well, which was the ceiling from this period. We since breached it, but recovered back above it here, still off significantly from those old highs near 212.19.
We're barely holding on to that 185 line right now, trading at 186.99, 98, moving around, right around there, but barely off that line. As we look at some of the trading action today in terms of the options activity around NVIDIA, knowing it's been a bit of a rough week in this space, you know, what's it looking like?
About as heavy as you can get in the stock market for options trading. At the time I checked, it was over 4.7 million contracts changing hands. Extraordinary numbers here. 65% or so were calls. Sizzle 2.0 at the time I checked, so heavier than the 5-day moving average. If we were to consider looking ahead, our November 21st expiration here, about 11.2% expected move plus or minus, so it's moved a little bit since I set this up here. But still, generally speaking, that's about where we would expect things to go based on the options market. Notice as well that that lower end lines up very closely with the 165 level here, a notable low point, a high point before our gap, and then another low point here. So that kind of stands out to the downside here. To the upside, 207, pretty close to the +1 standard deviation channel. So that gives us at least some rather larger extreme ranges to consider in the coming days here. for what's been a rather interesting week, to say the least.
It certainly has. As far as open interest goes with calls and puts, how are we seeing that weighted? It's been under pressure. So, I'm imagining we're seeing some put action maybe a bit more than normal.
For sure. I mean, the month of NVIDIA is much larger than the total open interest for all the dates of expirations possible for many other stocks.
Yeah,
here.
look at that girl's
What
arms.
stood out to me,
Well, that might be here.
on the call side and the put side, the 180
She got
strike
some
is the
muscles.
most active. So that seems to be one really important area based on that options market to consider here. You can also see, too, that we saw some pretty notable trading activity as well across the board here. But what really caught my eye was some very long-dated options. There was minus 29,836 January 21st, 2028, 300 calls they sold. These at a $23 credit here. A $68 million credit received for this opening trade. Really huge numbers.
That is a huge number, and their earnings will be inside of that window. So a very interesting trade there. Thanks to Rick Ducat, our lead market technician, for joining us for Options Quarter to highlight NVIDIA today. I do want to send it back to Sam, though, and find out who we'll be talking about for overlooked stocks.
Thanks, Marley. Well, Alex Coffey has his eye on JFrog today, heading into the close as shares have rallied to more than 4-year high. He'll break down the news and what you need to know about JFrog coming up next on Market Close.
Coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I did. I had a phone call today. Double top, SPX.
I'm Jenny Horn. We go beyond
Oh, I'm
the
Jenny
headlines,
Horny.
tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
She'd get mad if she knew I said that about her.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell.
Hello, I'm Jenny Horn. I found Mr. Kevin Green on my stock twits. Twitter, I mean. George! We had 3 white soldiers here on Google. This is on the weekly time frame, so I wouldn't be surprised if this thing pulled back to 264 and be a strong buy, because that'd be a gap on that weekly. If that did, so I'm gonna put a trend line there. Get that out of the way. Put an alert right above it, just in case. They were really hyping this thing up last couple weeks. This is a weekly time frame. They've been hyping it up for a bit, but I think it might be just a little overextended. I'm thinking we're going to get some government news this weekend, but I really don't want them to cave on this subsidy. I don't want them to cave at all. I wouldn't mind if the deal got done and the government didn't get closed. I don't think it'd bother me as much. If I was in charge of the Democratic Party, I would have never closed the government. I would have kept it open and made a deal. I would have made a deal. I mean, yeah, I think today would have been the day to go long on this one. We had an inverse head and shoulders right here. Yeah, today would have been the day. Maybe. Well, that kind of sucks. I'm just going to set an alert right there. That's only like $3 down. But yeah, I think that would have been the spot today. That would have been a good trade today, Google. It would have been paid off much, but that'd been a good spot to get in there and run it up 40, 50 bucks. Oh yeah. It'd have been a good, well, I don't, yeah. That'd have been a good trade. I'd probably took that 275. And that'd be up a couple 100% and sold it, or sold it at least 100. These ain't that expensive. But you go into next week, they're not that bad at all. Next week's not that bad either. It's 20,000 contracts at 290. Yeah, I think I'd have bought them even. No, I don't know, but 20,000 contracts. Well, that looks tempting. I've been looking at some of these, man. I think like today would have been a good day for this one. 5-day Tesla. Target. Let's see where Target is. Target would be a good Christmas stock. There's Tesla there. Yeah, Target would have been a good one today or yesterday. Inverse head and shoulders. But you wouldn't be able to get in it, and you could have got in it today at open. Right at the shoulder line, close to it, a little above it. Tesla had the week low. Now, so you heard the news today. Elon's going to get his pay package, and everybody's all frizzied up about it. Is it a bribe? Sorgensen was on it this morning, comparing him to the. I don't know if it might have been Apple or Bezos pay package. They just don't like Elon. I don't understand why not. I understand why, but because he doesn't, for one, he doesn't lie like all the other CEOs do. It would be nice for them, if they're going to pick on somebody's pay, they need to pick on all of them, because they all make an ungodly amount of money. And they're really like the dude from 90 Million, the dude that's Starbucks, failed company. Bob Iger from Disney, ain't done nothing to that stock. I didn't look at Disney this week. I mean, if they're going to pick on them, they ought to just go on after all of them, not pick and choose winners. Yeah, Starbucks hit my support this week. 109.41 yesterday. Disney did. Nike. I think I tried Nike last year and didn't do too well with it. into Christmas. I always thought it would have been a good Christmas play, but not. We got Black Friday coming up. Shares of retail footwear stocks are trading higher on the Supreme Court hears arguments over President Trump's tariffs. We got a triple top on SPX into close. 5 minutes left. Oh, here's a new commercial.
Level up and invest smarter with Schwab.
Morning mover.
Schwab. Jimmy called out Baba this morning. Baba, double bottom, falling wedge, triple top breakout, pull back. This is a pretty play right here. Didn't break the 200, didn't break the 200, didn't break the 200, broke the 200. Came back and retested the resistance line. Perfect. I mean, retested, 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 retested. Boom. Fallen wedge with an inverted head and shoulders. Setups look pretty good today. Bobby. What's IBIT doing? Oh. Crypto. Bitcoin. What's Irene doing? Irene had a double bottom today. I need to write that one on paper. Damn, Meta's already up $1. This is a good option call right here. This Meta. All right, well, let's go over the indices real fast before I call it a day. Today was a great comeback, that's for sure. So I'm going to put these all on the 5-day, 5-minute. We had the biggest pullback today, another one. We had a double top. Then it came back and sold off. Called this one out first thing this morning. Closed at 241 with a double top, almost triple top. QQQ, that's the IWM. These comebacks will come back fast. Now, if there's a deal made this weekend, we're going to have a real good week next week. Here's the QQQ, 5-day, 5-minute. Lowest day was today. Run up and hit the 200, so that was in play. Spot, that was IWM. This is a SPY. Five-day, 5-minute. It went way below my support level. I had a low support of 66668, and it's bounced back up to that low support channel and almost broke it into close. So that was a strong buy this morning on the reversal. How do you find the reversals? I'm going to show you the easiest way right now. And all you got to do is remember this. It's called snake, breakout, pullback, boom. So you get your snake. Draw it in. So you got your snake. If you can count to 4, it breaks out, breaks past the 200, runs up, had a little pullback here and hit the 200, and then we came back and hit the 200 here, EMA. So that would have been a good entry for you right there. Snake, breakout, pullback. There's also a fallen wedge. So if you'd have caught that fallen wedge, and even when it broke out of the pivot point inside the snake, it pulled back and respected that previous resistance. So that would have been a good spot to take the trade. And you want to see what kind of candle that is. And that was a hammer with an engulfing candle with a tweezer bottom. And then that was respected, 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 and that was respected. Why I say respected? That means the body respected the previous close. The body respected the previous close. The body respected the previous close. The body respected the tweezer bottom. And then once it just stayed above the 9 and the 21 all the way up until we had the end of the day flush. And still we came out with new highs. And the SPX, just a constant sell-off on the APX all week. SPX. And then today I called this trade out at the bottom. Same thing. Broke out on number 4, and I'm using the /ES. Once it broke that VWAP, we came back and retested, and then boom. So the VWAP was a resistance level. Okay, well, I hope everybody has a great weekend. If I decide to watch the video, be sure to watch it. At least hit the like button. And I'm going to get out of here and watch a few videos and take a little nap. I'm kind of just here. I got work to do tomorrow, and I want to go check to see what these guys done on the building. These guys work. They're real nice and polite. I'm very thankful that they got work to do and just doing a real good job. I'm really impressed. I mean, usually construction workers, if you're white, you look like a crackhead. But these guys had an older man with a younger guy and a woman. And she didn't speak very good English, so I didn't say much to her, but Noel, I talked to him for a bit. He's a younger guy. And then the older guy I asked him the other day, I said, how'd they find you? And he said, $4,000 to $6,000. That's not what I asked. I didn't tell him that. I asked him again, $4,000 to $6,000. I said, okay. And I think that's well worth it. Spend all week long painting the building. They probably got, I don't know, maybe $600 or $700 in supplies, is my guess. He'll put $2,000 in his pocket and give the other ones whatever they deserve. Probably $100 a day, $120. I've had a hell of a time trying to find help in my business. I mean, so I just give up. I said, I'll just make it to where I just do my own and not have to worry about paying taxes and on extra help. I've tried. I took this one homeless guy out one time. I mean, he was a friend. I knew who he was. He was an acquaintance, but he was just kind of not there. But he wasn't. He didn't want to work. He couldn't keep a job. But he was a good guy. And I told him I'd give him $20 a job, and we'd probably get done with the job every 1 hour, and I got 7 to do. That's what I told him. So I fed him. I got him stoned, and then we did the jobs, and I went to hand him his money, $140, and he looked at me and said, well, that's not enough. I said, what? I said, I fed you twice. I got you high. I bought you sodas, and I give you $140. I promised you $20 a job. And he got a little snooty about it. I said, fuck you. I didn't hire him. So he comes up, Jim, can I work for you? And I said, no. No. I'd rather do it by myself. I could have done it by myself then and saved probably $160, $180, but I didn't do it. I knew you needed some money, and I helped you out, but you whined and complained at the end of the day when we made a deal. And we only worked like 7, 8 hours. You made $140. Cash free, tax free. I got to pay the taxes on that $140. So I'm in the hole every bit of $200. Took most of my pay that day just to have him come and help. I made a lot less than he did. So I did the math when I got home, and I said, shit, I made half of what he made. I said, I ain't doing this no more. Not the way, he didn't and he had an easy job. All he had to do was mop. I had to do all the hard work. Then I had a girl work for me when I had my picture frame shop, and the bank calls me up and says, Jim, we got 3 checks here that's been cashed. In the back of your checkbook, that about $1,500. And I said, what? I said, they ain't mine. She went to the grocery store and cashed one for $600. I don't know what she done. I can't remember quite, but I remember that $600 at the grocery store. And the bank paid me back. I don't know how they can do that, but they did. They took the hit. And I found out that she just got out of prison, and she told me she wanted to have sex with me if I dropped the charges. I said no. So I'm not gonna do either. I'm not gonna press charges on you, nor am I gonna have sex with you. Just try not to, make this a learning lesson. Try not to do it again. Then I had this guy I hired, and we have these alarm systems on the buildings. So I was at a bluegrass festival for 10 days. I had to play in a band, and so we played music for 10 days straight. And I got to the festival, and I get a phone call from the police. We have a guy here that says he's working for you, and he couldn't get the alarm set. I said, what do you mean he couldn't set the alarm? I showed him every single day for 5 days how to set the alarm, how to turn it off. And the manager of the business came out. There was a big uproar, and I drove all the way. I drove 3 hours back just to smooth things over. Then I had to go back, and I fired his ass. And I worked with him for a bit. And he was a nosy buddy. I mean, he had a big nose. I mean, he just wanted to stick his nose everywhere where it didn't belong. And you don't do that when you own a janitorial business. You just don't even look at nobody's desk. You wipe it off. You don't read nothing. You don't. And he had experience, and I figured I'd give him a shot, but. So then I let my girlfriend help me one night, and she ended up breaking this picture, and I had to pay for that. And I said, I'm just tired of this. So I decided if anything breaks or I break, it's my fault. It's no one else's. Because I'd hate to lose an account over someone else when I'd rather it be me that loses it. So I'm going to do a watch list. I'm going to look for some good trades this coming week. Remember, I said get your watch list going. Work this weekend. Gather about 10 of your favorite stocks. And we're going to play a little game next week. I'll have my list, and I'm going to show you that I can make a trade on any one of these 10 all next week, every single day, maybe 2 or 3 times in that week period. I could do it with 5. I think I could do it with 3. I've done it with 5. I did it for a whole week long. And they were just the same, the Magnificent 7. So they're saying we're in a bubble. I think they just wanted this market to pull back so they could jump in it and make a ton of money. I don't think we're in a bubble, but some of these stocks have run, you know, like the Meta. I was sitting here looking at Meta. Now this is a gap play. I had someone ask me about a gap play video. I did a video on a gap trade on the SPX, and here's one here on the Meta. So I took an option on this one here, but I had a bottom support of 606.64, and we went below that to about 601. And there's your gap right in here. So sometimes they just stop at the gap like it did right here, or like it did right here, like it did right here, and this time it went below it, but it popped up the next day, respected that gap. And then this week, today, yesterday and today, we dove down in that gap. And that was a good strong buy right there to take that trade right at 606.64 in that gap. You don't see any other gaps in. There's one right here. It's a downward gap and an upward gap. So the next one would have been right in here. If that didn't hold. And we're below the 200, and this is on the daily, so that's a bearish sign. You want to read the news and see if there's anything bad in the news. I just saw something about they made a lot of their profit on some scam, but that's a huge drop. And it was off of earnings. It gapped right down to that 200. So this, to me, that was a good strong buy right there. See what happened? That's 606.64. You had an inverse head and shoulders down here at the bottom, and you're still moving up after hours. This ain't going to be worth some money when I come in Monday. And I got it for 2 months. This thing could be back to $700. I might sell it for 100%. Meta is accelerating growth, but not capturing perceived value, whatever that means. Magnificent Seven wiped out over 1 trillion this week. Is AI bursting? Okay, well, everybody have a good week. I'm going to say thanks all. We'll catch you. Keep your eyes open for the update video. Make a comment. Let me know you're watching.